Recording in progress.
Chairperson. Okay.
Am I audible now?
We can hear you, Chairperson. Thank you.
Greetings, honorable members. I thought I was early today with a few of us that were on the platform, and the system threw me out, so it's been difficult to get back. Apologies for the late start. The intention was to already start on time. But let me not waste any more minutes. Maybe just to deal firstly with the formalities before official open. Just a reminder, honorable members and all participants that are on this platform, that the rules of the National Assembly as relates to virtual meetings to apply. We are reminded that at all times we keep our microphones muted and our video cameras off. And we are recognized by the chairperson. In that case, you would then unmute your mic once recognized by the chairperson, as well as switch on your video camera. Of course, if you are experiencing network or connectivity challenges, you would indicate that to the chairperson as you take platform for permission to switch your video camera off so as to maximize your bandwidth. In situations where we may have those members or participants who lose connectivity and may need to reconnect to the meeting, please ensure at all times as you reconnect to the platform that your video camera is switched off as well as your mic is muted, as my microphones are sensitive and could pick up sounds, background sounds that may distract a speaker that may be on the platform. In terms of point of orders, the rules would also apply that you would not unmute your mic on a point of order until you are recognized by the chairperson. In this case, once the chair recognizes you, you will then unmute your mic, able to raise the point of order on which the chairperson can rule upon in terms of the rules. We are guided members that we do not raise unnecessary point of orders to a point in the meeting on this platform. All these are just to remind ourselves as a way of ensuring that our meetings proceed without problems. Of course, it's a reminder because these rules have been applied to all our meetings, but also to help those that are invited to be on the platform to also obey the rules for the sitting. I will therefore, without further ado, check with the committee support for purposes of record so as to know whether we have a quorum to proceed, and therefore look at the apologies that have been received for purposes of record. Committee support.
Morning, Chairperson. We do have a quorum, Chair. And just in terms of apologies, Chairperson, we have an apology for the Minister in the Presidency, as well as the Deputy Minister in the Presidency, Ms. Kana. I've also just received a notice that the Deputy Minister in the Presidency, Ms. Korea, has confirmed attendance, but she just has difficulty connecting, Chairperson. And then in respect of DCDT, we have the Deputy Minister with us, but the Deputy Minister has just requested that he be excused from 11 o'clock, Chairperson. Thank you. He will return for a few hours after that, back to the committee that's still in session. Thank you.
Okay, thank you. Thank you, Adra. Those are the apologies received. Would indeed monitor when the Deputy Minister is able to connect my side. Honorable Kolabanat, on apologies. Honorable Kolabanat, I see your hand on apologies. You've muted your mic.
I beg your pardon. I would like to just say something before we begin. Would it be appropriate to say it now, or shall I wait?
No, we are dealing with apologies.
Okay, I'll wait. Thank you.
Record. Thank you. So if no further apology, it's fine. I'm not sure the point you wanted to raise before I officially open the meeting.
Yes, may I go ahead?
Yes, I want to hear what the point is.
Yeah, I just want to, you know, I've been in many committees in Parliament, and I would like to just put it on record, my disquiet that, number one, that we're dealing with all of these entities in a single meeting. I feel, you know, some of them should have had at least a half day, if not a full day, assigned just to them. But secondly, we're working off a document that is drawn up by a department we do oversight over. Now that to me is like allowing a matriculant to write their own matric paper, and comparing what has been given to us frequently to what the Auditor-General has actually determined. There's a lot of cherry picking that's gone on. So I think perhaps the committee in future needs to meet and revisit how this oversight is done. Thank you.
No, thank you, Honorable Kolabanat. I take note of what you are raising, and I know that you'd have raised this point, and I've tried to clarify, and I'll give that clarity again, that we also have the time allocated for this process. And secondly, is that we have, as the committee before, had an engagement on the matter, that we do have entity oversight in the department which actively engages with the entities. We get to come as the committee, as we do oversight, quite late. So as you do the oversight, not just on the entities, but the effectiveness of the department itself in playing the role that it's supposed to play. So we do that at once. But of course, in the presentations that we get, we do isolate those entities that need special attention, and in programming, that's then when we deal with that, we bring those back. So there would be examples where we had challenges with the SABC, would allocate specifically a meeting with the SABC to have enough time to cover the ground. We did the same with SAPO. We did the same with USAASA when there were also public outcry about what's happening there, including giving the chance to civil society organizations who wanted to make on that matter. So we are balancing both, yes, the time allocated for the BRRR, but as well as informing our program to go back to those entities that need special attention, given the number of entities that we have. And I'm sure you will then understand that with the numbers that we have, if each entity was to present for a day, that's almost half of what the month would look like without doing anything else but sitting in such sessions. So we'd rather prioritize those that we need them to come back. And I'm sure by the end of the meeting, we'll have a sense of which areas of focus would need to look at, and therefore address our program accordingly to bring them back. The SABC, for example, would, whilst we have this principal R process, still come back to us later to present specifically on a matter of a turnaround strategy, the progress that has been made, separate from just a report of the Auditor-General. However, as I said, your concerns are noted, and I think they are raised to improve the work of the committee more than anything else. So I appreciate that. So with that having been said, honorable members, as we open the meeting officially, greetings to everyone else who's here, leaders from the department, is led by Deputy Minister, confirmed, DM Mapulani. We also, of course, would expect GCIS and their entities to be led by the Deputy Minister, DM Swear, who is supposed to be joining us anytime. But more importantly, we also have a delegation from the busiest unit of the Auditor-General of South Africa, Mr. Andres Geto, who's leading the team, and I'm sure would be able to indicate at the time that they come in, who is in their team and the role thereof. Of course, given the nature of the presentation and the fact that members would have had an opportunity of going through it, would have had a difficult discussion with them through the committee support to try and reduce the time to an hour. And then we take questions of clarity if there are questions and comments, and then release them in that way. And thereafter would be able to assess if the Deputy Minister is here from GCIS and go according to the agenda. But of course, if there are changes, would deal with that at that time. But for now, I would really want to welcome you all who have come to appear in the committee, but as well as South Africans who always follow the deliberations of this committee from different platforms that they are able to access deliberations of the committee. So it's important to always appreciate that they take interest in looking at those that are standing on their behalf in Parliament, prosecuting the work expected of them. Of course, the civil society structures that are consistently on our platforms to also use other tools to monitor the effectiveness of each one of us in contributing to deliberations and shaping the recommendations that better the lives of our people. So with that, we are officially open. We'll now get straight to the agenda where we get the AGSA. I'm sure they should be ready to get in. Is it Mr. Andres or whoever is now delegated? But I got that confirmation that it was him leading the delegation. Okay, but I see Ms. Lubambo is already on the platform there to take us through. I'm sure you'd be able to introduce the other members too. Please feel welcomed, and that's your your hour that starts now. And as I said, I know it's difficult to get it to an hour, everything else, but yeah, given that members have gone through it, surely the points to emphasize. Over to you. Thank you.
Thank you so much, Honorable Chairperson, and good morning to the honorable members and the deputy ministers that are at the call. Mr. Andries is here, Chairperson, you're correct. Andries was supposed to lead the delegation today, but you'll understand that there's just too many engagements that we have. So he will step off after the introduction just to support another committee, and I'll stay here with the team. So we are with them, and if you could just maybe show face as I introduce you. So I'll start by introducing the members that I'm with, Chairperson. So I'm Sibongile Lubamba, as I said. I'm the head of portfolio that oversees National D, that is looking after this portfolio, and other two nationals at head office. Mr. Andries Segeto, that leads the business unit, is here. So they that he'll step off. And then we are with Joyce Nkonyana, who's the senior manager that is dealing largely with the post office and post bank and the entities underneath it, and he will be leading us through the presentation. We also have Suret Thaliat that would have audited the department itself and other entities within the department. We are joined by Novlin, that is a manager that would have been part of the CETA audit, and I think they would then assist us, Chairperson, if there are specific questions to those portfolios. So I do have an hour, so I'm hoping that I won't take a lot of time, Chairperson. But we appreciate the platform you've given us to take you through the audit outcomes. As you've said that the presentation has been circulated. We'll take you through the outcomes, and really what we would like to achieve in this session is to empower you with the insights that we've gathered during the audit, so that when you engage with the department, you would also have our insights to incorporate to the information that you already have. There is one request, Honorable Chairperson, that I'd like to make before we go into the presentation, and I'm hoping that you would grant us that request. The presentation that has been circulated to the members and the discussion we've had with yourself, Honorable Chairperson, with Andries last week, we'd included in the presentation the post-bank audit outcomes. We've also included the Broadband and Infraco as well as part of that analysis we've done, and we've shared that to the honorable members. And we understand that those reports have not been tabled, and the Minister has written to Parliament asking to be given more time to table those reports. When we then engage with the Minister in September, we will have the understanding that she's comfortable with us presenting the audit outcomes of Postbank, even though they have not been tabled. So we engaged yesterday, and she requested that we allow her space to table the reports first before we can engage on them publicly. So we're comfortable that the members have access to that information because the members of Parliament are entitled to it. But we're requesting that we don't, as AGSA, publicly deal with the audit outcomes of Postbank and the BBI before they have been tabled. So I think that's the request, Honorable Chairperson, that I'd like to table for yourself and the members before the team can take us through the presentation. And I'm hoping that with your support, we can make that change, Honorable Chair.
Not fine with that. You can then proceed with the others that have been tabled. We have had that situation before where we had to withdraw on the basis that the report has not been tabled and there have been matters that needed to be looked at. You can proceed. Thank you.
Okay, thank you so much, Chairperson. You can go ahead with the presentation. Thank you.
You just have to unmute yourself.
Honorable Chair, honorable members, good morning once again. My name is Andries Segeto from the Office of the AG. As alluded to earlier, I'm the head of the unit that takes care of, amongst others, the comms and the digital technologies portfolio. Yes, Honourable Chair, I do share the concerns noted by the honourable members as well. It is quite a weighted portfolio, and Honourable Chair, to that extent, you'll also notice that the presentation would also be quite a bit of a weighty one. So we'll try and focus, with your permission and indulgence, on all the salient issues and try to cover as much as possible of the detail that we can, but also just making sure that we are mindful of the time. And then what the exclusion of the other institutions also allow us as a benefit, as an added on benefit, is that at least by the time it's tabled, that the committee will then have the opportunity to then engage on those particular entities or institutions, and therefore make sure that they also receive the necessary attention in terms of the oversight structures processes. So, Honourable Chair, honourable members, we'll start off with our presentation slide on the vision and mission of the mission and vision of the organization. So, as the Office of the AG, we really would like to ensure that our efforts, as enshrined in our constitutional mandate, being the supreme audit institution, that we strengthen our country's democracy by enabling oversight, accountability, and governance in the public sector through the work that we do, and ultimately building public confidence. And Honourable Chair, honourable members, I'll expand a little bit more on this when we go to the next slide. So, to that effect, as the Office of the AG, we also embarked on what we call, an update to our own strategy. That being our strategic intent, our document that drives us and sets forth what we try and achieve as an organization. And part of a key driver of that particular process is what we call the accountability ecosystem. So essentially what it means is there are a bunch of role players and people who are assigned different responsibilities at various levels throughout the eco chain or the ecosystem. And all of these role players have got a particular role to play. But ultimately, if you look at the screen, Honourable Chair, honourable members, you'll then see that it ultimately culminates into all our efforts as a particular portfolio should translate into some visible impact on the citizens, which is what the slideshow tries to depict. If you look at it, it goes down to the citizens right at the bottom of the middle of the screen. So if we start off on the left-hand side, Honourable Chair, honourable members, you'll see it starts off with the portfolio leadership. So these are the colleagues that are responsible for the day-to-day implementation of activities, officials that must go and implement the mandate and the objectives of the institutions out there with the aim of then achieving the strategic intent. And all these officials must make sure that as they execute their day-to-day activities, they make sure that they assign the necessary due care and make sure that they also make sure that they comply with the relevant requirements in terms of the legislation and within the confines of the law. On the next level, on the left-hand side, Honourable Chair, honourable members, you'll see we've got the senior management team. So these are our colleagues or the role players in the ecosystem who must then supervise the efforts of the officials, making sure that they stay on track or make sure the officials stay on track as they execute their day-to-day activities, give them the necessary support, make sure that the officials are staying within the confines of the legislation, the confines of the policies and the procedures that would govern a particular portfolio or institution as they try and make sure that the portfolio then moves forward in terms of achieving strategic intent. Then, Honourable Chair, honourable members, you'll see you've got a lonely figure there that's sort of halfway up on the top. That's actually got one hand going forward and one hand in the back. That's the accounting officer or the accounting authority, the board, who is the missing link between the senior management and the officials in the department, and then the executive authorities being the ministers, making sure that they keep the institutions afloat by making sure that the senior management and the officials are implementing the overall strategic intent. They must provide a strategic leadership, ultimately responsible for the achievement of their respective portfolios and departments that they would be responsible for, and also making sure that they implement the strategic intent and the policy that would have then been set under the guidance of the executive authority. The accounting officers are then supported by those charged with governance, being your internal audit structures, as well as your audit committee structures. So these are governance structures that then make sure that as the accounting officer tries to steer this big ship that they are assigned with in terms of their responsibility, that they also support the accounting officers in achieving his or her portfolio, taking them forward in terms of the strategic intent. And obviously we have the executive authority, the ministers providing the political leadership and the strategic intent. But on the left-hand side, critically, all of these role players are in the space where we are dealing specifically with the implementation aspect of the ecosystem. On the right-hand side, Honorable Chair and Honorable Members, you'll see that we now have our other role players being those that are charged with assisting us by providing support and oversight and leadership, including some of our coordinating departments like your respective treasuries, public service administration, assisting us in the public sector in terms of the human capital aspects of it, the Department of Planning and Monitoring and Evaluation, assisting us in terms of our strategic planning as government, etc. And then ultimately, on the farthest right-hand side, we've got our portfolio committees and SCOPA being our oversight structures that must then hold all of these portfolio members or role players accountable as they come on an annual basis, Honorable Chair, Honorable Members, to come and make certain commitments and ask for certain funds or support in terms of legislation so that they can go and implement the strategic intent and drive the strategic intent and vision of the country to make sure that ultimately they then positively influence the lives of the citizens on the ground. At the center of it all, Honorable Chair, Honorable Members, you'll see the Office of the AG, where we say we also have a role to play in terms of this accountability ecosystem, where through our efforts, we then seek to give our respective role players key insights through the work that we do by focusing on the right things, making sure that our work is relevant, is timely, and then giving the role players the insight so that they can utilize the insight to then make sure that they drive the desired impact. Ultimately, we hope then that all our efforts influence the respective stakeholders so that we can then drive the influence and the impact that we seek on the ground. Honorable Chair, Honorable Members, if that doesn't happen, the Office of the AG also has a couple of tools available to it, like the amendments to the Public Audit Act, where if we then are not seeing the necessary traction or progress in the right direction, we then move over to enforcement through the material irregularity processes or various other reporting processes such as referrals, etc., to make sure that we then see the shift in culture that we want to see, which should ultimately spur our role players and the relevant institutions on to do the right thing and for the right reason at the right time so that it ultimately benefits the citizens on the ground. You'll also notice, Honorable Chair, Honorable Members, that it is in the shape of a continuum, meaning that once you find yourself on the enforcement side, does not mean that it's a linear process that you remain there. It's always, once you've course corrected, possible to go back to the left-hand side where now we'll deal differently with you in terms of providing you the insights rather than being a little bit more hard-handed, if I can call it that for a lack of a better phrase. Honorable Chair, Honorable Members, I'm going to move over to the next slide now. This one I won't spend a lot of time on. So we just took our officers, standard slide, and we tried to depict the various role players in the comms accountability ecosystem. But at the high level, it was more aimed at just unpacking the various role players, and then also trying to give a sense of the role players in the key program that we had selected or key project that we had selected that we felt is the one that speaks mostly to the citizens on the ground and their lived reality from a comms point of view. So we've got all the various institutions from the broadcasting and digital institutions on the left-hand side to the postal services and banking institutions on the right-hand side. The narrative only explains and narrates what the respective institutions do in terms of the strategic documents. So that would be quite, the portfolio committee would be quite well versed with that. At the center of it all, we then have the executive authority supported by the accounting officer trying to make sure that we then they are leading the charge of the portfolio as it then progresses towards ensuring that the country moves towards digital transformation and is obviously trying to make sure that we also benefit of some spin-offs of the digital transformation lead in terms of economic growth and enabling policy and regulatory environment and then making sure that they play the respective oversight, all of which should then benefit the citizens. And obviously the program that we've selected is the switch from the analog to the digital, which we'll give a little bit more detail on as we then progress with the presentation. Then, Honorable Chair, we are going to jump to a synopsis or high-level overview of the audit outcomes of the portfolio for the current year under review. So the presentation also sort of has an underlying message in it, Honorable Chair, Honorable Members. You'll see we were quite deliberate in indicating on the top line the first year of administration. So we'd like to give our oversight structures and all the relevant role plays in the accountability ecosystem with the opportunity to also reflect on what progress the portfolio has made since the first year of this current administration. So the 17-18 is the benchmark year, and obviously the subsequent year would be the first year of the administration, but the 17-18 would be the baseline year, if I can call it that, where we started off when this current administration then came into effect. So you'll see, unfortunately, you'll see a bit of a regression overall, having had 5 institutions that have regressed in terms of their overall audit outcomes, but 2 of them has improved. But I think the underlying problem here, or the message, is that we've had more regressions than improvements. We'll share a little bit more detail as we progress. And then, like we mentioned earlier, Honorable Chair, the annual reports of 2 of our institutions have unfortunately not been tabled yet, and the department and the officials supported by the minister will then come and provide context as to the processes with regard to the tabling. But we note them on the right hand side, where you see the blue blocks. That would be the post bank and the BBI. So the movements that we are depicting on the left hand side do not account for the post bank and the BBI, at least the BBI for the current financial year. I want to then go over to the next 2 slides, Honorable Chair. Just quickly, just give continue with the synopsis of the high level overall audit outcomes. The team members, Surette and Joyce, will share a little bit more detail as they then take over the presentation with your permission and indulgence, Honorable Chairperson. But the picture you can see, Honorable Chair, from the 17-18 financial year, 18-19, all the way to the 2021-22 financial year, you see more purple, less green, less yellow, and a little bit more red and a bit more blue in terms of the outstanding audits. And unfortunately, that then indicates a regression as we reflect on the outcomes of the portfolio over the course of the current administration. So, Honorable Chair, Honorable Members, some of the key movements I'll maybe touch on the most notable ones was when we started in 17-18, the SABC had received a disclaimer of audit outcome, and then in 18-19 they were successfully moving it to a qualification. It's still not ideal, but at least they moved from being disclaimed. They've unfortunately remained in a qualified audit outcome. The past 2 to 3 years, Honorable Chair, Honorable Members, has been mainly as a result of the opening balances on irregular expenditure. So what does that mean? That means that insofar as the balance they have disclosed that relates to the irregular expenditure, there's still some work that was required for them to finalize and undertake and finalize, insofar as it related to completely disclosing those balances and then making sure that those balances have got proper adequate supporting documentation so that it then can facilitate and assist management to implement their consequence management processes. Members would know, as you are well aware, once you were not able to successfully prevent incurring fruitless and wasteful or irregular expenditure, entities and institutions are then required to at least completely disclose it. And once you've completely disclosed it, then to also do the follow-ups in terms of your investigation so that you then can engage in the process of condonation. So whilst those processes are still not finalized, it therefore means that consequence management is also not moving at the pace maybe that would have been ideal, or at the condonation process in terms of dealing with the balances, which are in a couple of billions that should really be addressed. That's the key issue that the SABC has been grappling with, but there is being progress that's made by management in this regard. We were committed, or management committed to us, that they would be finalizing their processes quite soon. So when we then go back in terms of our interim audit, that we will then be finished with the finalized process so we can do an early engagement and hopefully advise them on their efforts and whether those efforts have been successful in finally addressing this particular component that's still resulting in the qualification. That would be the key message. Insofar as the audit outcomes is concerned, the team will still elaborate a little bit further in terms of the SABC and the turnaround plan. I'm also happy to hear that the committee will continue to focus its efforts also on unpacking the rigor and the veracity of the turnaround plans. Honorable Chair, honorable members would note that these institutions of ours come to the portfolio committees and they will then submit the turnaround plans on making certain commitments. And then obviously certain funds were advanced to some of these institutions. This would include the post office and the SABC. About 2 or 3, 4 years ago, I remember we had assigned just over 3 billion for each one of these respective entities. And we are talking turnaround plan again. And again, if you look at the financial health position of both institutions, even though the one being the SABC, we didn't raise a audit modification in this regard, we did raise an emphasis of matter where we noted some concerns going forward that if the current ratios and the current operational indicators persist and continue, they might run into financial problems going forward. Having mentioned the financial problems, I'll also delve into the post office presentation, Honorable Chair. So from a SAPO point of view, unfortunately, that has remained at the disclaimer level over a number of years. So the unfortunate part with the SAPO outcomes, Honorable Chair, is that they're also primarily informed by the going concern issue as a result of the financial difficulties that they are facing. As soon as you start talking going concern, Honorable Chair, honorable members, the situation is so material and so pervasive that as the Office of the Auditor-General, we then can therefore not confirm nor dispel whether the institution would remain as a going concern for the foreseeable future based on the assessment and the unfavorable indicators that would then persist in the environment. Unfortunately, what that then also does, Honorable Chair, honorable members, is that you then find yourself in a position where, for example, you can't go and acquire skills. Now that you can't get skills or capacity, you then run into capacity problems and you then have to deal with certain of your operational issues, including, least but not last, also including the preparation of proper quality financial statements in this regard. So that would be it. So post office, if you look at it on paper, there was a reduction in the number of the significant matters that we had noted in the environment. However, the outcome was still the same in it being disclaimed. I think they moved from about 18 significant matters to about 13 matters. So efforts are acknowledged in this regard. However, the efforts were not sufficient to at least progress and get them out of the disclaimer outcome. Again, just to give context in terms of some of the challenges would be they are required to do certain disclosures by the financial reporting frameworks. And some of those would, for example, require them to go do assessments of all the properties that they would have leased in order so that they can properly account for the liabilities and some of the future work that they would be required to do when these leases then come to an end. And if you don't have the funds or due to a lack of funding, they were therefore not able to go to all these properties as required by the financial reporting framework and the standards. And therefore, you end up with a qualification on an area where you covered a part of it, but the standard requires you to go and assess all your properties that you are responsible for. And obviously then the reasons that were advanced is that they couldn't do the full spectrum of the assessment due to certain limitations in terms of funding. But the team will also elaborate a little bit further when they get to that particular aspect. Then, Honorable Chair, on this particular slide, I'm going to conclude by commending the colleagues in FPB for having achieved the clean audit outcome. I think by now the members are quite well versed or familiar with the clean audit concept and what it means. So from our point of view, at least, we are happy that they were able to from a financial point of view, account for all their financial matters in a complete, reliable and accurate manner. They were also able to observe key legislation as and when they were executing their activities. So in other words, key legislation, we don't, I know there's a whole bunch of legislation that our institutions are required to comply with, but we looked at key legislation, of which one of the critical ones would be your procurement legislation, your SCM legislation. So we commend them for having observed at least the key legislation that we assessed. And then we also commend them in the third spectrum, or the third aspect that's required for a clean audit, that they were able to report credibly, reliably, and accurately in terms of their reported performance information. Again, it is whatever they have reported, we then assessed in terms of their performance report, and we did not find any material problems in that regard. So we do commend them, and we hope that from a portfolio point of view, that they can take their financial management and performance management disciplines that they have implemented in their particular institution and replicate them for the entire portfolio. We are aware that the portfolio is having conversations around having some form of CFO forum, given the number of institutions that operate within this particular portfolio. So it would be good if they could then utilize that platform as a basis to then share what they were able to do right in terms of sharing best practices. I did speak about the BBI and the Postbank that have not submitted the annual reports in this regard, but we will engage a little bit further once those reports have then been tabled. I am happy, like Sibongile mentioned, that the information has been shared with the portfolio committee, so the portfolio committee can then prepare for when we then meet and have a detailed discussion around those particular institutions. Then, Honorable Chair, I'll quickly jump. There are two other institutions that I would like to highlight before I hand over back to my colleagues. The one is USAF and USAASA. And the reason why we would like to highlight them specifically is they are also critically involved in the rollout of the BDM project and the STBs, the set-up top boxes with a switch from analog to digital. So in this regard, the one institution which is a little bit more involved would be USAF. So USAF, unfortunately, for the second consecutive year, got a disclaimer of audit outcomes, whereby we looked at the financial statements in a number of material balances. We could not obtain the necessary supporting evidence. And if you look at those balances, Honorable Chair, honorable members, are unfortunately those balances that relate to the rollout of the STBs. So the inventory balances, where we couldn't get the appropriate listings and schedules so that we were able to confirm the inventory balances at year end. We also didn't receive a proper comfort or supporting evidence with regard to some of the goods and services balances. So in other words, how much they've paid their contractors in terms of the work that the contractors would have then claimed they did in the rollout of these boxes. So if you look at it, quite a number of balances that are impacted, and they're quite material and significant, and hence then where we experienced the limitations, it then resulted in the disclaimer. When we had our engagement with the minister, when we took the minister to the portfolio, we were very clear to stress that it's quite unfortunate that the USAF got a disclaimer, but if you look at the primary party on the other side is actually the post office, because they use the post office within the portfolio to assist because of the distribution network that the post office has. But unfortunately, they do not seem to be in a position where they are always getting the required supporting evidence from the counterparty being the post office, and therefore resulted in quite a bit of some of these limitations that were then reported. So it's not what we stress to the ministers to say it's under one roof. So ideally, this should be sorted out ASAP and make sure, because we do understand and appreciate the strategic intent by having used a sister institution within the portfolio, and then also one that is ultimately also struggling a little bit in terms of its finances. So strategically, it made sense, but from an implementation point of view, there might be some oversight and some work that's required in order to make sure that the implementation is improved in this regard, and then ultimately that these boxes can get rolled out so that we can then ultimately then move over and make the switch. Then USAASA was a particular concern on a technical issue. There was a receivables balance where the disclosures did not meet the financial reporting framework. That I'm confident they would be able to turn around going forward. It was a technical matter that I caught them in the current financial year. So all indications are that they should be able to address this regression going forward with the implementation of an effective audit plan. From a DCD point of view, our key message here is they remain in the yellow space, and they should also ideally be one of the institutions that are finding it a little bit easier to move into the green space. However, they are grappling with a bit of performance reporting challenges, but those mainly relate to the BDM and the rollout of the BDM project as well. Honorable Chair, honorable members, I'm going to stop the intro of the presentation at this particular point of view, having given a high-level synopsis in view of the portfolio audit outcomes. My colleagues will now delve with the next sections of the slide. Most importantly, will now be in terms of the performance information and a high-level reflection in terms of the turnaround strategies, as then noted from the work that we've done at the Post Office and the SABC. So that I'll hand over to you with the permission and indulgence of the chairperson. Thank you.
Good morning, Honourable Chair, Honourable Members. Thank you, Andries. I will then continue with the portfolio on the performance. What we indicated on this slide is if you look at the performance reports that was received, Film Publication Board, ICASA and USAASA, that reports that we've received for auditing, we did not identify any material misstatements that had to be corrected. With NEMISA and SITA, they did have some adjustments that had to be made to the performance report, but after the audit, then there were no material findings that had to be included in the audit report. With SABC, Sentech, SAPU, USAF, and DCDT, that resulted in material findings in the audit reports specifically to performance information. With Sentech, DCDT, and USAF, that specifically pertains to the BDM project. And there's slides further on that I will then elaborate on that specifically. Then with SABC, there were two indicators where SABC had limitations on the systems and on the new measurements, where they could not then report on those two indicators. And then with Post Office, the maintaining of the system at the branches, there was also a reporting finding on that one. With regard to SAPU on the method of calculation for achieving the planned indicator, what happened in that instance was that SAPU reported only on a performance for a month and not for the full financial year. And that is why we've then indicated that it is not clearly defined at what level of performance they should be reporting on. And then there were just two indicators on DCDT that also were not specific in clearly identifying the level of performance. What is the impact of the performance that is need to be adjusted and where there is findings in half of the portfolio? It diminishes the efforts to adequately monitor and report of those targets. There is insufficient tracking, and maybe that would then indicate that they will not be able to achieve the planned indicators, and the lack of supporting evidence indicates then insufficient internal control and oversight control. And that then ultimately have a risk that those planned targets will then not be achieved. If we go to the next slide, we have then indicated 8 of the entities, and what I need to mention is remember that the achievement of targets are being done by the auditees. They report to indicate are they achieving or not achieving these targets. From an Auditor-General point of view, what we do, we select a specific program and then we just audit it to ensure that it is valid, accurate, and complete, whatever is reported, either achieved or not achieved. Within the MTSF, the main target that is for the portfolio is obviously the broadcasting digital migration target, as well as then providing 80% of the population access to the internet. The main key targets in the portfolio, linking back to that specific one, is then the installation of the set-top boxes, which is DCDT, Sentech, and USAF, that was not achieved, as well as the TV transmitters that's linked to that within SABC, where only 50% was then achieved. And then if you look at SAPU, SAPU had 3 main targets that was not achieved. The mail delivery standards that are set was not achieved. Their system that should be online at all times was not achieved. And the rollout of the IPS, which is the international parcel system that keeps track of your parcel, was also not rolled out. So again, the impact, there might be misalignment of targets and the reporting of achievements, specifically to BDM. I will allude to that also in the next slide. And then that would then ultimately result in the department to attain the spectrum licensing, the broadband rollout, and the reducing of the cost of communication. And in the implementation of the post of the future to ensure that SAPU has efficient processes and system to attract customers and enhance the value chain within the communication portfolio. So if we look at specifically with the BDM project and the migration, and if we look at the digital terrestrial television migration dashboard, it does indicate that the audience share over all those months keeps declining. And then where the arrows is within those graphs just indicates at that stage, just as an example, those two provinces were then switched off, which is also a further decline then in the audience share. And what we are just indicating and observing as that this might have an impact then on SABC to communicate and to reach the citizens of South Africa with the compelling information, education, and entertainment due to the decline of audience share. This also, due to the fact that the set-top boxes are not being installed on time, it means that the cost of communication still remains high because both the analog and digital network still needs to run. And then that is also then effectively having a slow release of spectrum, which also keeps the cost of data high. So our recommendation is that the set-top boxes installation be effectively monitored and then completed to allow for the spectrum release. Still on that matter, if you look at the table at the bottom of the slide, where both those three entities, DCDT, USAF, and Sentech, DCDT's target for this was 840,000, where USAF and Sentech had an 810,000 target. All three of these entities were inconsistent in their reporting with different numbers. And during the audit, we could not obtain sufficient audit evidence for any of those reported numbers. And therefore, those three indicators then had material findings included in the audit report. So our overall audit observation then is obviously the court case on the digital migration deadline resulted then in ICASA not fully allocated the spectrum amount of the 14 billion, and they've only recognized the 8.6 billion. And then SABC's continued ability to pursue its mandate is then dependent on its urban relevance, which could be affected by the distribution of these set-top boxes, the digitization of content, and content acquisition tailored for a wider demographic audience. The following slides is just detail of those specific key performance indicators that I've alluded to. SABC, which is applicable to the ones that they could not report on, and then the analog switch off. Within SITA, they also have the SA connecting sites that they wanted to target 100% should be connected, which was not connected due to insufficient funding from DCDT. They also had the percentage implementation of the security operations center capability on the virtual private networks, and only 22% were implemented.
You have reached the mailbox.
Oh, apologies. And then with SAPU, like I've indicated, that's the to maintain the application system, the rollout of the partial system, and then the standards on the mailing system. That was one. Okay, I'm going to continue. With regards to financial management, so now we look at the quality of the financial statements. The financial statements that was provided to us, the only one that did not have any material misstatements that had to be corrected was Film Publication Board. The department, Sentech, NEMISA, and ICASA made material adjustments to the financial statements that was then tabled, and therefore they received then an unqualified audit opinion. However, with SAPU, USAF, USAASA, SITA, and SABC, they remained then with qualifications and disclaimers. The main contributor, if you would look at the internal controls, is the proper record keeping that still remain a concern with regards to the quality of the financial statements. So Andries, I think, alluded already to the qualification areas within USAF, with SAPU as well, the disclaimer. Then SITA had 9 qualification paragraphs at SITA, mainly due to accounting standard that was not applied appropriately. USAASA, Andries also alluded to, and then obviously the opening balances of the irregular expenditure of SABC. So the impact of this is that your financial reporting and monitoring could not be credible, which exposes management then to making inappropriate business decisions, as it is based on decision making through the year on this set of information, and it might also impact then the planning and budgeting for the next financial year. If we look at the financial health, like Andries was also indicating with the turnaround strategies, we have SAPU as well as SABC. SAPU still recording a net loss after tax, as well as SABC having a negative operating cash flow. So both of these entities ended with a deficit. And as Andries indicated, SABC, we've included a emphasis of matter on the going concern. And then with SAPU, it was then a disclaimer. Included in Sentech, there's also an emphasis of matter paragraph in the audit report due to the fact that the majority of the public entity's revenue is earned from one customer who experience currently cash flow challenges. So that is why that emphasis was also made on Sentech. And then included in Sentech as well is then the fact that there was attention to the note in the financial statement that the minister has approved the acquisition of BBI by Sentech in April 2022. So from a financial health, then if I go into the detail with SABC on the going concern, if we look at the forecasts from management, there is still a negative cash flow where the cash collected in certain months is still less than the cash paid. And if you look at the bailout funds, the projection, as well as the own cash by the end of this financial year, the projected cash flow will be on 421 million, and the bailout fund will have then reduced to 353 million. With SAPU, the main contributor is still the lack of adequate implementing of the turnaround strategy that is influenced significantly by the instability of leadership, and that is then resulting in the deterioration of the financial position. But I will, so this then is where SAPU was then expressed with the disclaimer of audit opinion on the financial statements. If we then move to the compliance section of the audits and the auditees, Film Publication Board is the only entity that did not have any material findings pertaining to compliance. We have included the 5 SAPU, USAASA, DCDT, SABC, and SITA on this slide. And with SAPU and DCDT, the red arrows indicates that there was new findings for 21-22 on procurement and contract management. SABC have a green cross, which indicates that they have actually addressed the procurement and contract management, and they did not have a non-compliance finding on procurement and contract management specifically, and SITA remained the same. Quality of financial statements, except for Film Publication Board, everyone had material misstatements on those financials that was received for auditing. And then SAPO, USAASA, SABC, and SITA is still struggling to prevent irregular and fruitless and wasteful expenditure. And then ultimately with that, the effective consequence management, those material findings were then still included in SAPO, USAASA, DCDT, and SABC. The following slide is just from the previous slide where we focus on procurement specifically then, where SAPO had a finding on the uncompetitive and unfair procurement processes. DCDT is a process where they did not obtain 3 quotations. And then SITA also had no stipulation of local production threshold. Also included in SITA, I know there is other supply chain findings. I think it's about 21 findings, and those matter is currently in a dispute resolution then with National Treasury to determine the way forward and if it is irregular expenditure. Good. Then if we go into irregular expenditure for the current year, so that is what was incurred during the year under review. It is currently sitting at 1 billion, and in the prior years it was 1.5 billion. The top contributors is then obviously SAPO, SITA, and SABC. SITA still having services rendered after the contract expiry date, invalid extension of contracts, and the payments made to suppliers which were not tax compliant. With SAPO, the irregular expenditure of 238 million mainly relates to cash in transit and cash supply contracts, where National Treasury did not approve and supported the contract extension. And then with SABC, because we are still qualifying the opening balances and SAB is still busy implementing the project to review the population, they have figures that is still under assessment, as well as DCDT, the 13 million that's still under assessment, that they still need to investigate then and determine then if it is irregular or not. Overall, if we look at the balances of irregular expenditure for the portfolio, the current balance is sitting at 6.6 billion at 21-22. So when we do audit consequence management, we look at the prior years, 2021, and what has management done with those figures that was, or those irregular expenditure that was identified in the past. What it was disclosed in the financial statements for SABC and SITA, they did condone some of the irregular expenditure as well as some that were written off. But from the 6.6 billion for 21-22, there's still a 6.1 billion that is not dealt with, although we know the 1 billion is relating to the current year. So your top 3 contributors contributing to that it's 6.4 billion of the 6.6 billion, which is then SABC, SAPO, and SITA. And the main reasons for not dealing with the consequence management on time is inadequate consequence management efforts and also irregular expenditure emanating from legacy systems and prior years and not being able to trace the responsible personnel or supporting evidence in this regard. I'm going to hand over then to Joyce.
Morning, Honorable Chair, Honorable members, and all our colleagues that have joined. So I'm just going to talk about the material irregularities. You'll remember in the accountability that we spoke about at the beginning, we referred to enforcement. So this is one of the processes that we have in place as the organization to ensure that we enforce accountability. which we call material irregularities. So I'll just explain on a high level what these material irregularities are. We basically, when we are looking for, or when we are in the process of performing our work, we'll look for any non-compliance with or contravention of legislation, fraud, theft, or breach of fiduciary duty that we will identify as we perform the audit. That will result or likely to result in the material financial loss, misuse or loss of material public resource, or substantial harm to the public sector institution or the general public. So what do we then do once we have identified this material irregularity? There are two further processes that we follow. One, we can refer the material irregularity depending on the type of material irregularity that we've identified. Whether is it within, the ambits of what we do as an organization, or does it have elements of that another public body can better take this further and respond appropriately to it, will therefore then refer that matter. There's also another process that we can follow. This is when the type of material irregularity we have identified falls within our mandate. This process is called the remedial action. So where the remedial action starts is we first going to include a recommendation in the audit report. So in the recommendation, we'll detail the timelines when management should implement those internal controls and ensure that the irregularity that has been identified does not occur again. Should management fail, please go back to the previous slide. Should management fail to implement this recommendation within the stipulated time, we then move to the next level. The next level, which will be taking binding remedial action. Taking binding remedial action will also be management. The accounting authority or accounting officer will be provided with time to implement the binding remedial action that we recommendations that we're going to include. If they fail to implement those recommendations, we then move to the last step. The last step being issuing of the certificate of debt. Can move to the next slide. So in this slide, we are mostly just trying to capture the responsibilities that the different role players are expected to play. So from our side, if we are dealing with if we identify that the accounting office or accounting authority is dealing with the material irregularity, after we have issued the notification, we therefore then report to the users that we are satisfied that the material irregularity has been appropriately dealt with. If there's a need for us to be doing follow-up until it's fully resolved, we will therefore then do follow-ups until it's fully resolved. So if we identified in the next audit cycle that the material irregularity, even though we have concluded in the previous audit cycle that it's being appropriate actions are being taken, however, appropriate actions have not been taken from that time on, we therefore have within us to then take go to the next step, which could either be including a recommendation in the audit report or referring the matter to the appropriate public body. So what is the role here of the executive and oversight, the oversight committee like yourself? The executive authority is expected in this case to monitor the progress and provide support to the accounting office and accounting authority in the implementation of these internal controls. And the committee is then expected to monitor progress and if need be, call the accounting authority or accounting officer to account for the actions taken and the outcomes. In an instance where we have referred this material irregularity to a public body, what we will then do as an organization will then follow up on the progress that is being made by the public body to ensure that the recommendations that are being provided by the public body are being implemented. It's however not within our responsibility to enforce that the public body takes the necessary action. The role sits within the executive authority and the oversight. The executive authority in this case, they'll provide support to the accounting authority and accounting officer in ensuring that the internal controls are improved. And then the oversight will then monitor the progress as well as calling the public body should the public body not take any action or not action the material irregularity that we have referred. And then recommendations, like I mentioned earlier, that this is it's the first step to the certificate of debt. So we'll allow the accounting officer and accounting authority an opportunity to remedy the situation within a specific time. If they do not do so, we then move to the to issuing binding remedial action. If they fail to act on those binding remedial action, then we issue the certificate of debt. So the role that is played by the executive and the oversight committee here is also the executive committee will monitor the progress and provide the support, and then oversight will, when need be, they will then call and request for the accounting authority and accounting officer to account for what is the progress on this material irregularities. You can move to the next slide. So within the communications portfolio, there are 3 entities where this material irregularity process has been implemented. One is the South African Post Office, the SABC, and SETA. So I'm going to start with the material irregularity that we've identified in the South African Post Office. This relates to the grant payment system, which is called the IGPS. So the IGPS is the system that is being used by Post Bank to make payments. However, the system was initially procured by the Post Office when the Post Bank was a division of the Post Office. So what we noted is that the process in which how the system was procured, there were a lot of internal controls that should have been built in within the system that were not built in. And as a result, we found that it makes it easier for fraudsters to, take advantage of, the grant payment system and commit fraud. We have reported a material financial loss that we've identified as a result of the failure to implement the necessary internal controls within the system. What we then did with this material irregularity that we've identified because of the fraud element, and we noted that the Hawks are probably best placed to take this fraud case forward, and as a result, we therefore then referred to them. They're also in the process of investigating other SASSA-related cases, so we felt it would be best fit if we also include this one so that they can have a full view of, what are the issues and where they're sitting in terms of the grant payment system. We'll move to the next one. The next one is two material irregularities that have been identified in the South African Post Office, in the SABC. So the one relates to a security contract. So what we noted when we did the audit is that the contract was awarded to someone who was not deserving, and that person was charging, the supplier was charging way more than the supplier that should have been awarded the contract. The SABC is now in the process of, there's a court case that's ongoing. So in the absence of an outcome from the court case, we are sitting with this material irregularity and following it closely until there's a way forward on how it's going to be dealt with, whether the contract is going to be set aside or how they're going to go about trying to recover the funds that have already been spent on the contract. And then the next one relates to a building in Nelspruit. So the building, there are certain areas that were not meeting the minimum standard of what was required by the SABC. However, the owner of the building continued to charge rental to the SABC, which the SABC paid to try and minimize the interest that would be charged. However, when we looked at the contract, we realized that they should actually not be paying for a building that is not in use. So meaning that they are incurring expenditure in vain where no benefits are being enjoyed. So this matter is also in court. So currently we're not able to progress until the court process is concluded. And then the next one, it's a material irregularity that was identified from the State Information Technology Agency. This was also identified in the previous year. So it relates, the first one relates to a license that has been paid. However, the license is not being utilized. And then the next one relates to an event that the entity paid for. That event did not take place. So what we've identified as the impact here is that there are funds that are being spent in vain, which the entity is not enjoying any benefits on. However, the good thing about these two material irregularities is that we've identified that the accounting authority is at least taking some sort of action. For example, with the first one, the entity is in the process of evaluating and confirming if they can try and recover the funds that they've spent on the licenses that they're not using. And then the second one, the individual that was responsible for entering into the contract and making the necessary payment, disciplinary processes have taken place. Can move to the next slide. Okay, so our key observations and recommendations to the committee. We recommend that appropriate consequence management should be initiated and be taken timelessly in order to address the MI. And also the court proceedings are prolonging the process of us trying to initiate our own internal processes to try and recover the funds. And we also it also limiting the SABC from initiating consequence management. So we're quite concerned about that. Internal controls need to be strengthened and sustained to avoid future or similar material irregularities within the SABC. We also propose that actions be taken to address the material irregularity were not appropriate or supported by evidence in SAPO. We also noted that failure to take the necessary actions to address the internal control weaknesses within the SAPO have resulted in the financial losses continue to be suffered. So what we recommend to the portfolio committee, we would like the portfolio committee to request progress feedback so that the PC can monitor whether entities are on track in achieving the desired outcomes or recover the potential or actual financial losses to address the identified material irregularities. We also request that entities to provide timely, specific and regular progress report on the implementation of the effective consequence management processes. Also request that you ensure that the entities are also reporting to the committee on the rectification or improvement of the internal controls that resulted in the weaknesses which inform the material irregularity. Thank you.
Thank you, Joyce. Then just before I conclude on the portfolio, I would just like to quickly highlight the GCIS and MDDA, which forms part of the presidency portfolio. But I know this portfolio committee is overseeing them. So we have just quickly consolidated those two entities together. And as can be seen from the audit outcomes, there was a regression in both GCIS and in MDDA. With MDDA, the quality of the financial statements submitted regressed and they had a material adjustment. This was due to incorrect accounting treatment that they have included in the financial statements that was received. And then after the audit, those matters were then corrected. Within GCIS, there was a matter finding that was raised on possible irregular expenditure. Then we requested GCIS to confirm the matter or refer the matter then to National Treasury. National Treasury came back and said that the appointment of the panels, the extension of those contracts should have gone through a tender process. And GCIS then went through a process to go back to the population, and then they have disclosed 4.5 million of irregular expenditure, which then also resulted in a material non-compliance included in the audit report. So from a performance point of view, we did not identify any material findings on both MDDA and GCIS, and MDDA at 95% of their targets achieved, and GCIS 89% of their targets achieved. So what we're just indicating is to continue the efforts in enhancing the internal controls within GCIS and MDDA, and to ensure proper record keeping and ongoing reviews. So in conclusion then, our overall root causes is inadequate internal controls were put in place by management to prevent the non-compliance findings. There's also not adequate review and monitoring controls over the financial statements, and management was not effective in developing and monitoring the implementation of action plans and turnaround strategies. What is our key recommendations is to enhance and monitor the internal controls by implementing and updating those action plans so that it addresses the recommendations that was made by our office. Obviously, with SABC is finalizing the process of the completeness of irregular expenditure, to also in both SAPU and SABC to improve and monitor and update then the turnaround strategies, and then ultimately also having the consequence management system to be effective and in place. Commitments made by the executive authority is to strengthen the new SABC board, to monitor and oversee the BDM project, to lift the moratorium on filling vacancies, and to assist with source funding. So what is the message for the portfolio committee? In 2021, we've made certain recommendations, and our current year's recommendations is then to follow up on all the action plans per the entities to ensure that the recommendations are tracked and the internal controls are strengthened, which include the implementation of proper record keeping and reconciliations with quarterly reports, and then also compliance with supply chain management and performance information. Also to update and monitor the turnaround strategies to drive the financial sustainability within the sector, follow up on the consequence management processes, and then also to monitor the current vacancies to ensure stability of leadership. Thank you. Thank you, Honourable Chair.
Thank you. Just 5 minutes above. You did well. Thank you, Honourable members. That's the presentation from AGSA. As I said, we would get clarities or comments from members so that if there are matters to respond to from the AGSA side, that could be done before we get the departments to make their presentations, which in a way would allow AGSA to go and support the other committees once clarities would have been made. May I now recognize hands that would want to engage. I see Honorable Kola Barnett's hand is up. You are identified, you can proceed whilst I look at any other hand that would want to clarify.
Thank you, Chair. I am having a bit of difficulty with my camera, so if you don't mind, I'll leave that off for the moment.
Yes, can you proceed?
Thank you.
Then Honorable Kubeke.
So the one question I wanted to ask was, and this is from the Auditor-General side, what is the situation when issues are raised and then
we can't hear the Honourable Member. Thank you, Chair.
apologies.
Honorable Kola Barnett.
Yes.
Now
So,
can you hear you proceed?
Yeah, I wanted to know how they intended dealing with the fact that issues that are raised year after year after year are basically ignored. You know, we see issues that come up time and again, and they simply aren't corrected. And I don't see any CEOs or CFOs being held to account. They earn huge amounts of money, and yet time after time you see, oh, well, they had material misstatements, masses, incorrectly done. It's really not up to them, to the Auditor-General's office, to have to correct these issues for them before they can get any kind of a clean audit, if they indeed do. So You know, they speak about, oh, there must be consequence management in each of these entities. Absolutely agreed. But I don't see the consequence management because, you know, time after time they're told, please ensure consequence management is introduced here to deal with this matter, this matter, this matter. And then you read the next year, oh, well, they didn't introduce it, so there were no consequences. So the same people who have spent hundreds of millions in irregular expenditure, for example, or in some entities, billions, nothing happens to them. They just go on working there. They go on, the CFO goes on working there. What is the situation? What is the next step from the side of the Auditor-General to ensure that what they are determining is actually followed up on and acted on? Thank you.
Honorable Kubeka, I recognize.
Thank you, Chair. Greetings to the Office of the Auditor General. Greetings to the members of the Portfolio Committee and all officials coming from different entities and our department. Chair, what I would like to say, I can say on the side of the presentation, we were listening very much attentively. And indeed, also on our side, as we know that we are still have our own package on the side of monitoring these entities just to check that are they in the right track or where can we assist, where we are supposed to assist. Indeed, this presentation, we fully understand to all entities and also on the side of the departments, and we know as they have presented to say where we should just guard against. And once these entities, they can focus on the issue of the consequences management, on the issue of checking the irregular and fruitless expenditure, on the issue of trying to be sensitive on the time frames that they know that they are being given in order to present. We know we were having a big giant of these STB boxes and also on the side of the BDM, but we can see that the department is trying to follow, and we fully also understand that other entities have been affected by others, as we were trying to push as a portfolio committee to say, is it possible to have maybe to reconfigure, to have some few entities in order that, because we can see that others are repeating other things. So they are trying to move on that direction. That's where they have been affected. But we want also to appreciate to those who have managed to sustain their clean audit, and with those also they have regressed just like FPB, but this time they've managed to get their footprint in a correct direction. So we want to appreciate that, but we want to promise the Office of the Auditor General to say, we are not relaxing. We are just sitting, assisting one another and monitoring in order that things should done properly in a proper manner. The issue of consequence management, we can't just keep quiet on it. We will keep on pushing in order that the entities must be on the right path, Chair. So I would like just to thank with those words. Thank you very much.
Thank you, Honorable Kubeka. I see Honorable Bodlan. Then identify.
Oh, thank you so much, Chairperson.
Sorry, I didn't see your hand. You are noted. But in the meantime, Honorable Bolan, please proceed.
Thank you, Chairperson. Chairperson, we note the report by the Auditor General and the recommendations that are made to the committee to say the committee must employ more stringent measures as an oversight body. The biggest concern, Chairperson, is that the reports come to the committee much later on hindsight, where the horse has already bolted. So from what the AG is saying, it means that we must also correct how we deal with the reports from the department and the entities so that we do not allow too much time lapse between the reports. And also, I think the onus is on this committee to strengthen our role as an oversight body in terms of allowing more time to deal with reports, more time to deal with the respective entities. For example, with this meeting, we are going to deal with so many reports, and we are not going to deal with them in a way that gives justice. We would have dealt with them in a way that, for me, it would be malicious compliance. So this then means that the cycle continues in terms of how we interact with the department as a portfolio committee. Chairperson, I think there is enough legislation to strengthen what we are already saying. Politicians love saying, oh, there would be consequence management and heads withdrawal. But even when you look at the Auditor General's report, you do not even get a sense that, oh, okay, this was done in the previous financial year and heads have rolled. And my question perhaps to the Auditor General, when you do make the recommendations, is it not at all possible to make more stricter recommendations? For example, when you have an official who has authorized 1.5 million for services or goods that were not received, to make recommendations for criminal charges, because to hear that the department is dealing with this through a disciplinary action, and that disciplinary action is not even captured in this report, it means that this particular item will fall through the cracks if it is not picked up in the next cycle of reporting. So is the AG not able to make more serious recommendation in terms of saying lay criminal charges against this particular individual? And consequence management, Chairperson, unless and until we see that happening, the reports that we are receiving from the Auditor General will continue, because people will know that there is really no punishment for abuse of public funds. Thank you, Chair.
Thank you, Honorable Bulani. I will now, if there's no other hand from any other member, for now, let's get response.
I said no to me, Chair.
Okay, Honorable Machozi, like I said, I didn't see your hand. You can then proceed.
Thanks, Chairperson. I can't raise my hand. My icons are gone. Like, I don't know what is happening with this gadget, so I can't raise my hands. But nonetheless, thank you, Chair. Good morning to honorable members and the AG team. No, Chair, I think it is to share maybe the same sentiments that as a committee, it's upon us on how do we make sure that all these entities become accountable. To have so much of irregular expenditures and funds, it might be at times that they will explain to us of what had transpired and so forth. But now we're also getting a report that in the SABC, there were times when the three-quotation procedure was not followed. And sometimes maybe we are told false information and we are not told the truth. Now that the AG is here and explaining everything that transpires in these entities, it is upon us that we must make sure that accountability, people must take accountability for their own actions. And we can't just let it go as a committee, because we would have failed not to oversee all these entities. On its own, the SABC is struggling to sustain itself. We cannot be then having such scenarios of people not following procedure and no one takes accountability of that, which means it's a norm in these entities. People are used to doing that. In SAPO, I don't even want to go there. But I think we must, as other honorable members are saying, that we must really now start being strict on these and want reports on why such and such is happening and how did it happen, because now we must find out, because when we get these reports, such report, then it raises a serious concern, a serious one, Chair. But I think it's what we must take it up with the entities when they come to the committee to report it's what it's issues that we must raise with them. Thanks, Chair.
Thank you, Honorable Machozi. I will then allow us to come in. I'll probably come back if I think you have not covered the points, but you can proceed to respond to the initial questions.
Thank you, Honorable Chair. Thank you, Honorable Members. I will also, like yourself, Chair, also in Honorable Chair supporting the members to say where I may not cover some of the issues. I will also lean on my colleagues likewise, where I may not cover those issues to then also make sure that we are covered. But my sense of it, Honorable Chair, is that most of the matters that were raised by the Honorable Members were really a lot of comments and inputs that are directed towards the institutions, and the institutions would be really well versed to answer some of these issues. But I will deal with a number of key critical ones. The good thing is, Honorable Chair, Honorable Members, I picked up a theme insofar as the issues that were raised by all the members and the comments and the inputs that were made. And the common theme and the thread here is around consequence management. So I'll answer some of those pockets, but some of the questions or issues that may have been raised, I will respond to them at the conceptual and globular level, and make sure that, as I respond and talk to the concepts or the theme that's raised, that I'm touching on the various aspects that would have then been raised by the members. So there are a couple of things from my side that, from an honorable chairperson consequence management point of view, if I look at the irregular, fruitless and wasteful expenditure, obviously the committee members know that there are certain key legislation and processes that are required by the PFMA insofar as this is concerned. So the first one says, Honorable Chair, Section 38 and Section 51 of the PFMA is very clear. It says if you are an accounting officer or you are a part of a board member in an institution, you must implement sound systems of internal control. And those sound systems of internal control must be of such a nature that they actually prevent you from incurring fruitless and wasteful or irregular expenditure. So as with all things in life, Honorable Chair, Honorable Members, we do appreciate that things may go wrong. So then the legislation does allow for those particular institutions to say where something has gone wrong, at least have systems and processes in place so that you can pick up those items of non-compliance. Once you've detected them, make sure that you then fully disclose them in your financial statements so that the consequence management processes can then ensue. So the process of detection and disclosure is also a paramount process, because you need to know what is in the environment, fully account for it, so that you then have a full list, a complete list, Honorable Chair, Honorable Members, in order for you to know what you must go and deal with. So once you then have your list, then probably this is where the hard work starts off now, where you now have to complete and conduct those investigations. And again, Honorable Chair, it's not just sufficient for you to say, I have now instituted a disciplinary process or an investigation, and you stop it at that. You must be perceived to be actively pursuing this particular thing. And the only way in which you are then able to achieve that is to really conclude and complete these investigations and disciplinary processes with the necessary speed and requirement. Because if you look at the PFMA, the National Treasury instructions, apologies for that, even in the National Treasury, there are specific guidelines that have been issued to our institutions out there by the National Treasury in terms of how our institutions must deal with consequence management and all these investigations. They even have assigned certain timelines. Like I think the average is about 3 months in which they expect or they deemed it reasonable time for you to conclude an investigation or consequence management process. Obviously, there are certain nuances which must be accounted for. So some of the measures, some of the members also asked what are some of the measures that the members can implement in order to speed up this, linked to the consequence management and the repetitive nature of some of the findings that would then have been reported. Honorable Chair, Honorable Members, there are some committees that we have observed over the years that would in proactively driving this particular, improvement they want to see in the environment, they would actively ask management to come to Parliament and brief them on the detail. So when we say the detail, what do we mean? Most of our institutions will just come and say, I'm doing consequence management, but some portfolios will actually come and say, okay, and this is just by way of example, by the way, I'm not victimizing anybody. So maybe let's just take FPB because they are clean so that the other colleagues don't feel I'm victimizing them. So we say, FPB, you've incurred 100 Rand of irregular fruitless and wasteful expenditure. The law says you must now go and investigate. Give me a report, a detailed report. Who is the official? What is the instance of irregular fruitless and wasteful expenditure? What does it relate to? When did you start your consequence management process? So then next quarter, when they come and engage again with the portfolio committee, the portfolio committee then says, let's do a follow-up. So you've had 3 months now to go and make some progress on your consequence management processes. So now give me your list and show me the follow-up action you've implemented since you've instituted your disciplinary. So the first part, you give them leeway, they go and institute. The second quarter, they must come and tell you where now, how far they are in the process. And by the time you get to your third or fourth quarter, if you look at the guidance that I noted that is available from the National Treasury, you are well over those timelines, and by then you should really have progress. And then you're able to hold management accountable to say, if I look at this particular instance here, are you doing enough? Are you doing it quickly enough? Are you implementing the necessary haste and speed in order to finalize this particular process? Unfortunately, then it also means that, Honorable Chair, honorable members, we must ask management as a portfolio committee. We must ask management, some of our management structures, the accounting officers, the board members out there, when they come and report, which is the second part, and they provide quarterly reports to us or progress reports, what quality assurance processes have those reports been subjected to? So in other words, do we have the internal audit function that has adequately supported the management structures or the leadership in that portfolio to look at the accuracy, the reliability, and the credibility of that information? And was it reviewed by an independent oversight structure within the governance bodies, being the audit committee? And have they signed off on those submissions? And all of those then would clarify some of these roles in terms of the accountability ecosystem, and everybody would know that their accountability is also clear and personal, because by the time, before you even engage on the document as portfolio committee, you ask, and if the internal audit has not done their role, then you can say to management, so in other words, you are presenting a document to us as the portfolio committee that has not been quality assured. So what do you then expect us to engage on this document? So those are some of the levers that the portfolio committee can pull, Honorable Chair, honorable members, in terms of making sure that in cycle or throughout the year, by the time they come and report to us on a quarterly basis, that at least we have some form of assurance in terms of the progress and the numbers that they would be reporting to us. Otherwise, like the honorable member mentioned, you'll come, it's a year later, it's late again, and then accountability then suffers from that point of view, and it seems like there's no movement in the respective portfolios. And also, Honorable Chair, the reports that you would then be submitted, if they are not subjected to a particular rigorous and proper quality assurance process, they actually pose a reputational risk for the portfolio committee as well. Because the portfolio committee, as those charged with oversight, are also playing your role in the accountability ecosystem that we displayed earlier on. You will then make decisions and continue to engage with them on the basis of having information that has not been quality assured. So you are at risk of making improper decisions or taking improper action because you're not sure with regard to the quality of the information that you are dealing with that has been submitted to the portfolio committee. So you'll see that's why we say in the back of our recommendation some of those key steps that the portfolio committee must take. Then there was also another sentiment that was shared, or a comment that was shared, Honorable Chair, around the, maybe let's call it the rigor or the veracity of our recommendations as an audit office. Honorable Chair, without making or sounding like I'm suffering from excusinitis, the big challenge that we have is there must be an appreciation for the fact that as the audit office, we are auditors, accountants, and by qualification, by training, and by trade. So for you to go and determine an element of criminality is a different skill set. And hence, Honorable Chair, even if you look at the way our legislation has now been amended, as soon as maybe we pick up in as part of the audit process, a particular transaction that we feel there might be untoward behavior or something untoward or something that might require further exploration and interrogation, we then have the material irregularity process, which then becomes a bit of a more legal process. But in that process, when we then really determine that something has gone wrong here and we're not getting the necessary movement or certain things, we feel that there might be more to explore, like I mentioned earlier, we then have the option to refer those matters to the relevant investigative bodies, such as the SIU, the DPCI being the Hawks or the Public Protector. So, Honorable Chair, Honorable Members would know that as part of the presentation, Joyce did cover one of the instances where we picked up something in a particular transaction. We realized that accountability is going to become a problem because you had two parties involved, being the Post Bank, which we'll talk to a little bit later once they've tabled their report, and we had the Post Office. And when we couldn't figure out who must do what, and they kept, from a legal point of view, saying this is a separate entity, this is a separate entity, but it started here, who must now enforce consequence management? We then refer that matter to the DPCI, which is still ongoing, and we do engage regularly with them. So that's the best that we can do in terms of the process. And we are certainly exploring all these other transactions that we pick up and having conversations with management in terms of further action to try and spur on the correct behavior and change the culture. Hopefully in the next cycle, we'd have a little bit more to report should that behavior not have been corrected by management going forward. And then, Honorable Chair, I think the one comment that was made was around the STPs, but that was more comment around the portfolio's strategic future intent in terms of the reconfiguration of the portfolio linked to the mandate, trying to make sure that we don't duplicate efforts. So that is well noted and also welcomed, and we hope that it will also streamline the achievement of some of the strategic objectives that the portfolio seeks to achieve. As you would have noted that when we did the presentation earlier on, there is some coordination that's required within the institutions currently operating within the environment to make sure that collectively they then contribute towards the overall main strategic intent of the institution, as Suret would have presented when we're doing the performance information reflection. I think, Honorable Chair, I've covered the bulk of the key concerns. Like I said, the theme was more around the consequence management and the processes, but ultimately, the one member is very correct, and I would like to support that sentiment that was shared by the honourable member, in that the legislation is there, it's existing. The onus is upon the effective utilization and implementation to affect consequence management. The PFMA is quite clear in terms of the processes. It's then how management implements it and how well they report to the portfolio committee, and what the portfolio committee then does with that information in order to make sure that we're holding them accountable in terms of our overall accountability ecosystem. Thank you, Honourable Chair. Thank you, Honourable Members. Hope I've covered everything.
Any additions? So it would appear that Mr. Secretary has covered the points. May I just check if there are members who may still want to come back to ask clarities before I ask that, as I had promised to come back if I think maybe a point is not quite clearer. Am I still audible?
Yes, Chair, we are happy.
Okay, so in that score, I take it that members would have been covered, but I just want you to come back to some of the slides, which I think are important in the committee formulating recommendations later on. I think as it relates to slide 30, quite clear there on the recommendations we need to incorporate. But I think of concern would be slide 35 and 36, because there the demonstration is such that action plans do get to be put in place, but they do not get to be implemented. And I'm sure would take your advice in terms of how we need to pin down those who need to do quality assurance for reports to be standing the test of time. But the reality is that some of these matters that have been picked up to have been also from the previous financial year, whether you talk about an event or licenses, from quarterly reports received on implementation of those action plans. The understanding was that those have now been chased and therefore preventative measures, because we're also interested in preventative measures. Then preventative measures are being put in place, which then puts another question. From an in-year monitoring, where, because we do get reports that the Audit and Risk Committee has looked at this and that, but in your interactions in year, whether these are not picked up, what others would call early warning signs that people would not meet what they've committed to, and interventions get to be made for them to be able to comply. I think that's, for me, the area of interest, because we're still going to have a proper discussion with the department and their entities. So maybe the last point would really be that, other than BBI and Postbank that is sent back on the basis that they've not presented, is this the final audit on all entities, or do we still have entities that are putting up an engagement with yourselves and therefore could alter the outcomes that we have? I think for transparency and consistency of information taken to the public, it will be important to clarify that point, as I say, other than BBI and Postbank, where there are still pending matters to look at. So if you can speak to that, it helps us as we make recommendations, as I say, so that we don't speak to something that is being addressed and still recommend on it. Honorable Kolabana. I'm raising an order. So in the absence of that, maybe that's a legacy hand. You can then is that a legacy hand? No, I saw Honorable Kolabana's hand. So
Apologies,
I thought.
Chair.
Right.
Yeah, I'm just having difficulties with this whole 2 laptops, some working, some not. Yeah, I wonder if I'm finding that Mr. Sageto, if that's how you pronounce his name, his presentation was exceptional. And I'm wondering if it's possible that he perhaps draws up a document for this committee detailing ways in which, and the rights that we have in terms of holding these entities to account. Because all of us have said over and over, oh, but this was an issue the previous year, the previous year, the previous year. We don't see people being fired. We don't see people having to, well, we don't look into where the hundreds of millions have gone to, who have they gone to, where did they go, who made the appointment of someone who did not win in terms of bid adjudication. They don't take the winning bid, they take the next one. Is that related to somebody? How far can we go? And I think this gentleman's knowledge is encyclopedic, and perhaps we should consider asking him to put together a document of every item and every right that we have as a committee, because I think he's quite right. It will come back and bite this committee if it is seen that we knew about this. We knew that things were going wrong in various entities, and we simply signed off on reports and moved on. So I think Mr. Segeso is a real font of all knowledge, and we should ask him if he will assist us in this manner. Thank you.
Honorable Kubeka.
Thank you, Chair. Maybe in that question that have been asked by Honorable Kolabanat, the gentleman from the side of the Office of the Auditor General will respond. But what I want just to sensitize her also, it depends to the entity also that is there when coming to the side of dealing with the issues or matters that needs to be taken into serious. Because let me make the example, Honorable Chair. We were having a hell of a frustration on the side of SETA, but SETA managed to work very hard in order that to take all those who are accountable in order that they must account. So I think also on the side of the entities, the management needs to play its role. If there is something that needs to be taken place there, they need just to run with it. That is why even us, we are trying to run after the portfolio committee as it is, the department, in order that just to check that are they following or not. Thank you, Chair.
Mr. Sreto, you were already coming in to respond to some. Yes.
Thank you, Chair. Thank you also once again, honourable members, for the follow-up questions. So, yeah, again, Chair, there might be some underlying or intertwined themes that we're picking up from the follow-up questions. The last two questions, maybe let me start with those, Honourable Chair. Thank you first and foremost for the kind words from the Honourable Kolabanat, or through you, Honourable Chairperson. I do appreciate it. It's good that you see when we're dealing with such serious matters and also such heavy topics and a process of accountability, that at least there is some good that the Office of the AG is doing. So we really do appreciate the positive feedback in this regard. Luckily for me, Honourable Member, through you, Honourable Chairperson, the briefing document would not entail quite a bit of work, because there is also already a document that the Office of the AG has. Currently, maybe they'll require a bit of a tweak and an update here to also make it more relevant to the particular institution, as Honourable Kubeka would have also mentioned. But we do have certainly a basis, a good foundation to start with, or from within the Office of the AG. And what I like about that document also, Honourable Chair, through you, Honourable Chair, is that it actually has certain roles assigned to the relevant people in the accountability chain, and it has the pieces of legislation that tells you what was your role and responsibilities and what consequences. And if I'm not mistaken, it also then sort of tries to tell you who's the person, your immediate line person, who must then take the required action. So we do welcome the invitation for an additional engagement. So we shall await a formal request in this regard, so that we can also take it through our necessary processes and structures to make sure that we don't try and assist and we fall foul of our own processes. But we would definitely welcome the engagement where we can then touch base with the portfolio committee in terms of some of the measures that, number one, would be expected out there from an operational point of view from the administration members, and then also what are some of those devices that would then be available for the portfolio committee members, so that the portfolio committee members can then leverage and implement those to make sure that we then drive the correct culture and behavior in this regard. So those two, I think those two I've touched and covered. Then I think on the last part that I mentioned, Honourable Chair, you would have listened, that it also touches on what Honourable Chair had mentioned with regard to the action plans, that they do actually table them, but they don't go and implement them. And then the challenge, Honourable Chair, dare I even say, when they come and report quarterly, and then you come and you get other evidence that seeks to indicate that what was happening on the ground was contrary to what has been reported, one might actually need to consider the truthfulness of the statements that were then advanced during those presentations. Yes, we do appreciate some things may happen, and some things may take place in our environments that may require us to be agile and amend and correct our initial plans. But those should always be communicated consistently, and the portfolio committee should then be taken on board should there be adjustments or amendments made to the commitments in terms of the action plans or the implementation of the action plans. So what I would have a challenge with, Honorable Chair, is when you've been reported to throughout the in-year cycling or the in-year monitoring process, and then the evidence or there's some other evidence from a different assurance provider that seeks to indicate the contrary, we would really need to understand then what went wrong, because then you might find yourself in the realm of having a different set of conversations with regard to the truthfulness of those particular presentations that would have then been implemented. What we do, Honorable Chair, from the Office of the AG, we do have some early warning interventions or early warning engagements that we try and engage with our auditees. Obviously, also like Honorable Kubeka mentioned through you, Honorable Chair, would be the environment needs to be conducive. It also needs to support, management needs to buy in, and you need to have a management that actively wants to improve the environment. So we do have what we refer to as the status of records review, which is where we go in as the Office of the AG to our institutions. We do a high-level assessment on some key focus areas, and we try and give management a sense of some potential pitfalls that they must go and deal with before we come in for the financial year and audit. And hopefully we give them some space, and hopefully they'll go and address it so that by the time we come in, then those matters would have been dealt with. So it's called the status of records review. And if I may dare put my head in my hand in advance, a recommendation of the CAF to the committee, it might also be worthwhile for the committee to then engage the portfolio and say, from the 12 entities within this particular portfolio, who of them are implementing status of records review, at which point in time, so that once they've given you the commitment in that regard that it is being done, let's say, for example, in a DCDT environment, Honorable Chair, as soon as you've got that commitment and they say we're doing it as the Office of the AG, then you can also, you are more than welcome and free to then call us in, and then we can brief you on what we would have found at that particular point in time before we get to the stage of final reporting, if I can call it that for a better phrase. And we also do some interim audits. The intention with interim audits is you take a bulk of the work and you look at what management would have done at a particular point in time, let's say 9 months up until December, and then you try and do some proper audit work on it and give management an interim audit report. So that might also be something worthwhile for the committee to consider, to say, well, if you have an interim audit that was then performed in your space as management, maybe come and give us that feedback, and then we can just come and provide that assurance for you in terms of what then would have been found, or some of the key material issues that the institutions might still be required to go and respond to, so that hopefully they move in the right direction. The last matter that was raised by yourself, Honorable Chair, through you, yourself, Honorable Chair, the issue around the finality of the responses. So, Chair, maybe it was just a choice of words or English, but there's no outstanding engagements where we are still required to go back with management. We are here today because the audit report has been signed, has been delivered to our auditees for the ones that we touched on and discussed here today. And those audit reports were then taken by management. They were put in their annual reports, and those annual reports have already been tabled. So there are no ongoing discussions. The audit was finalized as soon as those audit reports were signed off, physically signed off. And I'm proud to announce that as Office of the AG in this particular portfolio, given where we've been coming from with the late audits and the impact of COVID, through significant effort by management as well as the audit teams, we were able to sign off the bulk of our audit reports on the legislated deadline on the 31st of July, so that we can have this session in terms of the oversight and accountability processes. Those ones that are outstanding, Honorable Chair, are not outstanding because there's an outstanding audit engagement. The audit reports have been signed, sealed, and delivered. It is just for management to take those audit reports with the financial statements that would have been audited, compile them in their annual report, and come and do the tabling. So it's their portion of management where they explain the forwards and the accounting officers' reports and all those things, and making sure that they don't put information that contradicts what we would have audited. And then ultimately, once they are happy with the layout and the glossy and the look and feel of that document, they can then come and contain it as required by, table it as required by the legislation. Apologies for that, Chair. So there's no outstanding audit engagement. So all the matters that you are engaging on, Chair, please feel free to understand that they are final, that you can then proceed to make informed decisions based on those audit reports. Dare I even say, as far as it relates even the BBI and the post bank, the information that you have that you got in the briefing, in the other document that Sibongile said you are entitled to receive, you can go ahead and plan your activities around that. That information is not going to change anytime soon. The only remaining engagement would be to say to management, let us now kickstart our processes going forward for the next year. Let's look at prioritize some of those key issues that would have been stumbling blocks in the current financial year. Just like I mentioned earlier on with the SABC, we've now agreed with them as soon as they finalize their intervention on the irregular expenditure, we'll try and get an early engagement in there and make sure we focus our attentions on it to make sure that hopefully we then address that particular concern as by way of example. Thank you, Honorable Chair. Thank you for the opportunity.
Thank you, AGSA team. I take it that, honorable members, we've had an opportunity to clarify ourselves. I think we'll be able, as I said, to deal with the recommendations, but we can assure the Office of the Auditor-General that we do take their recommendations quite seriously and would ensure that those that are responsible in ensuring that the situation is turned around are indeed held accountable to what they commit themselves to. Of course, also improve on our side on the oversight role we need to play. And I'm sure our content advisors would have taken this into consideration so that in a report that we would adopt, those recommendations are properly structured to reflect the views of the committee. And I think initially we would have learned from tracking resolutions where we emphasize the action plan reports all the time. And we did get those, including in situations where the SIU has been investigating. Of course, we may have new members of the committee. They may not be aware of that, but there's been follow-up on those. But what you are raising in your report, I think that's what worries a number of us, is that, yes, these action plans get submitted. Yes, we do get the quarterly reports on the implementation. But at the end, when tested, some of them have been found to be weak. And in some situations, you are even recommending training of people, even on generally accepted accounting practice that gets used as a way of accounting in the space. And of course, it's one of those that we thought, like Honorable Kubeka would have said, we thought you were making serious progress, and that whole team may need to be workshopped once again because they may be using different methods to account. So that's something we would indeed pay attention to, especially the repeat findings are a problem. So you can be assured that we'll take advantage, of course, of any opportunity for you to come back and empower the committee to do its work better. And I'm sure I'll be representing members in that we would need to also categorize the entities that you've audited, especially those that are trapped in the disclaimer, whether they are joining there as new or they've been there for some time, that the committee may need to really create quality time with them to turn them around. I know that you would have said it's an audit opinion, this thing of disclaimer, But for me as a layman, I usually say it means the auditor didn't know what to say about what is presented before the auditor. So it says like you have not opened up your books for proper audit where there's full disclosure of matters. So we'd have to look at those because some of those entities are critical in the transformation agenda, in particular rationalization of some of the entities. Some of them form the basis for the new envisaged entities that must drive the transformation agenda. And we can start on West base. So with that, I must really thank you. I do know that you also have other committees to support, but we really appreciate the time you've spent with the committee and your willingness to clarify matters even better for us as we'll be getting to the next item. Thanks, Anderson.
Thank you, Honorable Chair. Thank you, Honorable Members. Keep on.
Thank you. Ajira, if you can just indicate if we have the Deputy Minister now connected from GCIS.
I'll check, Chairperson.
Ajira, can you hear me?
I can hear you, Chairperson. I'm just checking, Chair. Thank you.
Deputy Minister, are you now connected? Otherwise, we would have to put GCIS a bit later and allow the Deputy Minister of DCDT to start. Deputy Minister Sawyer, are you with us?
Chairperson, I'll just send a note quickly. Thank you.
Deputy Minister Mapulane, are you still with us?
Yeah, yes, Chair, I'm here.
Yes, we are trying to locate Deputy Minister Sawyer, but I was trying to help that we were able to proceed. That we may probably have to start with you having been on the platform. If we don't get any, unless you'd agree that we just follow the agenda and get the department itself to present, which is GCIS and MDDA combined. We're fine with that.
We are ready, Chair, to introduce our
Okay.
reports. So if you are ready for us, we are ready for you.
Okay, now that helps. I think we'll then take you and then we'll still get GCIS. We'll take a decision at the time when we can't locate the political people. It may sound not important, but it's important that we have the ministry, we have the department, we have entities, and at all times we must respect that we all have to take accountability for our responsibilities. So with that, I would then welcome you. You've got an added advantage, Deputy Minister and your team, in that the AG has presented before you. And therefore some of the points may not need to be emphasized again on what the AG would have picked up, except to highlight those that you would explain and probably how we are faring on those going forward. So as I give to you, I just thought we should make that reminder. And I'm sure in the next 40 minutes, you'll be able to present with your team and complete. Of course, emphasizing those points that need to be emphasized, but the ones from the AG, I think members have a better sense of what has been presented already. Over to you, Deputy Minister Mapulane, DCDT. presentation.
Thank you very much, Chairperson, and greetings to all the honorable members on the platform and everybody, the leadership of all our entities who are attending the meeting, together with the officials from the department led by the acting DG. What I will do, Chair, I'll just introduce our presentation by way of summarizing the performance of the department, and I would invite the DG to give a bit more detail, after which we will request Mr. Shilembe, the Deputy Director General for Oversight Branch, just to summarize the performance of the entities, because as you can see, there are too many. If they were to give individual accounts, it's going to take us the whole day. So we will ask him to summarize in a report that has been circulated to yourself, Chairperson. Thank you very much for having us as we come to yourself to account on the work that we have been doing in the preceding year through these annual reports. I must say that the report as presented by the Auditor-General is not painting a very good picture of the portfolio. We have noted the report. The report has been shared with the Minister, and we would like to commit ourselves as the leadership of the department to following up on the recommendations that are made in the report on the issues that are flagged, so that we continuously improve the performance of the portfolio. We do note that it's only one entity that has received a clean audit. The others are beginning to regress. We also note that the issues that were raised by the Auditor-General, particularly as it relates to our program, Broadcasting Digital Migration, the inconsistent reporting of information and the targets, as well as the other issues that are raised there, and the fact that this program has led to some findings on all of the three entities, including the department, that are reporting on this program. We note that, Chair, and we appreciate the work that the Auditor-General continues to do in holding all of us accountable. Quickly, Chair, on the summary of the department's performance. The department had 35 annual targets for this financial year 21-22. Out of the 35, we have achieved 32 of the planned target, which amounts to 91% achievement. In terms of the expenditure, we have spent around 91.9% of the allocated budget of the department. And as we have observed from the report of the Auditor-General, the department has received an unqualified audit opinion with some matters of emphasis. There are 3 targets that we have not received, one of which is the switch off of SABC analog television transmitters. The other one is on the framework on digital transformation and digital inclusion. And the last one is on an integrated plan of action in support of the implementation of the National Strategic Plan for Gender-Based Violence. On the analog switch-off, Chair, you would recall that we did brief the committee that there were litigations regarding this program by eMedia, which litigation was recently concluded by the Constitutional Court. We had already switched off about 5 provinces: the Free State, Northern Cape, Northwest, Mpumalanga, and Limpopo. we are left with 4 provinces. Now, the Constitutional Court has provided clarity as to how this program is supposed to unfold. And as a result of that, the minister had determined the end of September as the deadline at which all the qualifying household, the indigent household, should apply to receive government support in the form of the set-top boxes. The date has come, has gone. We are currently, the team now is currently assessing the applications that have been received with a view to advising the minister as to what it will take for us as the department through Sentech to do the installation to cover all the applications that have been received, after which the minister will then consult as determined by the Constitutional Court with all the relevant stakeholders to finally determine the date of the analog switch off. So that process is underway. At least we are happy that the Concord has provided clarity as to what should happen going forward, and the fact that the court has affirmed that this program is long overdue and it needs to be concluded. The other 2 program chair on the digital transformation, there were delays in the approval of the final framework on the digital transformation and the digital inclusion. And on the national strategic plan, the approval is still pending due to the delays that are required in terms of input by the relevant stakeholders. So let me just do this, Chair. Sorry. Okay, in terms of the financial performance, Chair, as I've said, that the department has spent about 91.9% of the allocated budget, and we have allocated almost 100% transfers to the entities that we are transferring in line with the drawdown schedule. There was an underspending in terms of the employees, which was due to the fact that some of the critical vacancies have not been filled, including that of the Director General, the CFO, and the other critical vacancies in the department. We are in the process of filling these vacancies. Approval has already been obtained. There is also an underspending in respect of goods and services for about 200 million for the presidential employment stimulus. We are working with one of our entities to make sure that we do spend. This money was not completely lost to us. It was rolled over through our engagement with National Treasury. It is still available. So we are working with the BBI to make sure that we do spend all the money. So almost all the preparatory work has been done. So very soon we should be rolling out this program as part of the presidential employment stimulus package. There's also an underspending on capital assets, which was mainly under software, which is due to the integrated workflow management system that was not procured due to the reasons stated by SIGA, that there is a requirement to deviate. So that, in summary, Chair, is the performance of the department. We will ask, as I said, after the DG has taken us through the details, Mr. Shilembe, the Deputy Director General for Oversight Branch, will then take us through some of the highlights of the performance of the entity. If you allow, Chair, I would like to then take this opportunity to invite the Acting Director General to then speak to the detail. Given the time limitations that we do have, just summarize, as to go through the details, just make sure that we are mindful of time, DG. Are you on the platform?
Yes, I am, DM.
Over
Thank
to
you very much to the Deputy Minister. I would like to greetings to the Chair, as well as the honorable members on the platform. I see that we've got the chairs of our entities as well as the management. Chair, Honorable Chair, through you, I'd like to introduce the delegation from the department that is being led by the Deputy Minister, Mapulane. It's myself, Nomgqibela Jordan Gyani, the Acting Director General. I'm also joined by DDG Shelembe. He is responsible for SOC oversight. DDG Tini Kongobeni, he's in charge of ICT infrastructure. DDG Manzini, she is in charge of administration and corporate governance, and also acting DDG Colin Mashile in charge of policy. We also then have the acting CFO. Our CFO, honorable members, left end of June. So we are in the process of filling in that vacancy. From the finance division, we've got the acting CFO, Mr. Frick Niemand. He's just recently returned from the Post Bank, and he's supported by Mr. Rebulang Soldalt. And we also have our colleagues from SPM, together with the colleagues from the Office of the Director General, as well as ministry dealing with the parliamentary program. If I can just ask if we could quickly just go through slide 3. I know that the Deputy Minister has gone into extensive overview in terms of our performance, and the documents were submitted. And owing to the issue of time, Chair, I'm just quickly going to give you a quick highlight. As the DM has alluded, that out of the 35 annual targets, we achieved 32 for the financial year. That all the results in 91% performance achievement. And against the budget allocation, we are also happy to know that we are aligned, resulting in 91.9% expenditure. We've done 100% transfers to the entities, and unfortunately, we are still sitting with unqualified audit. And but I'm happy to indicate that we've already addressed some of these. We've drafted an action plan, and I will allude to these later. The next slide, honorable members, gives us an overview in terms of where we're at. We know that we're left with about 18 months to the end of this MTS, and it is therefore important. Next slide, please. Slide 4. It is important that we're able to give an overview of our performance as a department. Slide 4, please. In terms of that, honorable members, you would then see that as far as broadband, which remains very critical, we are now having to ensure 80% population have access to the internet by 2024. We obviously had only achieved the connectivity to sites just over 900, but with this revised SA Connect phase 2 model, we are going to ensure 100%. Obviously, this is supported by the recent auctioning in terms of spectrum, and we've put in the obligations to the operators to assist us with the connectivity to schools, to health institutions, as well as critical public offices, as well as traditional offices. So coupled with that, we will then ensure that we roll out connectivity to community areas, Wi-Fi hotspots, as well as then looking at broadband to the home. We are hoping that we'll be achieving that. We've already commenced with this program in this financial year. With regards to the spectrum, this is now fully achieved in as far as our obligation under the MTSF. We had to auction the spectrum, which was then concluded. We'd like to congratulate the regulator, ICASA, in this regard, and obviously injecting the much needed money into the fiscus. And then obviously we're looking at the reduction in terms of the cost to communicate. This program is being monitored well. We have already seen a 33% reduction in as far as the cost to communication, and we're continuously wanting to improve on that. Honorable members, you would also know that we've now have a draft
new spectrum policy. It's out for public consultation. The deadline for it is this month, I think the 21st of October, and we are looking forward to the inputs for that. And with that, we are hoping that we will then be able to deploy the additional, obviously through the regulator, deploy then the additional spectrum before the end of this financial, before the end, not the financial year, my apologies, before the end of the MTSF period, we'll issue the policy directive. On the e-government, in terms of the digitization of government services, the e-government program, as you know, was revised and the strategy was approved. And now we're working with Presidency and DPSA in as far as transforming. We've identified 8 critical government departments, those are the front line, that will then be digitized in terms of the services, and we're working together with the CETA in ensuring that we roll out this program. So this is in action. And again, we're also confident that we'll be able to achieve this target by the end of the MTSF. On the digital skills and digital and future skills, unfortunately, we are facing some hurdles with regards to this. It's not necessarily that there are no training programs that are being run. It's just merely from a capacity perspective from NEMISA. If we had to account or equate in terms of the work that is being done just by the department and the entity, it's not sufficient. So therefore, we've identified critical partners to assist us with this. We will therefore be aggregating the information in as far as the digital and future skills program that is being implemented by government and its partners, and then we'll be able to provide information on that. And then with regards to the PC4IR, the Presidential Commission on 4IR, the implementation plan, strategic implementation plan has been developed and finalized, and it's currently underway. And for this year, we will be launching the AI Institute. The launch is expected to take place before the end of the calendar year, 2022. And therefore, again, we are hoping, therefore, to successfully conclude on this MTSF target. Honorable members, if you can then move to slide 5, just again to reiterate the DM's presentation, where in terms of where we're at, in terms of our targets. For the sake of time, I'm going to take it as being read. The 3 targets the DM has alluded to in terms of us not being able to achieve that relates to the delays in the broadcasting digital migration, as well as then the work that is being done under the National Strategic Plan on Gender-Based Violence Response. We had, unfortunately, it was delayed, but we do now have the framework, and we are continuously reporting to the relevant structures within government in this under this program. I would like to now take you through to slide 19, honorable members, to really focus, because we listened to the questions that have been raised by honorable members, and in order to give you assurance that in terms of the audit, we have developed an action plan responding to the 28 findings that obviously resulted in the unqualified audit opinion. And these findings, 3 of which are under HR, the SPM, the BDM project, as well as then finance in terms of the irregular as well as mismanagement of the misstatement, of the financial statements. We have put in the response action towards those. And I would like to give then the assurance to the portfolio committee that we do have this. We've actually engaged also our audit committee. We also held a workshop, honorable members, with our entities, especially the ones that have been lifted. We had a joint workshop with Sentech as well as USAASA to look and SAPO to look at in terms of the reporting on the BDM project. We know that it is quite critical that we give then the assurance that this project is being properly audited. I want to indicate that it's not a question of mismanagement of funds. The issue there relates to the performance targets or the data collection. There is a delay, honorable members, in as far as the reporting of the installations in terms of one, because what USAASA was reporting on previously was against the payment that is being done after they've received then the necessary invoices from Sentech. Sentech, on the other hand, would have had information related to the installations as it is happening on the ground. So we've agreed in terms of an action plan to ensure that all three entities, inclusive of the department, we are then able to ensure that they relate on the data collection, and as well as in terms of the close monitoring of the project, as far as the verification on terms of payment being done, and also then the verification in terms of the installments that have been done. So we are quite confident that in this financial period, we will not have then this recurring audit query in as far as the data collection or the performance information being queried. And then with regards to under HR, some of these issues relate to the challenges that we're currently still facing in as far as then the filling in of these critical vacancies, and that has resulted in the new structure, and that will then result in the delays with regards to the human resource plan. So we're hoping that we will conclude on the structure, and then we will then have the human resource plan by the end of March 2023. And then with regards to the issues related to human resource development and training, just then to indicate that we've addressed that particular issue in as far as the audit action plan, and that now we're able then to account on that properly. And then with regards to the misstatement of the financial statements, although this matter was rectified in as far as the asset register verification, but we just wanted to, going forward, we will also make sure that under the CFO, we're able then to ensure the proper recording in terms of the financial statements. And then lastly, on the irregular expenditure, we are keeping a registry of the irregular, and consequence managements have been taken. Just to give assurance once again to the honorable members, we have also instituted consequence management by the department. Quite a number of officials have also action have been taken. In the area with regards to security management, we've taken consequence management against those employees who failed to undertake the security vetting. And with regards to the losses, there were 3 cases of stolen laptops, and unfortunately those colleagues would had to pay back the money to the department. And equally there's a current case underway on a stolen cell phone. So the investigations are taking place under the loss control committee, and the recommendations in terms of then the actions will be taken. And then under the human resources administration, there were no incidents except for the issues of the officials failing to then conclude on their performance agreements or submission of their performance assessment. And we've taken therefore the consequence management against the 14 officials there, as well as then the 4 supervisors in that matter. Under ethics management, there are no consequence management procedures for the Q1 chain. Just want to quickly then move to the next slide. I've gone into details with regards to these audit findings. We'll now move to finances. Under finances, next slide, please. Under the next slide, please. In terms of the performance of the, I did indicate that we were at 91.9 performance, financial performance. We've done all the transfers to the entities as well as our international obligations. The only goods and services funding that we had to send back relates to the the presidential employment stimulus that the DM alluded to. I'm happy to indicate that we had requested then for the rollover of these funds. We received the approval, and now the program is underway, and we have already are going to be commencing with then the deployment in terms of Wi-Fi to the home. Next slide, please. This then gives us the summary with regards to the program. I just want to highlight that the other area in terms of the underspending related to the payment of capital assets, and this was due to the non-procurement of the integrated workflow. I also want to indicate that to the department also, the delays was also based on the fact that we are migrating, and the challenges with regards to procurement from a SETA perspective has led to this. The issue with regards to our IT is also currently under assessment for this financial year by our audit committee, the audit team. So we will then be able to have a full view in as far as where we're at in as far as the IT systems in the department. Chair and also DM, I think we've now probably come to the end of our presentation. I'd like to hand back to the Deputy Minister, and then maybe for DDG Shelembe to take us through the overview of the entities. Thank you.
Thank you very much, ADG. Mr. Shelembe, you can come in now. Can we just flight the consolidated report on the entities?
Thank you very much, DM, and greetings to the chairperson and the honorable members, as well as the chairpersons and the executives from the entities and the colleagues in the platform. I am going to be taking the committee through the presentation of the entities' annual reports for the year ending 2021-2022. We are presenting 10 entities at this stage, with already the explanation that the two entities, Postbank and MDDA, still have to table their report, which will then be dealt with at a later stage. If I were to start off with the FPB, the FPB had 15 targets for the year, and they achieved 10 out of the 15 and did not achieve 5 targets. This resulted in a 66.7% achievement and 33.3% non-achievement. If I quickly run through their cumulative financial performance, they have a revenue of 110 million and an expenditure of 106.7 million, with the resulting cash surplus at the end of the year of 26.5 million. Chairperson, there are reasons presented by FPB for the non-achievement of the target, as well as the targets themselves that were not achieved. The FPB did not achieve targets relating to production of content classification index, which was supposed to indicate baseline confidence level. They also did not achieve the implementation of the brand repositioning strategy. They also did not achieve the dissemination of the findings of the 2019-20 convergence survey. They also were meant to achieve the clean audit with no findings whatsoever. And the implementation of the change management project, phase 2 and phase 3, as well as 95% implementation of the ICT plan. They have given the reasons for non-achievement of these targets as follows, Chairperson. One was the failure to find a suitable service provider in the niche and specialized market. And 2 was the brand repositioning strategy that could not be implemented due to the delays in the finalization of the corporate identity guidelines that has been. And 3, one abstract that was submitted to one public and a clause restricting saying research from being published with different publishers. And phase 2 and phase 3 change management not being implemented due to the inability to secure accession with for the service provider, as well as the entity delivering 41 or 44 of the planned in the entity plan, constituting 93% due to delays in obtaining the program of the service provider and business. The FPB indeed has been indicated by the AG, next slide please, did achieve a clean audit from the AGSA in the year ending March 22. This implies that there were no material restatements in the financial statement, as well as non-compliance with all the relevant legislation and performance objectives. Next slide. I'm then going to move on to ICASA. Apologies for the faint showing the chairperson on the ICASA slide, but I'm going to go through the details there. The details are as follows. ICASA had 53 targets, of which they achieved 46 and did not achieve 7, resulting in 86.8% achievement and 13.2% non-achievement. The 7 not achieved targets relate to 1, they had intended to achieve 85% of the electronic document and record management system rollout plan, but this was not achieved, which was meant to sign the performance contract on the electronic EDRMS project. However, this was not accepted since they were already sponsors of the project. The second one relates to a service provider. SABP audits completed, and SABP, which is the sole provider of the service, was not compliant with SPAR at the time. As a result, the ICASA could not contract them for the audit. The next target related to level 4 of assurance provider. This was recommended by the Auditor Ethics and Disclosure Committee. The use of the panel of consultants has been considered and approved by ICASA to augment the division's capacity and ascertain a broader audit coverage, especially on regulatory work conducted by the authority. They also had a target of 1 draft regulations document on subscription television market developed. These were produced and considered by council, but however, given the changes in the market dynamics, further consideration is required on the data only the draft regulations and final documents are human. The committee will workshop the council and the findings of the inquiry on Q1 of 2022. The next target related to 30% of the network performance.
Sorry for interruption, Mr. Slem. Are you able to speak closer to the mic? I'm not sure whether I'm the only one who can pick up your voice. The presentation is reflected on the screen. Maybe you can just read it from the screen. Yeah, but I was not picking you up. Sorry, Chair. I don't know whether it's only me, but I was missing.
But I can hear you.
Also me, DM.
My apologies. I am very close to my screen. I wonder what the problem might be, but I'm going to try and raise my voice maybe. I hope it is a lot louder now and clearer. Hopefully.
Much clearer now.
Thank you very much, DM. So the next target was the 40% of the network performance management system developed. And the bid was advertised as a multi-modular compliance system in which network performance management system is one of the modules of the proposed system. The bid evaluation committee recommended bidder has proposed two pricing models, which are revenue sharing and upfront purchase. After supply chain engagement with the National Treasury, the National Treasury was not in support of the revenue sharing model, and the upfront purchase bid price was much higher than the project budget. The next target had to do with the 4 fixed spectrum monitoring sites around Paris, Central Astronomy Advantage Area Commission. The bid adjudication committee requested verification of the bidder's reference letter. However, there was a delay in receiving responses from some of the bidders referees. Consequently, this resulted in delays with the appointment of service provider and contract finalization. The last target that was not achieved relates to the draft regulations document on rapid development as required under Chapter 4 of the ECA, which was meant to be completed. This target was not achieved due to the delay in the finalization of the policy and policy direction contemplated in the Chapter 4 of the ECA. In terms of the ECA, the regulations must follow only after promulgation of the policy and policy direction. So these are the 7 areas which were not achieved and the reasons for their non-achievement. The next slide then takes us to the audit findings on ICASA. I am not going to go into detail on the audit findings as the AG has already presented a detailed findings or a detailed account of the audit reports for all the entities that have been audited already. But I will just highlight that the ICASA obtained an unqualified audit opinion with an emphasis of matter. The emphasis of matter relates to material impairment of 87.7 million of the National Revenue Fund impaired receivable from non-exchange transactions because of potential irrecoverable receivables from non-exchange transactions. There were also audits of compliance with legislation where it was found that the entity did not take effective and appropriate steps to prevent irregular expenditure of 33 million as required, and that payments were not made within 30 days or an agreed period after receipt of an invoice as required. There were also identified internal control deficiencies raised by the AG relating to management controls which were not always effective to ensure oversight, monitoring, and review of compliance with laws and regulations. Management did not implement adequate controls to prevent and detect non-compliance with laws and regulations, which resulted in irregular expenditure. Management did not also implement adequate controls to ensure that payments to suppliers are made within 30 days after receipt of an invoice, and that management did not implement adequate controls to ensure that the submitted annual financial statements are free from material misstatements. The next slide takes us to NEMISA. NEMISA had 22 targets to achieve for the year, achieving 21 out of 22 and not achieving one thereof, resulting in a 95% achievement rate and a 5% non-achievement rate. From a financial performance point of view, they received a revenue of 121.4 million and an expenditure of 107.8 million, leaving a surplus of 13.5 million. In that 13.5 million, there is a 7.3 million of the surplus, which relates to the funds which were received from the Department of Military Veterans for digital skills training of military vets, and the expenditure will be incurred in this financial year. The highlights on the achievements for NEMISA. For the year under review, NEMISA achieved all 5 skills development, youth and women empowerment targets. A summarized performance is as follows. The target to retain 90% of the intent in the internship were achieved. 74,443 people were trained in physical literacy versus 60,000 people which were to be trained in terms of the plan. That constituting 14,543 overachievement within the plan target. 240 learners completed their annual training in creative media courses versus the target of 120. So they doubled the target of the learners in the field. 2,988 citizens were also trained in specialist technology courses, which was 238 more than the annual target of 2,750. Furthermore, 870 people were reported to have attended the digital transformation advocate and awareness campaign. This is 70 more than the annual target of 800. The next slide takes us to the audit findings for NEMISA. And again, as the AG has taken us through the audit reports for entity, I just need to highlight that NEMISA received an unqualified audit opinion for the 5th year in a row, but auditors reported material findings on compliance with legislation regarding the preparation of annual financial statements. There were also internal control deficiencies raised by the auditor. These relate to the lack of adequate oversight responsibility regarding the preparation of the annual financial statement, annual performance report, and compliance, as well as related internal control, which resulted in material misstatements in the financial statement and the annual performance report, which were free from material misstatements. Also, internal control deficiencies relating to inadequately implemented proper record keeping in a timely manner to ensure that complete, relevant, and accurate information is accessible and available to support financial and performance reporting. Next slide, please. The next slide takes us to USAASA's annual performance. USAASA had 6 targets, achieved 3, and did not achieve 3, giving it a 50-50% split of achievement versus non-achievement. USAASA had the revenue of 185.4 million spent only 81.7 million, and with the remaining surplus of 103.7 million. The USAF targets that have not been achieved, 100% of valid invoices paid within 30 days from the date of receipt. The reduction of wasteful and fruitless expenditure to 20% of 389,000. USAASA's annual financial statement at 2019-2020 incrementally from baseline of 2019 by 2022. And they also did not achieve the target of reduction of irregular expenditure by to 15% of the current 32 million, which is based on the 2019-2020 incremental, again from the baseline of 2019 by 2024. Non-achievement was attributed to one, the delays in the analysis of classification and investigation of irregular expenditure due to capacity constraints. They also cited that the departure of the acting CFO led to delays in the appointment of an authorized official to release payment on the banking payment. The findings for USAASA, USAASA attained a qualified audit opinion with an emphasis of merit. The basis for qualification relates to receivables from exchange transaction. Emphasis of matter relates to restatement of corresponding figure. There were audits of compliance with legislation issues relating to the annual financial statements not submitted on time and in the prescribed financial reporting requirement. Expenditure management as well. Effective steps were not taken to prevent fruitless and wasteful expenditure, amounting to 140,000, and irregular expenditure amounting to 17.4 million. No consequence management against officials who incurred irregular expenditure and fruitless and wasteful expenditure. These were the findings of the AG. Let's continue with the findings of the auditors. There were also findings relating to internal control deficiencies. They relate to the fact that management did not effectively implement the auditation plan. Management did not implement proper record keeping, ensuring that complete, relevant, and accurate information that staff get or advances is accessible and available to support financial statements. Management did not develop and implement a compliance checklist to monitor compliance with legislation, including procurement and legislation. The entity did not also implement adequate consequence management processes for transgression against applicable policies, laws, and regulations. Investigations were not undertaken for all instances of irregular, fruitless, and wasteful expenditure incurred in the prior year. The next slide takes us to USAF. The Universal Service and Access Fund had 12 targets, of which it achieved 6 and did not achieve 6, also giving it a 50-50 split in terms of percentage achievement versus non-achievement. The USAF has revenue amounting to 1.2 billion, of which 40 million was spent. and 1.164 billion still remains as a surplus. In terms of the performance information, the targets that have not been achieved relating to the 810,000 subsidized set-top box installation, which were meant to be coordinated and monitored in 4 provinces of Free State, Northern Cape, North-West, and Zimbabwe. The second one is 2,266,474 DCT subsidized digital television installation coordinated and monitored. Third one relates to 289,058 DTT subsidized digital television installation coordinated and monitored. The fourth one relates to the provision of broadband internet connectivity sites to 280 sites to identify 2 local municipalities. The fifth one relates to the reduction of wasted and fruitless expenditure by 20% of the identified fruitless and wasteful expenditure rates. And the sixth and final one was the reduction of irregular expenditure by 15% of the identified irregular expenditure rates. The reasons for non-achievement are attributed to 1, delays in the analysis, classification, and investigation of irregular expenditure due to capacity constraints, the suspension of installation of digital television through a voucher system, pending the finalization of the delivery model of the delivery. Thank you. The next slide, please. USAF audit findings. USAF obtained a disclaimer of audit opinion, and the basis for the disclaimer is that the auditors were unable to obtain sufficient audit evidence for the following. That management had properly accounted for inventory for the current and previous year, as the public entity did not maintain a register of inventory held by third parties that could be reconciled to the financial statement. There was also no appropriate evidence that broadcasting digital migration project expenses were properly accounted for due to the status of accounting record. The statements of the corresponding amounts for DDM expenses and provisions in the financial statement, there was also no appropriate evidence. There was no evidence for payables from non-exchange transactions due to the status of accounting records. And finally, there was no appropriate audit evidence for administrative expenses due to status of accounting records. There were also
my apologies for the interjection. Can we try and summarize so that we save a bit more time for the engagement? I think we have circulated the document. If we can just summarize the key issues coming out of the presentation. I know it's a long one, but let's just try and summarize to save time.
Thank you, DM. So audit findings then related to the emphasis of matter or uncertainty relating to the future outcome of litigation, as USAASA is a defendant in a number of lawsuits. Then there were also issues around the audit of the annual performance report, the audit of compliance with legislation, as well as internal control of the agencies that were raised by the auditor. Then we go to Sentech. Sentech had 11 targets achieved 7 and did not achieve 4, resulting in 64% achievement and 36% non-achievement. The revenue for Sentech is 1.3 billion, expenditure of 1.173 billion, and the surplus profit of 119.3 million. Here are the reasons for the non-performance of the four targets which were not achieved. I am not going to go through the details as I need to try and figure out the presentation, but they had to get revenue growth of 1.257 billion, only achieved 1.237 billion. And they had to connect 200 sites, but only connected 9 sites. 810,000 set-top boxes had to be installed, but only 170,000 set-top boxes were installed. And they had targeted a clean audit to be achieved, but only achieved an unqualified audit opinion. So with respect to the audit findings, on the next slide, please. With respect to the audit findings, Sentech obtained an unqualified opinion with emphasis of matter. The emphasis of matters relates to expected credit losses of 82 million versus 74 million in the previous financial year. Note 9 in the consolidated and separate annual financial statement. And these expected losses were raised on the trade debtors balance, and more than 80% of the expected credit loss pertained to community platform. There was also another emphasis of matter relating to the merger between Sentech, SOC Limited, and BDI. But this one has the potential of embodying competitiveness within the market of the core competence through benefits from economies of scale, increased market share, more efficient resource allocation, larger asset base, increased offering, and instantaneously adopted experts in knowledge. There were findings relating to audit of compliance with legislation, as well as internal control deficiencies raised by the AG. I'm not going to go into detail. The next entity then is the SABC. SABC had 53 targets, of which 43% were achieved and 56% not achieved. They made a revenue of 5.068 billion against an expenditure of 5.3 billion, with a net loss of 258.5 million. The non-performance and underlying reasons are listed in the presentation there, but they are in the strategic pillars of financial sustainability, content and platform, the digital pillar, human resources, governance, and partnerships. Next slide, please. The audit findings for the SABC obtained a qualified audit opinion with emphasis of merit, and the basis for qualification when auditors were not able to obtain sufficient appropriate audit evidence that the irregular expenditure for the previous years had been completely accounted for, due to the public entity not implementing adequate procedures in the past to identify and record all instances of irregular expenditure. There were also cases of there were cases of emphasis of matter relating to the going concern. The SABC has incurred a net loss of 201 million versus 530 million in 2021. A significant judgment relating to a defined benefit asset. The SABC has a defined benefit pension plan of 1.6 billion versus 1.7 billion in the previous year. Also, with respect to TV licenses, SABC has recognized license fees of 815 million, an increase against 788 million in the previous year. Yet they have built out 4.4 billion for license fees, which means the public entity has not recognized TV license fees to the amount of 3.6 billion. There were also significant uncertainty in that the public entity is a defendant in a number of lawsuits. The ultimate outcome of these matters could not be determined at the time. Next slide, please. There were also audit findings relating to the performance report. Next slide, please. Relating to the performance report, as well as audit of compliance with legislation and internal control deficiencies which were raised by the auditor. I think I'm moving a little bit faster than the person is assisting me with the slide. Shall we move on to SAPO on slide number 19? SAPO had 17 targets for the year and achieved 3 and did not achieve 14. Position, are you winning with the slideshow? I'm on slide number 19, SAPO. Thank you very much. SAPO's cumulative financial performance is a revenue of 3.8 billion and expenditure of 6.2 billion, and the loss for the year of 2.2 billion. The highlights to make here is that SAPO's performance worsened compared to the prior year's performance of 29%. The non-achievement was attributed to different reasons, ranging from lack of funding to the challenges with the availability of the tools of change. This also impacted on the entity's ability to implement corrective measures for prudence in audit conduct. There is a growing concern issue, SAPO liquidity challenges as a result of losses for 2021-2022 financial year, and the 2.2 billion for the year. Implementation of the Post Office of Tomorrow strategy is expected to improve the financial performance, but it still requires to be supported with a funding to be realized. Financial assistance is required to settle the historical debt and implement the Post Office of Tomorrow. The next slide is slide number 20, which talks about the audit findings for the Post Office. I'm not going to go through the long list of the findings, but on this slide, SAPO obtained a disclaimer of the audit of with emphasis of matter. The basis for the disclaimer is summarized below. relating to going concern matter, and also the inability of the AG to obtain sufficient appropriate audit evidence that management has properly accounted for the following in the financial statement. And the auditor was unable to confirm the disclosed amount by alternative means and to determine whether any adjustments were necessary to the disclosed amount. These items related to funds collected on behalf of third parties, trade and other receivables, payable to Postbank, trade and other payable, financial service revenue, other operating expenses, and fruitless and wasteful expenditure. And the next slide continues the basis for the disclaimer, which is the failure to recognize the following items disclosed in the financial statements according to the requirements of the applicable mandatory accounting standard. This relates to the right of use assets and lease liability, cash and cash equivalent, understatement and overstatement, related parties resulting in an understatement, accumulated loss, and comparative figures. There were also matters of emphasis relating to material impairment, material losses due to criminal conduct, and contingent liability as the Suffolk Group is a defendant in a number of those things. The findings continue on slide 22, but I'm not going to go into detail now, but they relate to the audit of the annual performance report and the audit of compliance with legislation. Then I move on to CETA. CETA had, sorry, let's go back to slide number 23 quickly. CETA had 19 targets, of which 11 were achieved and 8 were not achieved, giving a split of 58% and 42% respectively. CETA made a revenue of 6.022 billion and a total expenditure of 5.11 billion with a surplus of 5.39 million. CETA has managed to achieve 11 out of the 19 indicated, and this has resulted in a preliminary annual performance result of 58%. This is a drop when compared to the 60% and 72.2% of the financial year. The company continues to be financially sustainable. The financial performance of the entity has improved when compared to the previous year, despite some of the challenges it has faced during the financial period. CETA's audit findings in the next slide, please. CETA received qualified audit opinion with an emphasis of measure. Next slide, please. The areas of qualification relate to revenue, cost of sale, operating expenses, property, plant and equipment, intangible assets, trade and other receivables, income tax expense, capital and operational commitments, and cash flow from operating activity. There were also matters of emphasis relating to the restatement of corresponding figures, as well as the material losses in the disposal of assets. Next slide. The CETA audit findings continue. There were also issues with respect to audit of compliance with legislation, as well as internal control deficiencies which were raised by the AG. I am not going to go into detail of those as they are presented in the presentation. Then finally, Chairperson, we go to ZADNA. There is slide number 26. ZADNA had 14 targets, achieved 11 and did not achieve 3, resulting in 79% achievement and 21% non-achievement. ZADNA had the revenue of 20.126 million, with an expenditure of 17.039 million, resulting in a surplus of 2.9 million. The targets that were not achieved relate to the promulgation of the registry and registrar license framework, the registration of the 25,000 domain names through the ZACR in Q1, and increasing the namespace by 0.25% through the company's intellectual property promotion platform. The non-achievement is as a result of the CIPC system that was reported to be down on numerous occasions. This resulted in customers not being able to access the minimum registration. With regards to the licensing framework, the process is at an advanced stage. The department has sought the opinion from the state law advisor, and what is remaining is the process that will allow them to start the process of the publication or of public consultation. ZADNA also received a clean audit opinion for the year in question, which implies that there were no material misstatements in the financial statement, as well as non-compliance with all relevant legislation and performance objectives. I think that is it, Chairperson. Thank you very much.
Thank you very much, DDG Shilembe and the Acting Director General. That brings us to the end of our presentation, Chairperson. We thank you very much. Our apologies for the time. As you can see, it was a bit long. Over to you.
Thank you, dear. The team. Honorable Dr. Basop, I see your hand.
Thank you very much, Honorable Chairperson, and honorable members, the Deputy Minister, and the officials that are here. Good day. In appreciating the presentations,
you're on point. Thank you, Honorable Dr. Basop. I thought you wanted to raise an issue of how we proceed, but I take it that you are already indicating that you would want to get to a discussion now, and then we take CIS later.
In appreciating the, Chair, is the time for
you can proceed. Yeah, you can then proceed, because I don't want to disrupt your thought process.
Okay.
I would then also note Honorable Ku's hand and all other members who would want to speak. So Honorable Olapanat, Honorable Gumbu, you are noted. Proceed, Honorable Dr. Basu.
Thank you, Chair. I was saying in appreciating the presentations, Chair, that were very long, perhaps the general observation in all of them is that the targets that were set have not been met. And though the reasons were given as to why they were not met, but the reality, at the end of the day, they resulted in the underspending of the department, or kind of the organizations that have been mentioned here. But again, what is not coming up is a remedial action in future, how to ensure that this is not happening. because you can't set targets, but at the end of the day, you don't meet them, because as I'm saying, the impact in your budget. Then the second observation, Chair, is that in terms of the figures that are given here, that this was the revenue, this is the spending and all of this. In some institutions, they don't tally. Perhaps that need to be explained. Notable, I think is the first is FPP. If you look at the money that was allocated and used, then those numbers that don't tally. Then the third point, Chair, there are those institutions that have performed even less than 50%. My concrete proposal around that, perhaps given that we don't have enough time here, we can meet them separately and find out exactly where is the problem. Now, coming to SABC, if you look at the target was 53, achieved 23, and not achieved 20. But when you add 23 and 20, that gives you 43. What happened with 10? That needs to be explained as well. Then the other one is SAPO. On SAPO, the revenue was 3.8, but the expenditure 6.2. Where did you get another money? I mean, that is not being explained here. All what I'm saying, Chair, you have that situation in terms of the presentation where you have figures they don't tally as much as the reasons are being given, but at the same time, Chair, this is not well. Then the last point, Chair, on SAPO, the audit opinion of a disclaimer, in summary, it tells you that the information that was requested was not available. Hence, AG's office came up with this kind of audit outcome, a disclaimer, which means there was no information. That again need to be explained why the information that was needed was not available. I think, Chair, briefly, man, those are the areas that I've identified. Thank you very much, Chair.
Thank you, Honorable Tapasop. Honorable Machozi will be followed by Honorable Kumbu.
Thank you, Chair. I don't know if maybe I will get the response in terms of the budget, mainly on the SABC. I've seen that they've only achieved less than 50% of the set targets. So what I would like to know is how much they've spent already on of their budget, because they've got a net loss already of 201 million, which does not make sense. That how did they lose how did they have a loss of 2.1 million, and at the same time they've not achieved at least even 70% of their target, and how many they've spent already on their budgeted funds for the targets that they set for themselves. So if we can get that clarity first, Chair, and maybe also to raise a concern that Honorable Pasopo has raised already of entities not achieving their targets. It's very alarming. One would even think that maybe there is a leadership crisis in these entities, because what would make them not to achieve their targets that they've set themselves? And going to SAPO, it's a mess. SAPO, the government must just decide what happens with SAPO. It's either it starts afresh or what happens. But with the other ones, the ZADNAs and what they've achieved, we see that, but they are not reaching the total targeted performance that they've set for themselves. So what might be the problem? But mainly on the SABC, Chair, the funds that they've used already, where are they? Will they still be able to look at the other targets and maybe finish them off. What is going to happen? Because now they've got a net loss of 201 million. It's really not making.
I take it that Honorable Majosi, you would have made your point because you've now muted.
Yes, Chair. Yes, I said thank you, Chairperson. Maybe you didn't hear me.
No, we didn't. Thank you. As I said, Honorable Kumbu would follow. Then we have Honorable Kolabana. Then Honorable Potter.
Well, thank you, Chair. Now, let me start by appreciating the work that was done by the department, particularly in achieving 91% of the targets, the 100% transfer paid to the entities, and that they are consequence management. Now, coming to the entities, Chair, regression on the performance of most entities is a worrying factor, Chair. I'm saying this because now, if you check on Sentech's involvement in the BDM program has made them to regress into a unqualified audit. Could this be an indication of capacity issues to execute this project, or what? Lastly, Chair, on Post Bank. To me, Post Bank is a springboard for a state bank. When with a disclaimer, what a guarantee will society have in its whether it will be sustainable and to provide the much needed services to the people of South Africa, Chair. Thank you.
Thank you, Honorable Kumbu. Like I said, Honorable Kolabanat would then follow. Honorable Kolabanat, I recognize.
Thank you, Chairperson. Look, starting with the MDDA, and we have many of the outcomes replicated in other areas, but we're talking massive underperformance of 20 million. Yet when these entities perform badly, I want to hear from the management of that entity what they've done about it and who's to blame. Because as far as I can see, the CEO is to blame and the CFO jointly. So we need explanations from them. I mean, 24 million under collection and revenue collection. I can't imagine how they managed to do things like are reported. Irregular expenditure of 49 million. The Auditor-General just goes on and on about the catastrophe. Financial statements. Now, this is something that is repeated by the Auditor-General in the majority of these entities. There were a couple of notable exceptions, but the quote is, the financial statements submitted for auditing were not fully prepared in accordance with the prescribed financial reporting framework, et cetera, according to the PMFA. Now, all of these entities have their CFOs, all of whom earn huge money, and I don't understand how it is even vaguely possible that so many years after democracy, we still have entities who don't know how to put together their financials. It's just extraordinary. And I think, frankly, heads have got to start rolling. And then you have the usual, management did not implement proper record keeping. Management did not prepare regular, accurate and complete financial and performance reports. So then we go on to the department itself. And, you know, it strikes me that in many instances these days, departments of all of these divisions, shall I say, they set targets that they know they can reach. Very seldom is it they don't reach the targets. And actually, when it comes down to the Auditor-General checking the targets, there's virtually no information to corroborate the claims made that they achieved 90% or some wonderful percentage of the target. Here we go. I was unable to sufficiently appropriate audit evidence for the achievement of 29,230 subsidized digital television installations coordinated and monitored in 4 provinces. So if there's no record of the figures, if there's nothing that can be audited, how do we know that's true? We don't. The point is, as the gentleman who represented the Auditor-General said to us earlier, if it's not audited internally, externally by an external auditor, we shouldn't buy it. And of course, the Auditor-General has not bought it. Auditor-General identified material misstatements in the annual performance report. Now, a lot of these misstatements, massive material misstatements, in other words, fabrications, lies, they go there, the Auditor-General says, no, look what you've done. Oh, whoops, they go and correct it. Why are they making those errors in the first place? I fail to understand. Again, highly paid financial experts, and they make errors. They're using the Auditor-General as some sort of kindergarten to pick up their errors. I find it absolutely extraordinary and inexcusable, frankly. And again, not prepared in accordance with the PMFA. Couldn't find adequate internal control measures, couldn't find all the information that we all know the Auditor-General will need. Going on to ICASA, yeah, look, ICASA seemed initially to do okay. However, let's have a look here. There was an issue with the bid adjudication committee. And the bid adjudication committee had to obtain reference letters from someone who was a relevant bidder. I'd like to know if that matter was cleared up. Was that service provider appointed, and did they receive the relevant letters necessary? Moving on to, yeah. Still with ICASA, please explain to me impaired receivables from non-exchange transactions, 87 million rands worth. I'd like an explanation for that, please, and what that was about. Again, there are issues about management. Did not take effective and appropriate steps to prevent irregular expenditure, 33 million in irregular expenditure. Payments not made within 30 days. I can't tell you how many calls I have from service providers around the country, but they haven't paid me. My business is going to go bankrupt. What do I do? I mean, not for a government entity not to pay their service providers within 30 days is inexcusable. It destroys lives. Now, management did not implement adequate controls to prevent and detect non-compliance with laws and regulations. That is throughout. Inexcusable. Effective and appropriate steps not taken to prevent irregular expenditure of the 33 million. Basically, not prepared in accordance with the PMFA regulations, and the controls are just not there. So that's a huge issue. Now we come to my issue of the moment, the South African Post Office. Now, I would like to know from the management sitting on this meeting, the Board of Trustees at Medipos, they tried for 2 years to get the South African Post Office to pay over what they were taking from each salary slip. And they were taking from the salary slip the contributions to the medical aid, the VAT, UIF, PAYE, and pension fund. And instead of paying it to the medical aid, pension fund, et cetera, VAT, they just took that money and it's gone elsewhere. Now, from the Auditor-General side, and in that this has been going on for some years, I've not seen any reference to this at any stage. But now the Post Office has racked up apparently some 700 million rand in terms of medical aid contributions alone. Certainly there are a certain number of members who have taken them to court, but I've gone to the Hawks and I've reported this, which I see as criminal fraud, and they will investigate nationally, which they are currently doing. But what I'd like to know from the current management is why it is that the trustees of the medical aid, 5 of whom are appointed by the Post Office, were removed from their positions on Friday, just removed, summarily removed. Is it because you are now being held to account? because all over the country, there are people who are receiving threatening letters saying, one woman, 94, has Alzheimer's, daughter receives a letter, you must pay us 190,000 Rand, which of course she doesn't have. The payment's already been taken off monthly for 40 years, but suddenly it's evaporated. So I would like to know, and I mean, these letters are countless. Cancer survivors being told they may not have chemotherapy because that money has not been paid over. So the medical aid has sent out these letters. I'm now told, well, actually the letters, quite rightly so, should have gone through to the management. I want to know who's responsible. Who took the decision to take that money instead of doing what is legally needed, and that is paying over to the medical aid and other entities. When these people retire, they're going to find they have no pension. There's no UIF. SARS are going to be after them for the VAT because there has been this bizarre activity going on where it's just been creamed off rather than paid through to their entities. So I want someone on here to explain, please, why it's been done and on whose authority that has been done, because it's an extraordinary situation, You understand, obviously the post office is bankrupt. And now when people look, for example, at the medical aid trying to say, pay over the 60 million that the sheriff is about to attach, you simply remove them. I mean, sorry, but you actually can't hide this kind of behavior. Total liabilities, what are we looking at here? 4 billion. You're bankrupt, let's face it. So why managers are still in their positions, I don't know. But what I would like to know is, has the management received any increase in their salaries for this year, for the current year? I'd like to know that very much, considering what's happening there. It goes, I'm sure you've read, I mean, not the little brief summary we were given, but in the full audit outcomes by the Auditor-General, unable to obtain sufficient appropriate audit evidence is a sentence that is used over and over and over and over. It's as though there's nobody managing anything and all they're doing is what? Taking their salaries. I'm not sure what you're actually doing. Unable to obtain sufficient appropriate evidence over and over for unclear controlled accounts and other receivables into billions of rands. There is something extraordinarily fishy going on here. And well, I'm hoping the Hawks will look into it and find out who's behind it. And they need to find out where this money has gone as opposed to going where it should have gone. So the post office is in a catastrophic state. And the people who've worked there and dedicated their lives to the post office are the ones who are being punished for having worked so hard. I think it's a shameful, shameful, shameful situation. I'm not going to go through, I've got pages and pages and pages of what the Auditor-General had to say, and effective steps not taken, inappropriate, unable to pin down the information, management has made it impossible, etc. It just goes on and on and on for page after page. And yet a brief note by the department, frankly, wasn't sufficient to highlight the catastrophe that is the post office. So there we go. I mean, to say that even you've achieved 3 of your targets under such catastrophic results is just a joke. It cannot be. So the post office is something which really needs a huge shakeup. And frankly, to do what you did in removing those 5 trustees from the medical aid, the 5 that are appointed by the post office, and there are 5 who are elected by the members, to remove them because they were doing their job is iniquitous, absolutely iniquitous. I would like you to explain that. So let's go on to the Film and Publications Board. Accumulated surplus of 46 million, and assets exceed the liabilities. Well, hang on, what have we got? It looks like the finances have improved. They have cut their expenses, and and improve the amount of money in the bank. No fruitless and wasteful expenditure. That's got to be one of the good outcomes here today. But there are a very strange amount here. I'd like an explanation for. It's 2.8 million rand that was paid to former executives when they left. Do you give them bonuses when they leave? What is the situation there? Investigation concluded that it was not fruitless and wasteful expenditure and should be written off. So I would like, I don't know who did the investigation, probably an internal investigation by the people who did it, but I'd like to know where that 2.8 million went and why. We need an explanation there. Now, you did have a couple of targets not achieved, but I think the explanations given and were reasonable. I didn't have a huge issue with that. You did achieve the majority of your targets. So clean audit opinion, I think we can move on. CETA, qualified opinion. I think what we need an explanation from the management is why, again, the Auditor-General was unable to obtain sufficient appropriate audit evidence to substantiate, for example, the recorded cost of sales transactions, the simplest of record keeping, not there. Unable to confirm the cost of sales by alternative means, just not there. Overstatement of revenue by 99 million. How does someone overstate the revenue by 99 million? I can't believe that's not intentional. I mean, that is one enormous mistake if it was made as such. Unable to confirm the cost of sales by alternative means, consequently unable to determine whether any adjustments were necessary to cost of sales stated at 3.938 million. Explain why. I mean, how is it possible that the Auditor-General can't track it down? Operating expense transactions were recorded in the incorrect financial year. How is that possible? How do you enter something in the incorrect financial year? I don't know who's doing your books, but I find it extraordinary, resulting in the overstatement of operating expenses by 134 million. This is not 120 rand or 134 million. Nobody noticed. Unable to determine the correct carrying amount of property, plant, and equipment stated at 1.126 million. It goes on. Unable, incorrect amounts relating to overstatement of trade and other receivables of 165 million. Whoops. What are you doing? It's inexcusable to have this kind of shoddy accounting, and to think that you presented it to the Auditor-General. I would be hanging my head in shame. Cash flow statements. Cash paid to suppliers and employees was overstated by 253 million rand. Leaves me speechless. Material losses of 154 million incurred as a result of losses on disposal of assets. Effective and appropriate steps not taken to prevent irregular expenditure, 285 million in irregular expenditure, and again, fruitless and wasteful, ineffective steps, so they threw away 3.7 million. I need to remind everybody on this meeting, this is taxpayers' money. It's not your private money, and it's not your private bank to throw around. This is taxpayers' money. And someone has to answer for this kind of nonsense in departments. Look, the .za domain name authority, I think did very well. There were no issues, really a couple not achieved, but it's nothing to write home about. Clean audit opinion. So I think we can move on to Sentech. Sentech, not so marvelous. Certain underlying reasons for certain things. It was a clean audit. There were some findings, and the emphasis of matter, for example, expected credit losses of 82 million rand, which is actually worse than it was in the previous year. So that's not looking marvelous. It should be the other way around. And the annual financial statements submitted for auditing, not prepared in the correct format. Again, how is this even remotely possible? The auditors identified certain misstatements, again, material misstatements, which you had to go back and correct, which tells me your financial systems are not necessarily working. So, yeah, look, there were investigations into 2 staff members who I gather stole from the entity, and we're now talking Sentech, sorry. Can you tell me what has been the outcome of that? I know it started in November 2019, but it looks like March this year, the criminal proceedings were ongoing. So can you fill me in on what's happened there? Moving on, broadband, of course, hasn't presented. NEMISA, not a clean audit, but most of the targets achieved. So, yeah, again, not prepared properly. Could someone please show your financial officers how to prepare the financial records? It's just extraordinary. It has an accumulated surplus of 18 million, and the assets exceed the liabilities. So it's not looking bad at all. Only 1 target not achieved. So I think we can probably move on there. Audit findings. Look, in many instances, they have the same couple of sentences which management needs to focus on. Lack of adequate oversight responsibility regarding the preparation of the financials. And that is a big one. I mean, your CFO is supposed to oversee the preparation of the annual financial statements, and it's just not happening, not in any of these entities. So let's move on then to USAASA, USAASA, I presume USAASA, I don't know how to say it, and USAF. Look, USAF has a lot of didn't achieve the 2,266,474 installations, didn't achieve a reduction in wasteful and fruitless expenditure, didn't achieve. There are a lot of targets it did not achieve. I think there are issues here. They're not as bad, perhaps, as we've seen in other of the entities. Audit findings, disclaimer of audit opinion. Wow. They couldn't find relevant audit evidence. If you can't provide the evidence, the accountants, the Auditor-General's office will just say it's not there. So are you hiding it, or are you too incompetent to show it? I don't know. So people must come on and explain to us what the situation is there. Moving down, again, no consequence management against officials who incurred irregular expenditure of 17 million rand. It's as though 17 million rand means absolutely nothing to people working in government entities. It's just extraordinary. Yeah.
Honorable Kalapad.
I beg your pardon?
I'm saying, is that your concluding point that you're moving to?
Okay, I've got a couple more. I'm actually heading near the end now, believe it or not.
Please do.
Yeah, I will do. I absolutely need to talk about the SABC now. SABC, 2.8 billion in irregular, fruitless and wasteful expenditure with a net loss of 201 million. How on earth? It stuns me when one has a couple of million in irregular and fruitless and wasteful expenditure. 2.8 billion is deliberate. I can't put it any other way. Financial statements not prepared according to the PMFA. No evidence that steps have been taken against the officials implicated in massive irregular expenditure. Security contracts not given to the bidder who won. No, we're given to someone else. And that was 185 million rand contract? Did that go to somebody's relative, friend? Who? I want to know what that investigation is doing. And my best is the 2 million in rental expenditure for office spaces that were not occupied. Now, you have a number of lawsuits against you. Please give the details. And then I'd like some clarity on pages 148 and 149. In light of what I've just said, the terrible financial situation that you're in, please confirm whether or not your head of HR, Dr. Masia, has received a 20.31% increase in salary. Your GE from sales, Mr. Ngokmalo, received a 19.26 increase. Legal head, Mr. Varana, 11.37 increase. Cost of executives on the board went up by 10.61%. We're now talking 49 million. And the reason I ask this is, of course, the mass firings, retrenchments, constructive dismissals, however you want to phrase it, and the recent offer to the staff that are left between 0 increase for 3 years up to maybe 3% if they're maybe or not. Yet for some reason, the people at the top have received massive increases. I would like someone to justify that for me, please. Moving down to the rest of the SABC, it seems, yeah, not only does someone have to remind you that you're wasting public money, but it is, yeah, despite ridding the SABC of nearly 700 or over 700 staff, I can't remember the number, payments to employees shows an increase of 3% from 2.1 billion to 2.2 billion. How is that possible? Please explain. And in relation to your inability to secure or market new content, that's your number one mandate, to obtain and sell content to the viewers and listeners. Now, during COVID, you literally had a captive audience. You did, and yet everybody was switching off. You're supposed to have turned this thing around, and it's just not happening. So tell me what happened, why you couldn't make lemonade out of the lemon that was served this country at that time. I'm also interested in the minister tells me that I have no right to know what your settlement was when you got rid of the head of news, because it's private between you and the person who left. But you know what? This is public money. There are no private little deals done with public money. So I would like that revealed, please. And then, yeah, look, there are a lot of questions we should be asking, but the chair's wanting me to move on. I could actually spend a full day, which I'm hoping you will come so that we can go through these issues. But I have to ask if there's any consequence management at all in terms of this massive fruitless and wasteful expenditure. It just doesn't seem that it exists. So, yeah, Chair, I can feel you breathing down my neck. So I'll skip over all the rest. Yeah, as ever, we're still waiting on the SABC briefing. There were 1 or 2 others, but I will leave it at that. Thank you.
You've covered a lot of ground, Honorable Band. I will now give to the Honorable Polani.
Thank you so much, Chairperson. Chairperson, I think the amount of work that Honorable Diana Kola Barnard has put into this report shows you how much the Democratic Alliance is really interested in providing a thorough oversight on all the departments. And I feel for her when she says, even on the virtual platform, she can feel you breathing down her neck. That's just on a lighter note. So, Chairperson, I think for me, the biggest issue that is coming across is on the BDM. The broadcast digital migration it's cross-cutting in a sense that it touches on Sentech, it touches on the SABC, it touches on ICASA, it touches on USAF, and it has had detrimental effects on all the entities. And that is a worrying fact. And you've got some entities regressing because of their involvement with BDM. So my request, Chairperson, is that we should really, while we appreciate the need for the country to be at par with other countries in terms of the technology that we use, we should not neglect to tweak and address the issues and the consequences that come out of the need to implement this law. So therefore, Chairperson, my suggestion and my request to this meeting is that can we then have a separate special meeting with all the entities that are impacted by BDM? Because if you go through the report, you get the Auditor General will say that the entity did not have proper record management processes in relation to BDM. The entity did not have proper management in terms of the expenses for BDM. This, for me, allows room for corruption. This allows room for mismanagement. And because the implementation of BDM is so urgent, so many things are falling by the wayside because it is a matter of firstly complying with the court order and making sure that we use this process of BDM to obviously improve the economy and access to technologies for the poorest of the poor. So it is really important for this committee to engage further and thoroughly. And my request, Chairperson, is that when we do engage, if you agree, of course, this should be a face-to-face meeting. These virtual meetings are leaving us at a disadvantage in terms of how we engage colleagues on the other side. There is a great concern that management of ICASA, I beg your pardon, did not create or implement adequate controls generally on oversight in terms of the legislation that govern ICASA, on compliance. So there's lots of reports on non-compliance by the Auditor General. And now you are getting a sense that even on the payments, it is regressed, where I think it has gone from 31 days to 91 days for payment of ICASA. And material mismanagement of financial records. Chairperson, we have a leadership crisis in the entities. There is a sense that people can get away with murder when using public funds. People are not expected to account. And again, the word that we have used so many times this morning, consequence management. Until there is consequence management, we will have committee hearing about reports of 1.7 million, 3.5 million, as if we are talking about cents, when we are in fact talking about millions that should be used to improve the quality of lives of South Africans. USAASA, for example, Chairperson, reports 17 million of fruitful and wasteful expenditure. And going back to the point I was making, Chairperson, you have entities like USAASA, entities like NEMISA, entities like the Film and Publication Board, USAF, and ZADNA. Those small entities, Chairperson, we are neglecting them as a committee. And that simply means that we are creating a breeding ground for corruption to happen in those entities, because our focus is on the big entities. Our focus is on the problematic entities. So as a matter of fact, Chairperson, I think as a committee, we are being complacent in being an accomplice to making that in 2-3 years' time, when things have gone wrong in these entities under our watch, because they were smooth sailing. So therefore, it is important, Chairperson, for us to really keep an eye even on those on those entities that are really performing well. Chairperson, Sentech, we have an 82 million losses for this financial year. In the last financial year, it was 74 million losses. Again, it is a lot of money for an entity such as Sentech to report a loss. And it is easy to look at it as just 82 million, 74 million. But it really, again, is millions that are taxpayers' money, is millions that could have improved on the lives of citizens of the country. And if I could just get more clarity on the role of community broadcasters in relation to the losses reported by the entity. I don't think I understood that. And Chairperson, we cannot have these massive losses and it is business as usual. When people are expected, when they are appointed, to be fair with the Financial Management Act, when people are expected to be fair with the legislations that manages the finances of entities, but when they eventually are given the platform and they are paid the many millions that they are paid, they can come to the committee, they can come to Parliament and report these losses without consequences. This is sheer incompetence, Chairperson. Chairperson, on SETA, I'm very worried that we are reporting that we have an issue with the property management and plant and equipment. These are the small things that are not even the core functions of that entity. But here we find ourselves having to deal with the mismanagement of issues of property, issues of flowers that are in the offices, issues of equipment. This is a distraction where you have an entity like SETA, which really has great potential to thrive. But if SETA is going to come back and report to Parliament and say 1.5 million was paid for an event that did not happen, we paid for licenses that were not utilized. So therefore, SETA is reporting today that there's goods and services that they have paid for and those were not received or utilized. And the AG is saying there should be consequence management. When the management comes in, can they please explain further on what consequences are they going to apply to this? Chairperson, the AG has recommended that there should be a refresher course for the key officials that deal with finances, to say they should finance, and I'm guessing this is across the board, Chairperson. The AG does not make the same recommendation across the board, but there should really be a refresher course on the GREP, so that when officials come and they report a net loss of 84 million on behalf of the entity, they cannot use ignorance as an excuse for having lost the public's money. Because if people are being as incompetent as we are seeing in this portfolio, then there should be some sort of intervention. Because the last thing we want to imply is that it is deliberate. The last thing we want to imply is that it is corruption. Though I am tempted to say if it works like a duck, I don't know the English, Chairperson. I have spoken about the thriving entities falling through the cracks. Chairperson, on USAASA, the audit outcome is again a regression. And this goes back to the point I was making to say, please, Chairperson, can we deal with this decisively? SAPO, Chairperson, has been in the red from 2018 to date. USAF has been in the red from 2020 to date. Post Office, I appreciate that it has not tabled a report, but Post Office has been in the red from 2020 to date. Again, Chairperson, this is not just reports that we entertain. We entertain these reports on behalf of the people that have elected us to be in this Parliament. We entertain these reports on behalf of people that are trusting us as members of Parliament to speak on their behalf, to be their ears and their eyes on these entities, to make sure that whatever money government puts into those entities, it is then reflected on the services that they receive. And Chairperson, it is our duty to make sure that we are true to our mandate as members of Parliament. In the interest of time, Chairperson, I will end it there. Thank you.
Thank you, Honorable Bodlani. Honorable Kubeka.
Thanks very much, Chairperson, and also to all the speakers that have presented actually the findings that they have received from the Office of the Auditor-General and also on the entities as they were presenting. But Chair, firstly, I would just agree with them to say, I'm sure the entities, they will understand that indeed we are trying to play an oversight a role on our side, and also we must also remember that there are other entities that came with the issue. Actually, they are inside the issue of the legacies, especially the one that we are mentioning loudly, that one of SAPO. There were issues of legacy there on the side of the SABC, even though we were trying just to get to them in order to see how best can we assist. But other entities like NEMISA, they were having those frustrations, but now you can see now they are trying to change the game. They are trying to improve on their side. But I'm still maintaining, even myself, to say, if they can follow, especially as we are raising the issue of their action plans, to say, if you know that there are things that you never manage, because these targets, it's them who manage to put it for us in order to play our role. So the issue of the action plans, it must not be there just for the sake of they are there in the paper. They need to deal with the matters sharply so, and also if they can comply, not contradicting themselves, or especially on the issue of the legislations, I think they will find themselves a chairperson. And we are very much aware to say other entities have been affected by this thing of us of STBs and BGM, as also Comrade Bodlan say, maybe if we can also just check with them for future to say, maybe is this thing giving them challenges or are they winning? But we must never forget on that side to say others, that is why they are there. It's because of now we have given more work. And remember, just like Sentech, since they were stable on the issue of the clean audit, but right now, as there are these things that we say, let's try to assist one another with the other entities. That's where they have been affected. So I'm saying we need indeed to be harsh on those entities and the department, but the improvement is not there because now they have regressed, especially our department. We never ever had the issue of disclaimer. We were playing on the issue of the unqualified findings, qualified or clean audit or qualified. But now I'm sure they can see, especially on the side of the SABC, I'm sure as they are going to respond, because it's a concern on this issue of the local content to say, are we winning or we are just swimming in the boat? We are not gonna make it. If they can give us a clarity there, because we've managed also just to try to bail out them with that amount. So let me say, we can see, we will try to push. And also USAASA, because he's the one who's having this whistleblow to be affected and also to affect other entities. I hope they are listening and they will give some answers where they can manage, but we will continue as the portfolio committee just to monitor in order that we are trying to go back where we were. Also GCIS, take note, all of us, we were having a good support on the side of the GCIS. As they were saying, it was hard during the time of COVID, but now they have regressed a little bit. So take note of that in order that at the end of the day, we must try to find solutions to correct in those material findings that they are raising. But definitely the issue of post office, that is why the DM, they have managed also to sell the issue of say, let's try to see or to check how best can we have this post office of tomorrow. We are fully much aware on that side, and also that they've been affected with the issue of the post bank. So indeed, really, we are with them, I'm not having a soft spot because we need to play our role. But indeed, we know because they have presented, they managed to come to the portfolio and raised issues and challenges that they have been affected in order that they can try to lift up their standards. But even though it's like that, let's try to work and also keep monitoring to say changes will be there or not. As we are saying, the issue, we are opening our eyes, especially on the issue of the compliance to say, and the control to say, let even all these structures that are inside that are need to assist the entities, the audit committee risk in order to see how best can move in order to assist their entities. I will just pause there, Chair. Thanks.
Thank you, Honorable Kubeka. I will now allow responses, understanding that we still had a presentation from Gcis and MDDA as well as the SABC on the turnaround plan, the progress report. But probably as you respond, you'll probably touch on this as members had already raised questions based on what they've read. So would allow you to respond. Of course, Deputy Minister will be guided by yourself on how you want to approach the responses.
Thank you very much, Chair. And let's take this opportunity to appreciate and to thank the members for raising the questions that you've raised in the true tradition of a robust parliament. We do accept the questions. We are going to respond. I think we will ask that let's have the responses from the entities themselves, and then from our side, we will come back and deal with some of the few issues. So let's start with I think there were more questions to the SABC, to SAPO, and to Sentech. So let's start with the SABC. We'll then have SAPO, we'll then have Sentech, we'll then have CETA, and the other entities will then follow like that, after which we will ask the DG to respond on the questions to the department, and we will come back and fund and wrap up. Please, let's just be mindful of the time as we respond. We should not, we should do justice to the questions, but also at the same time, let's not, let's just be crisp. Focus on the questions as we respond. No preambles. Okay, let's start with the SABC and then we'll just follow like that. Do you want to start, Chair, or should you go to the CEO? Chair, I see you on the platform. Okay, let's start with yourself.
Thank you, Honorable Chairperson of the Portfolio Committee, honorable members of the committee, Deputy Minister, and other participants in the session. Mine really is to direct the questions to the execs, but there is an element that the chair wanted me to cover. Maybe I can cover it now, that because the board term is nearing the end. In fact, our term ends on Saturday, and we've prepared a comprehensive handover plan that will then be shared with the incoming board as part of their induction. And there were elements that the committee wanted also to be updated on in terms of the discussions we've been having with Sentech. The executives will cover and provide an update on that. Also, there is a need for us to give a sense of where we are with the implementation of our turnaround strategy. That will also be covered by the execs. There was also an interest to understand where we are with the bailout utilization. the executive team also will cover that. So what I will humbly request is that the group CEO leads with the highlights of responding to those questions, and then the CFO will then come address questions that were specific to the finances and the audit findings. Thank you, Chair.
CEO, are you here?
Yes, Chair. Good afternoon. Good afternoon, Chair. Good afternoon, members. I will take the first few questions and then I will ask the CFO, followed by Advocate Vanaga and Dr. Mujaki to take the others. I'll start with the question from Honorable Dr. Basop in terms of the variance on the PDOs. The achievement of the SABC is 52% in the past fiscal in terms of the predetermined objectives. I think the reason why there is a difference, as the Honorable Member has picked up, is because that we use indicators, whereas the DCDT uses the calculations based on target. So I think that is where the variance is. I will then go to the question raised by Honorable Majosi in terms of the net losses. What we have set out to do in terms of the turnaround plan of the SABC, which is segmented into 3 different phases. The first phase was the stabilizing phase, which ultimately we did when we restored the governances at the SABC. The second one that we're currently busy with is what we call business transformation. And in that, we're really ensuring that we accelerate revenue growth whilst keeping low all of the biggest cost drivers in the organization. And ultimately, as we move into the third phase, which is the growth phase, is where we want not just to break even, but want to be profitable as an organization. The 201 million net loss, Honorable Majosi, it indicates how year on year we have been able to reduce the net losses of the SABC. You may recall this 4 years ago, we're at over 1 billion net losses. The following year, we moved to 800, and the previous fiscal, 2 fiscals ago, we're at over 500 million. So now we are actually standing at 201 million, which is a progressive reduction in terms of net losses. And that indicates the degree to which we are now moving closer to breaking even and being profitable. And I do think that it would be important to highlight that the reason why we had the net loss of 201 million was largely because of the acquisition of sports rights of the Olympics, which in its own is an obligation from a public mandate point of view. If you were to remove that, the funds that we used to acquire those rights, it's about 122 million, which is about 58% of the total net loss. So for us, the focus is not just on reducing the losses, but focusing on increasing revenue. And you would see that revenue grew by about 90 million, which is 2% year on year. And really, this is as a result of the marginal increase when you look at the sponsorship revenue. Are we where we should be? Certainly not. Are we where we were 4 years ago? Definitely not. And I think for us, these incremental improvements in all of the key business variances and principles indicates the degree to which we as the team are working towards closing the gap in as far as the financial sustainability of the SABC is concerned. The other question that came was from Honorable Kola Barnett in terms of the increases received by top management. I can inform the committee unambiguously that there was never any salary increases for any top executives at the SABC. If I could then go on to explain, the group executive of sales, because he is very key in driving revenue growth of the SABC, is part of the sales commission, that all sales employees are eligible for. The second point, Advocate Vanaga used to be the general manager for legal and then applied and the due process was followed through his promotion as the group executive for legal, regulatory, and compliance. So that is the reason why there is a difference there. I can also confirm that Dr. Mjagi did not receive any increase. The change in his total package is largely attributed to the transitioning into the new leave dispensation that all SABC employees went through in the past fiscal. Content, Honorable Kubeka raises the issue of content. And we're not as agile, honorable members, as we should when it comes to the acquisition of content. Before we joined the SABC in July 2018, the SABC had been given an exemption by AGSA where the organization could be able to procure compelling content as it saw fit at the time. Unfortunately, that 5-year exemption ended around June, July. We have been operating in a very difficult, constrained environment because even at times where we identify compelling content, we need to go through all of the laborious processes in line with both the legislation and the regulation. Unfortunately, sometimes this can take as long as 12 months. We all know that the producers in our industry are more agile and they want to work with broadcasters that are very quick. Unfortunately, owing to the provisions of the PFMA and other regulations, we are not as flexible and agile as we should be. I can tell you now, most of the television programs that reside on the various platforms of our competitors, they started at the SABC. But owing to the very stringent processes that we have to go through, all the producers are not keen to be waiting to engage through those processes. So that is the first part. But what we have also been able to do, we've been able to operate with all of those difficult constraints so that we can be able to acquire the required compelling content locally. You may have seen in the past 12, 18 months, we have been able to procure the content that resonates with the audiences, that talks directly to the various target markets that we're looking into. So I thought that it was just important to clarify those, Honorable Chair. If I may ask Yolandi, the CFO, to deal with some of the points that have been requested. Thank you very much, Chair.
Good afternoon, Chair of the committee, committee members, my Chair of my board, GCO and others on the platform. I will attempt to be succinct as requested and just here and there respond to additional questions that were answered. Let me start with irregular expenditure. Just to clarify, the 2.8 billion balance has its origin from as long ago as 2011. It was at around 2.6 million in 2018. This management have turned its attention to the completeness of the register from 1 April 2018 to date, which is what the IG was also referring to earlier. At the time of finalizing the audit report of about 7 billion transactions, billion rands worth of transactions, we still had about, I think, 200 million or so to verify, to test for completeness, as the IG indicated. As I sit here today, we have about 93 million rands of transactions left that needs to be verified to ensure the completeness of that specific period. We have been working our way backwards, and therefore also the qualification area is ring-fenced to the opening balances as at 1 April 2020. The IG is joining us later this month where they're going to assess the further work that we've done. We have also started working on the period 2011 to 2018, and we will be sharing that with them. Our goal is, in consultation with Treasury as the third partner to this activity, to ensure that this qualification area is sustainably concluded and have been addressed when the audit for 2023 takes place. In the current year, irregular expenditure only amounted to 91 million rand. It has come down from over 600 million rand about 5 years ago. Of the 91 million, only about 23% or give or take 20 million or so were instances in the current year. Everything else relates to contracts and activities in prior periods, often going back 3 or 4 years. Which brings me also, while I'm at it, to the point around the Mafoko contract, the security contract. That contract was awarded in 2017. It has been the subject of an SIU investigation and is currently in the various court processes in our country. Yes, it's been flagged as a material irregularity, and as the AG indicated, we keep them posted on the status of that specific activity. We as an organization, abided by the SIU recommendations and will therefore also implement whatever the outcome of the final court judgment is on that specific matter. On the Rybak, that is the lease where there is unoccupied space. Contract entered into in 2016-17 as well. We have since exited that contract. It concluded earlier in October last year, and we have established a new relationship for space in that area. And again, the contract has been the subject of an SIU investigation, as the AG indicated, and that process is not as far progressed yet as the Mafoko one. We're waiting the final outcome. I think the specific case is in the special tribunal, and the outcome of that will also determine the way forward with respect to consequence management as is appropriate in that specific activity. With regards to lawsuits against us, a little bit more detail is visible on page 145 of our annual report, where we deal with contingent liabilities, and that is, of course, also ongoing potential court cases. We have to disclose the potential exposure, but it's very uncertain at the point in time that the financials are concluded, so we do not provide for it. We merely draw the reader of the financial statements attention to that. Just before I move off this, I want to make just 2 comments around consequence management and then quickly speak to the audit action. With respect to consequence management, we have an established process in our organization. It has been formalized now for about 3 years. It deals with the irregular expenditure balance, as I indicated earlier. Currently, we are pursuing 389 consequence management activities related to the 2.8 billion, but focused on the last 5 years. We have it automated, the processes around it automated in our SAP system. We report on it monthly. We report on it quarterly to the subcommittees and to the board. And it is a regular discussion topic also at our executive committee meetings. So a lot of focus takes place on the specific topic. On IE in general, we have a special project team in place that is meant to deal with the completeness, the investigations, and the conclusion of or the following up on consequence management and the reporting to National Treasury on condonation requests. It is a temporary project team, so we're struggling with a little bit of capacity, but they are dedicated into the topic and are solely therefore focused on following the processes and giving a topic like consequence management, for example, the due attention that it certainly deserves. On audit action plans, again, we track the implementation of our audit action plans on our SAP system as well, get updates monthly. Team members are responsible for it. There is monthly follow-up on whether the activities committed to has been implemented. In the finance team, I specifically hold my team very much accountable for not adhering to the target dates for implementation when it should have been implemented. We also have assurance activities on the various action plans to reduce the potential for repeat findings. Last but not least, I just wanted to also add on the local content. My CEO did touch on it. We have in the financial year under review increased our spend on content in general by nearly 300 million rand. This year we are on target to meet our budget around 1.6, 1.7 billion. In the financial year 2022, we brought 531 new properties on board on our various channels. Of that, I think about 350 or so were not movies. We have counted the movies in that number. So we are slowly but surely refreshing our content. Related to that's also the pace of spend on the bailout, where there's a ring-fenced amount for content, and we have been consistently fully utilizing in the last 8 to 9 months the specific allocation of that. So we have been and are on track with the content revitalization. Thank you very much, Chair.
Okay, I think CEO, if you can take the remaining questions and then we move to the next entity. I don't think we should have too many people reflecting on the questions. Let's have the CEO and the CFO answer all the questions and then we move to the next entity.
I take it that, Deputy Minister, you are still talking to SAPO now because the CEO and the CFO and SABC have spoken.
Okay. I thought there were some questions which the CEO was saying that the other executives are going to respond to, but if all the questions have been attended, I think we can move.
No, just trying to help that those that would have responded so that we don't go back to them. Unless you are moving to the next entity.
Yeah, SAPO.
Management of time, yeah.
All right, thank you very much, Chair, honorable members, colleagues, and officials. I will not make any introductory comments. I will direct the questions to the CEO, who may then marshal her team accordingly. The CFO is also online. Just to note that the questions that will be addressed were from Honorable Dr. Basopu around the discrepancy in the expenditure versus revenue. And also there was a point made about a clarification on a disclaimer. Honorable Majosi just made a broad point on the state of affairs. There may be a need to clarify a question or a point made by Honorable Gumbu around a post bank, which is positioned to be a state bank. The question that he asked seemed to be directed to SAPO. Honorable Kolobert, there's a pointed issue around the Medipos and trustees, and so the CEO will deal with that, as well as the question relating to salary increase. Honorable Boljani, and I'm not certain again here if there was a confusion of post bank and the post office in relation to SAPO not having tabled a report. I will hand over directly to the CEO, and there might be very little need to come back on that one on my side, but I trust that we'll be able to comprehensively deal with all the questions asked at this point. Thank you.
Thank you, Chair. Good afternoon, Honorable Chair of the committee, together with honorable members of the committee, the chairs of the boards of our entities, the CEOs, and our colleagues. Chair, I'd like to first start off by acknowledging the promise made by the honorable member, Honorable Kolobert, that there should be an investigation done on SAPO. We would want to welcome that. We really want that to be on record, that we welcome any investigation into our conduct. You know what, I think it's really one of those things that if there's suspicions of any nature, they do need to be clarified. So we really are on the same page with yourselves on that one. Then, Chair, having joined SAPO on the 1st of April 2021, which is a year and a half ago, I listened to the narrative that is always almost either in the media or always everywhere. And I got reminded of a brilliant talk given by one of my favorite storytellers, a Nigerian author by the name of Chimamanda Adichie Ngozi, So she says that there is something called the danger of a single story, where she says in a single story, you then show a people over and over again to be a certain thing. You keep telling the same story until they become that thing, whether this is true or not. I'm leading now into the medical story, which I'm going to explain because it does require explanation. And then also, she says in the same talk, she says, this danger of a single story actually creates stereotypes. And that there may not be anything wrong, particularly with the stereotypes themselves. They may not be incorrect. But the problem with stereotypes is that they are incomplete. So everybody then, works off a story that is incomplete. Then the last thing she says, which I liked in her talk, was about how when you want to dispossess, whether you want to dispossess a nation, a company, a country, or anyone, if you want to dispossess and disempower them, you start telling the story at secondly, meaning that you don't go back to the genesis of where the problem started. And you just started at yesterday, there's a new leadership at SAPO, they don't know what they're doing, and we need to get back to them. I would like the host to please enable my sharing. I have one slideshow I'd like to show, just one page. I'd like to illustrate the points that I've just made. So on that note, if you look at the fact that SAPO's problems did not start yesterday, I think it was Honorable Bodlani who then was saying SAPO has been in the red for the last 5 years. She said from 2018. And in fact, the last 5 years have been the worst in terms of SAPO, particularly in about how we've managed the company, what contracts we've signed, what commercials did we agree to, which were detrimental to the business of SAPO. They worked for everybody else, but not for SAPO. So SAPO was hamstrung by the decisions that we've taken. Chair, I would like your indulgence, please. I think it's important that I'd like to show the one slide to give proof of what I'm talking about, but I seem to be disabled to share.
Ajira, please address that because it's important for members to get proper facts and response.
If you can just hang on, Ms. Mona. I'm just trying to find you on the system. I don't know. 1 second.
Thank you, ma'am. I can carry on for now. I will get back to that point. So in terms of this medical aid issue, our focus at SAPO is that our employees are covered. We all want that for our employees. They do need to be medically covered. And as stated, some of them have worked for SAPO for over 30 years. And we really want them to be covered. But a decision was taken around 2020, at the end of March, beginning of April. This is anecdotal to me. I'm told because I was not there, I joined SAPO a full year thereafter. A decision was taken that SAPO's financials are becoming problematic. Could we then maybe not pay medical aid? So I do not know whether this was negotiated with the trustees of the medical aid or anything. I have asked for the minutes of such meetings. I have not received them. I had hoped that I would have them by the time I get here. So what then happened was the payments did stop in April 2020. But when I joined SAPO and looking back, we felt there are things you cannot continue to do as a manager, as a leader, as everybody. You need to take the right decisions, which are moral, which are ethical, decisions that you yourself would want to be part of you. Maybe let me start with this slide. Just this one slide first. Just to talk about where the SAPO's problems, the genesis actually started. If you look at these slides, you will see that in terms of the postal revenue as well as the revenue, the volume trends of SAPO's business, from 2015, things started going downwards. There was a spike in 2018, but then things went downwards if you look on the left-hand side. But if you look on the right-hand side, you will see that as early as 2006, SAPO began to decline. And we trace it to 5 key issues. The one was the economic recession that also led to the then later on the smartphone adoption. Also, we had a huge number of employees who were part of labor brokers. If you remember those days, labor brokers were then to be phased out. And so SAPO then ended up absorbing part-time workers into its payroll, which were supernumerary to begin with. In fact, SAPO itself was bloated, but because people wanted to get rid of the labor brokers, then the next thing was to take part-time workers. No budget, no nothing. In fact, no work for them because SAPO was already bloated. Then there was that protracted labor unrest that crippled SAPO, crippled partners of SAPO, crippled some of the economy. In fact, that's also when the new entrants came into the space. They came in and they've been eating our lunch ever since. SAPO was then put into business administration. Then, there was financial distress, and then COVID came and put the last nail on the SAPO coffin. And because COVID came, it came because it closed things up. People couldn't come to post offices to trade, but it also accelerated the digital adoption. And therefore, those are problems that you look at SAPO and you say, okay, so where did this all begin? The real one I want to talk to is this slide. I'd like you to just focus your eye. You might not be able to read everything, members. On the 1, 2, 3, the third column from left, it says document date. This is 2020, 2021, and 2022. This is not a presentation created by executives of SAPO. This is a screenshot from the SEP system, which shows, if you cast your eye just above the table, it says MedScheme Holdings, Pty Limited. This money was paid from 2020 until they stopped, and then we resumed late in 2020 in December. There was that 48 million that you see there. And from then on, not a single month went by without SAPO paying towards Medipos. There is a distinction I want to make. All the money that SAPO had paid or had deducted from employees, it was paid. That's one story that gets told over and over again. At some point, SAPO was not able to pay its 2/3 contribution because employees at SAPO pay 1/3 and the company subsidizes their medical aid by 2/3. There were points at which that was not paid. But Chair, as I conclude on this one, I want to make the point that as we sit here today, in the month of September, from the 19th, on the 30th, and on the 5th of October, we have paid Medipos 105 million rand because they had threatened to suspend membership of our employees. And we did not want that to happen because we have people at different levels of health, and we would not want that to happen. So on medical aid, as we speak, as we're sitting here, we do not owe Medipos a cent for this current year. Yes, there are two legacy amounts that make up the 644 million that we always call 700. It's 644. It is made up of legacy and historical debt. So, Chair, this document is available for any member who wishes to scrutinize, but that's all I wanted to talk to on Medipos. The second point I want to raise is on Friday last week, we did indeed give notification. In fact, it wasn't Friday, it was, I think, Wednesday. We gave notification to Medipos that we wished to remove ourselves or stop participating as an employer group. That's what we said to them. We read their Medipos rules from 2020, 21, 22. We took advice as late as or as early as last year, because for us, this is not an overnight phenomenon. We knew, as I walked into SAPO, there were 5 key areas that I focused on to say, if you don't fix this, if you don't fix this, you don't fix that, these things will come and catch up on you. One such matter was Medipos. So we went to Medipos, we negotiated with them from last year already. We took legal advice and we took a decision that we actually will then stop participating as an employer group. So when you stop participating as an employer group, you therefore do not have the right to have representation on the board, which then also then fell away. Then we withdrew our 5 people who were appointed by SAPO. All this is according to the CMS, which is the Council for Medical Aid Act, as well as their own rules, which we have looked at. So in fact, when we went back to them, we said, we're giving you 3 months notice because their previous rules wanted 3 months. They came back to us, they said, no, you don't need to give us 3 months notice. You can simply, disassociate immediately. So, so we are now waiting for them to come back and advise us about CMS. They also confirmed in their letter to us to say, once you've disassociated, you don't even need to give us new trustees that you want to replace. So on this matter of Medicos Ready, I think that those are issues that you want to talk to. The second matter I dealt with in April, I remember this was the 30th of April, having joined on the 1st. We had a meeting with SARS. We said to SARS, we owe you a lot of money in terms of the historical, because remember, these predate some of us. They predate the board in other instances. So we went to SARS and we said, we need to have a conversation. SARS says, under no circumstances are you not going to pay. You must pay what you owe. We then had a discussion to say, how do we get involved in this? We then had an agreement with SARS that says, let's enter into a payment agreement. Since last November, we have been religiously, under very difficult conditions, paying the UIF, paying SARS, paying whatever is due to SARS that needs to happen, because they said to us, you must make sure the debt does not grow while we engage on how are you going to deal with the previous debt. So yes, there is still a huge debt to SARS, but since I joined SAPO and since I got involved in these matters, we started addressing the things that we needed to address. Now, no one at SAPO has had any increase of whatever nature for the last 2 financial years. Not the senior managers, not the top executives, and anyone. So no increases have been paid at SAPO, and we don't see that happening in the near future, or at least in the short to medium term. Instead, what we've done is we've taken away allowances. When I got to SAPO, executives, which is another point that I was happy that the AG has highlighted. SAPO doesn't have a management problem. There is just no management at SAPO. There are no people. In the C-suite at SAPO, I, the CEO, am the only person who has a contract of employment. Everyone else is acting. We have an acting CIO seconded from SITA. We have an acting CFO who has been a sacrificial lamb at SAPO for the last however long. Whenever a new CFO started, the one who lasted 3 months, when he left, this current acting CFO stepped in. So he's also acting. We do not have a COO, not even in an acting capacity. We did not have a group executive for HR until 2 weeks ago, when we then decided, you know what, if we do not bring the skills that we require on board, we are all going to go down. And we also then went ahead and got a group executive for commercial and sales, and he is on a short-term contract, because the main reason we waited basically was we were told as I walked in, there will be some money that you will get from government, at least to, if not for anything else, but to make sure that you capacitate yourselves. We waited and no money has come forth. And we realized that we are killing ourselves physically, because the gentleman I was talking about here, Mr. Governor, he is acting CFO. He is still doing his previous job where he was reporting to the CFO, and he's doing another job of another executive who has since left SAPO. So we are trying to be jacks of all trade. We're trying to do everything. That's a recipe for disaster. So that is why there are problems, even with people that are there. Back to the first point I made, Chair. When we might want to look at SAPO and look at SAPO for what it is. SAPO has people who've been working there for 30 years, for 33 years, for quite long, because people at SAPO don't leave. But the problem that comes with is that the skill that you had, because that was the skill that was required at the time. Now we require new skills. We require people who are going to be with the new environment we are operating at. We need new people, but the desks are full. We have 14,500 people working for us, and they're not the right people. So those are the issues that we are dealing with, Chair. But I'm quite excited because we see the future in SAPO. Yes, we are technically, as the AG says it, because of our debt, because this is the albatross on our shoulders, that we have inherited it, but we know exactly what needs to be done. We have a new strategy. We're excited by the strategy. We already have decided not to even wait for the funding, because the government has also told us, if and when we give you money, it's not for you to do the things you would like to do with it. You must implement the strategy so that then SAPO has a chance to live. And that's where we are at this point. The other issues about fruitless and wasteful expenditure, I know that the CFO will come in on the financial part of things, but I want to give this committee the assurance that the fruitless and wasteful expenditure of SAPO is directly and 100% linked to the fact that we don't have money. So some of our creditors, because we don't pay them, they then levy interest and penalties. And those are, you can trace it to the very last cent. And those are things that when we have a little bit of money, we go to them, we say, please, could you then write off the interest and penalties, and we are going to pay the capital. Some of them say yes, some of them say, of them do not agree. So as you look at SAPO, I'm asking for a holistic set of eyes that doesn't just look at this is the problem or look at events going through to SAPO. Chair, I do not wish to take too much of the time, but I do welcome the opportunity for us at least to share with the committee what is happening at SAPO, but I'd also like the CFO to come in and kind of conclude our submission, Chair. Thank you very much.
Chairperson, I do have a hand up. If I may just put a question to Ms. Mona. Chairperson. Chair.
Was the one frozen on the side?
Oh, you've, sorry. I just wanted to ask something for clarity, Chair. Ms. Mona said that they paid money in to the medical aid to make sure the medical aid would not be stopped, but it has been stopped. I wondered if she was aware that it has been stopped. There is no medical aid currently. The sheriff of the court has gone and attempted to attach 60 million rand, which apparently now will go through on Friday, I gather. And only once that money is transferred from yourselves, to the medical aid, will the medical aid be reinstated. So currently there are people in dire straits, cancer survivors who need chemotherapy, etc. They've all been cut off, and they've all received letters saying that they owe the medical aid thousands and thousands and thousands. Now, in the previous annual report, there was a specific account with recently it had 1.4 billion rand in it, and it was specifically set aside for the protection of the postal workers and retired postal workers should something happen to the post office. Now, that was reported on in the previous annual report, but somehow in this annual report, I can't find it anywhere. So perhaps you can just tell us where that money is, please. Thank you.
Okay, I take it to be the last point for clarity, so that the facts that you've put, you can continue to do that. The DM, I'm sure you would be ready to direct if there's another one after this. I know the CFO is still yet to come from SAPO. I'm not sure if it's Sentech or what that you want to give, but other points will be dealt with as you come back. So just keep that in mind as the CEO responds. CEO.
Okay, thank you, Chair. I think the question was clear. The CEO will respond, and the CFO will just come for a minute, and then we will be moving to Sentech.
Thank you very much, Chair. So the question of the suspension. So as soon as Metpos wrote to its members to say, we are going to suspend you in the event that SAPO does not pay us by the end of the month. And so then they went ahead. Remember, there's been negotiations within negotiations. Then there's legal matters. We're talking via lawyers, but we also try to engage them. Now, What we then found was when they said they were going to suspend, they then went to the sheriff. They brought a writ to SAPO to say SAPO must pay the 60.5 million that the member is referring to. And the sheriff looked around and he says, even if I take anything off here, it's not going to cover. And as we all know, they then attached our bank account. But the fortunate part about when they did it was that there was sufficient money for that. So that was not an issue. So the account was then attached because we didn't have the money. I mean, it was money that should have gone elsewhere. We then had to wait for the sheriff to come and get the money. But it seems there's a disconnect between the lawyers of Medipos in terms of them giving the instruction, because this happened 2 Fridays ago on the 30th of September. And we then confirmed to them that the money is there. I even have the proof that shows the money was then attached from SAPO, so it's no longer in the SAPO account. It is sitting in a suspense account from the bank. We say to the bank, pay over. The bank says, you can't tell me anything because you are the account holder. I need to get an instruction from the litigator, so from the sheriff, and then he must tell me what to do. We kept giving this information back to Medipos, but they keep saying, no, SAPO must tell. We even asked the bank to give it to us in writing to say, what are the steps that need to happen? They still say, Medipos must please get their lawyers to instruct the sheriff. Sheriff will tell them where to put the money, and that is the end of the story. So in our view, the fact that people are still suspended is an irresponsible act by Medipos. We have written to them again on Friday evening. We even wrote them a letter and copied the CMS, the Council for Medical Schemes, to say, here's all the proof. The money has moved out of SAPO account. People should not be, because we do have people who are terminally ill. So I am aware of this matter. We do believe that Medipos is acting unethically, and therefore they need to stop this. So that's what the team is currently working on. The member mentioned what we refer to as PRMA, post-retirement medical aid. So SAPO, just like all the other SOEs of the past, they used to look after all their employees, even post-retirement. So if you worked for SAPO and you retire, you were entitled to medical aid until the day you die. And I think it was 2005 or 2015, I just need to get my dates right. This practice was then stopped. Then it said only those who are already in the system will be covered. No one else, therefore, is entitled to post-retirement medical aid. Then we were given 457 million, 457 million. This money was supposed to be ring-fenced to support those people. And that money was then put in a separate account, in an investment account, which is still there, so that the people can be supported. This money is only for post-retirement. But when you look at our books, you must also look at the fact that over time, this money that even Medipos now is asking for, but all the time, SAPO has supported and covered these same people. Every month, the CFO will confirm that the amount that goes, that only supports that. So in essence, if you really want to look at this technically, these people would be the ones where we don't owe money to, because we spent 1.3 billion on them in the last 11 years. But we are saying we are people of integrity. That 457 was ring-fenced for the use for them, and it will be used for them. However, this is a huge liability on SAPO's balance sheet. We are trying to clean up the balance sheet. One of the things I wanted to do is to ensure that SAPO has a stronger balance sheet so that we can trade like any business. We then took a decision that says, go then and buy out these people. So we are in that process, where we've had maybe 2, maybe 3 meetings already with them. We are not doing it in-house. We have outsourced it to companies that have done this before. And they are now at a process where they are engaging with the pensioners who are part of the scheme, so that we can give them a lump sum, shake hands, and we all walk away, so that they then look after themselves going forward, and SAPO does not have this liability. That is the process we are doing with that PRMA. The last point, Chair, before I hand over to the CFO, is that when the Post Bank was then separated from SAPO, it left one with the reserves that were there. And secondly, there was no compensation given to SAP. Now we are saying we have given birth to you. You were a full subsidiary or division. We have nurtured you, we've grown you. And when you leave with reserves. And we're asking ourselves, whose reserves were those anyway? But that question still remains unanswered. And we have then taken this to our shareholder to say there should be some compensation for the separation of SAPO to the Post Bank. So it's not all doom and gloom, Chair. We are quite excited about a number of things, which it's just that we don't like to announce plans. We'd like to announce, things and results that have happened. And we have focused on cleaning up the mess. SAPO was messy. We are still knee-deep in the mess, but we are trying to fix it so that we are not only dealing with superficial issues, we are dealing with problems at source, so that whoever takes over from us when we're not there, they can find a SAPO of tomorrow that every South African can be proud of. Thank you, Chair.
CFO.
Chairperson, I ask for a bite on this.
Let's give the CFO first and see if you're not covered. I note that. I note Honorable Majos also.
Thank you, Chair. Thank you, honourable members. And thank you to the Deputy Minister. Thank you, CEO. So, Chair, when we look at SAPO's financial results of the loss of 2.2 billion rand for the previous financial year, I think when we reflect on the loss has come down compared to the prior year. The loss is reduced by 171 million. We have seen an increase in the revenue by 1%. We also seen the cost structure coming down of SAPO. And if you look at the previous financial year also, the staff costs also came down by SAPO, granting VSPs to the staff, and 682 people did leave the organization. So I think when you look at SAPO, their focus is to see how we improve the revenue, also how to reduce the cost. And also what we have done is also variable costs or costs that are not essential. There's been a moratorium on reducing this cost. So in terms of procurement, we are managing the procurement side in terms of reducing the cost, and the moratorium is placed for non-essential costs. Just to add what the CEO indicated about the PRMA, the post-retirement medical aid costs, it averages about 10 million rand a month. So on an annual basis, it costs up 120 million. Because the employees that retired prior to 2005 qualify for the benefit, there's various subsidy levels for the employees. So that cost also, as CEO indicated, does place a huge burden on SAPO in terms of its cash flow position to fund the 120 million rand. In terms of the audit findings, Chair, we are fully aware that audit finding is not where it should be, but we have seen a reduction in the significant paragraphs of the agency report and also the A categories. The focus once again for this fiscal year is to see how we make a significant improvement in the audit findings. Thank you, Chair.
Honorable Machozi and Honorable Bodlani, do you still have that follow-up? Honorable Machos.
Yes, Chair.
Do you have that follow-up?
Yes, but mine was on the Group CEO for SABC. It was just a clarity-seeking question when he said, I'm not sure of the result of him transitioning into a new dispensation. It was, I'm not sure, because of the increase for Dr. Mukagi. Something like that. Yes. So I wanted him to explain what is it that he means when he said that. That's it. Thanks.
Oh, I thought it was SAPO. Honorable Bodlani, do you still have that after the CFO?
Yes, Chairperson. Chairperson, I think for me, the address by the CEO really is a cry for help. And I am hoping as a committee, we hear her cry for help. She reports that there is literally no management at SAPO. She is the only one with a contract. Everybody else is acting in their capacity. And if we are going to talk about turning around the entity where people do not have a sense of permanence, we really are asking for too much from those people. We understand that the entity needs to provide some sort of direction from the money that it gets from government. But as she correctly says, the historic issues are really deeply entrenched. And sitting where I am sitting, working for South African post offices is a real sign of patriotism. And if you ask me, it's really career limiting. If we are going to appreciate people like Ms. Mona, who will continue working at the post office, even when for some of us, there is really no light at the end of the tunnel. So perhaps the DM can give guidance on the plans of the department to fill those vacancies, so that while some of us perhaps are naysayers, but whatever lifeline is, what lifeline does the department have for this sinking ship, Chairperson? Thank you.
Okay, the DM would then come to that point. I take it that the CEO, Ms. Mona, and the CFO combined have given enough facts. It takes a bit of convincing for members to come back and realize that indeed there are other things that need to be done, including appreciating patriotism. That's there. But the DM would, I think, speak to this part because it's also in the HE's report on the recommendations and commitment by the executive. Honorable Majosi, I'm not sure if we go back the CEO of SABC, because I don't want us to come back as the DM would give to Sentech and then closes himself. I don't understand. Go back. Maybe the CEO can explain if we didn't hear this point about transition. The understanding is that a change in position, and therefore that would have been the issue about the increase, but then there was also an issue about leave in that transition, which was not only to an executive member, but something applying to all SABC employees. But I'm sure CEO, you would want to clarify if the notes are not correct.
Yes.
So
Thank you, Honorable Chair. Very briefly, in terms of the new leave dispensation, you may recall we presented this as part of the cost reduction measures. We used to have a dispensation where employees would sell leave days, and this actually pushed the compensation bill quite high. And as part of the cost reduction measures, we then agreed that we need to do away with that. And in doing so, we gave all employees an opportunity to sell all the leave days that they may have to ensure that it doesn't continue going forward. So that's really what that leave dispensation is. Thank you very much.
Thank you, CEO. DM, I take it that we're getting to Sentech.
We're getting to Sentech, Chair, but I just wish to request that let's allow the chair of the board, as you know, that the board is the accounting authority. They are responsible for the management of the entity. And I know that they've been involved in the process of recruiting, especially the executive. Maybe just the chair briefly in 2 minutes just to update us. The acting chair of the board.
Oh, okay, I took it, DM, that he meant it when he said it's not going to come back to him. So he's redirecting the questions.
No, it's fine.
But if he wants to come, it's fine. I'm trying to manage the time. Yes, Mr. Machumbos.
Oh, sorry there. I think I closed my ears on that one. Yeah, maybe just one thing to point to. If you look at Canada Post, which is until recently has been doing very well, the issues are actually similar to the South African Post Office. Canada has a population of about 31 million, and it has over 70,000 employees. Just compare that with South Africa, with a population about double, with only about 15,000 workers now. Bear in mind also the universal service obligation that both institutions shoulder. So therefore, the challenge is to move from a situation where the postal services were dominated by male centricity. And this is what they're grappling with. Similarly, with South Africa, with the rapid decline in ordinary mail, there is therefore a need to digitize. But then how do you do that? You don't wake up just one morning and say, I will digitize. You will certainly need the resources. So the strategy that is there, and that just needs to be switched on, without saying that everything will wait until there is funding. The CEO may have wished to say something about the motor vehicle licenses, but time obviously is not with us. I personally have never been to the post office for motor vehicle licensing until recently. And this is the effort then of the executive. And I found it to be actually a breeze. You are able there to wait at most 10 to 15 minutes, if at all. And these are the little indications of the space that the post office can play into. And then you can throw into that other government services. But obviously, you need to make sure that you have fortified the infrastructure and the property has been refurbished enough so that it offer that service.
To the employment of executives.
On the employment of executives?
Yes.
Oh, all right. In fact, only yesterday, we had a second round interviewing CFO candidates. We did the last one 2 weeks ago, but there had to be processes of vetting and so on. Now, we decided then to call them so that we could expose to them the actual financial benefits of the organization, taking a lesson from a previous experience whereby a CFO came in, was there only for hardly 3 months and then left, highly qualified individual. Then we felt that it would be unfair for the post office not at least to give these indications in a way that would enable them then to actually make up their minds and say, well, despite this, I shall still try, or maybe because of this, I certainly will not make myself available. Now, only yesterday we did that with the now shortlisted candidates of yesterday. We were actually surprised when they said, no, we can see the issues and we are still excited. We would want to, because we actually see that what is needed here is 1, 2, 3, is 1, 2, 3. One of them even said, oh, well, it's different from what you hear in the press, and therefore we are still available. We then had a prayer at the end whereby we said to ourselves, how do we wish the onboarding of a new CFO would happen after the medium-term budget policy process, because we're pinning our hopes on a positive announcement on that. And we trust that this will still be the case. From a point of view of the stakeholders, we have even been supported by SCOPA. SCOPA came with knives and daggers at our last interaction. But after everything else was explained, they then said, look, we understand this case. And we normally do not enter the fray of mobilizing or lobbying for funding, but we can actually see where the issue is. Now, that gives us a great encouragement in the same way as some of the members here. I think Honorable Kubeka registered the point that we can see the issues, but we are just, with you and with that you could be rescued. Sure. And of course, Honorable Potlani, I think hit the nail on the head on that one. Thank you very much.
Thank you, Chair. Can we move to Sentech?
Yes, thank you very much, Honorable Chairperson and members of the committee. And DM, thank you. I would like to just address that. I think there's 3 questions which were raised on the performance of Sentech. And one comment, the general comment, was that we have regressed in terms of performance. And the question was whether or not this is a result of the project BDM that we're doing, which is a multi-stakeholder project. We took over this, we got involved in this project a year ago. So in the last financial year, we were basically setting up systems which we set up and rolling out the installation of the set-top boxes. So the question was whether or not the fact that we got unqualified audit instead of a clean audit is the result of that project or not. The findings were related to the project, and I think it is a question of the resources which were not in place at the time when we were starting with this project, which subsequently were put in place, and we are expecting different results and different outcomes in this financial year as we get closer to the end of this project in this financial year, which is the target. The organization is not regressing in terms of its performance. That takes me to the second question, which I believe that Honorable Bodlani and Honorable Kola Barnard may have misread the statements on our financial integrated report. The organization in the last financial year actually made a profit of about a net profit of about 119 million last financial year. So we definitely did not make a loss. I suspect that maybe members may have read the statement on the possible debtors to Sentech, which is the expected credit loss, which you make provisions in accounting terms for any debtors which are beyond 90 days. And we have a set of debtors which are beyond 90 days, which amount to about 86 million. And now, in accounting terms, you will then call that an expected credit loss, which means that there is a possibility that these debtors may not pay what is due to you as an organization. It is something that we have to disclose, and the question related to that asked was whether or not this has anything to do with community broadcasters. It definitely has, because of the 86 million rands that is under the expected credit loss, about 82 million rand of that is the debt owed to the organization by the community broadcasters, which has not been paid. But the organization has, in the last 3 months, has been mobilizing information meetings across the country to help these community broadcasters to understand that services are to be paid for. But we've acted in terms of our policy to issue notices of warning to those who are not paying what is due to be paid to us. So therefore, on the issue of our company making losses, definitely not. We are sitting on a profit, and we will continue pursuing being profitable, because we are not funded by government. We are Schedule 3B, and we have to raise our own funding. Therefore, we will not survive if we make losses as an organization. Just wanted to clear that. I think the last point that was asked is whether or not we have sufficient resources at Sentech and so on and so forth. And why are we in this situation we are facing now? You will remember, honorable members, that we are in a transition now. We are merging with BBI, and that merger has caused uncertainty within the organization, which has led to the exodus of most of our professional members within the organization. To give you the example, 5 years ago, we had about 3 CAs in the organization, in the Department of Finance. Now we have got 1, which is the CFO. So people are looking for greener pastures elsewhere because of the uncertainty that is prevailing. But we'll close on this. Our target is to, with the help of the shareholder, is to close on the acquisition and merger of BBI and Sentech by the end of this financial year, so that the following financial year, the legal issues will then be attended to in terms of the amendment of the legislation to enable these two entities to become one entity, which is a state digital infrastructure company. Chairperson, honorable members, I think those were the issues raised, and just to allay your fears, the organization is definitely not making losses. I would like to emphatically state that. Thank you very much.
Thank you, CEO. I think that was very exemplary. Given the fact that we don't have time, can you go to Sita?
Thank you very much, Chairperson. Afternoon to the Chair, honorable members, the DM, the board members, and colleagues. I will take the Sita questions. My name is Molahle Kawi. I'm the acting MD of Sita. So I'll start with Honorable Botlani. There was a question about the 1.5 million and the consequence management. I can confirm, Chair, that we've already taken consequences against the responsible official, and in fact, the official is already dismissed. And what we are currently doing is to try and recover the money, the 1.5 million, through a legal process. There was also a second issue on the material irregularity on the licenses that are currently bought and not utilized. We are currently in an arbitration process with the service provider, and the intention is to recover the funds that were spent on the unused licenses. So definitely when it comes to consequence management, we take it quite serious, and we do try and do it as quickly as possible so that we can recover the money before the officials, or rather to recover the money and we can take actions before the officials leave the organization. On Honorable Barnard, the question on the 3.7 million rand of fruitless and wasteful expenditure, we are following the guidelines that are issued by National Treasury to try and address that fruitless and wasteful expenditure, and which involves an investigation to try and ascertain facts. And once we've concluded that process, we'll take the necessary disciplinary processes against the involved officials. On the material losses of 154 million rand, Chair, these relate, so it's not really a loss. So it relates to old assets that are not currently in use, and in fact, they're not even functioning, that we had to write off as discussed with the Auditor-General. So, and we haven't written off assets in a very long time, especially those ones that are currently not in use and not functional. So it's mainly an accounting a loss, and not really physical money lost in any way or form. On the irregular expenditure, we did incur an irregular expenditure of 258 million rand in the current year. It, however, relates to legacy cases, and more specifically to excess links. So it's recurring from the previous financial year. What we have done to try and stop the irregular expenditure is to then come up with a proposal to try and consolidate all the different links. And we've already done the Northwest Province, because we decided on a provincial sort of model. So we've already done the Northwest Provinces. The Northwest Province, we are coming to other provinces to ensure that we can stop the irregular expenditure. So we are confident, Chair, that in this current financial year, we should be able to put a stop to quite a main contributing factor to irregular expenditure. And when you compare to new cases, they have reduced quite drastically, Chair. And where we still have cases, mainly because of contracts that we spend on that have expired, we have ramped up processes around early warning signs to avoid getting into an expiry or post-expiry while we're utilizing a contract. So 6 months before expiry of a contract, the responsible official will get an early warning sign to say that, do you want to start a new procurement process, or are you going to allow, or rather let the contract expire and you don't need the services anymore? So we've seen some benefits with the changes that we've implemented on making sure that we can flag those contracts quite early. So on the overall audit outcome, Chair, we were very much disappointed, especially given that when you compare to the previous financial year, we have additional qualification paragraphs. So we had quite a frank and constructive discussions with the Auditor-General, really trying to understand what would have changed in 1 year, because the same colleagues that were responsible for the audit last year are still the same ones in terms of the tools that are there are still the same. And what we really got to understand from those discussions is that so what they indicated to us, if you go back to the previous financial years, so the AG will allow us numerous opportunities to make changes to resubmit information, which they didn't really allow in the period under review. And mainly because they were saying it results in us not addressing some of the root causes that are there by allowing us to make those changes, which really contributes towards the regression that we have seen if you compare to the previous year. What we then also did is to really sit with the AG, try to identify the root causes of all the qualification areas. And then we developed an audit action plan. We have already started implementing the audit action plan. And especially given that if you compare the previous financial year, the audit was only for 2020-2021 was only completed in November, December of 2021, which really gave us about 3 months to implement an audit action plan. And in the current year, we have sort of caught up with the normal timelines. So the audit is already concluded. We have already developed an audit action plan, and we've already started implementing that plan, like I said, in consultation with the Auditor-General. So we should have sufficient time to implement the plan, and we are confident, especially with the frank engagement which have taken place with the Auditor-General. We should be able to make an improvement if you come to the next financial year. What we're also going to be doing, Chair, is that we'll also be having internal auditing the results or whatever has been implemented from the plan, just to make sure that if there's a need to make any corrective actions, we can do them before the Auditor-General comes for the audit come the next financial year. We've also agreed in principle with the Auditor-General that we will have a sort of a interim audit where they will then look at the opening balances and what happened in the year under review, just to make sure that when they come for a final audit, we will have sufficient time to respond to sort of the voluminous sample sizes that they normally request. Because I think if you try and do that one at a go, you really don't have enough time to respond adequately to the Auditor-General. But in short, Chair, we are definitely comfortable that and confident that we should be able to improve on the audit action, on the audit outcomes come the next financial year, and definitely where the consequences needs to be implemented, that has been done, and we've seen the trend with the many cases that we've dealt with through our loss control mechanism that we've put in place. I think I tried to be as crisp as possible as directed by the GM, and I think I've covered all the questions, Chair. But if there's some that I've missed, I guess always come back. Thank you, Chair.
Thank you, Acting MD. Yeah, we're trying to rush Honorable Potlani because we're under pressure from the chair that we should wrap up our responses. Can we get NEMISA? We should not compromise on the quality of the responses, but we have to be mindful of time. Trevor, are you on the platform?
Yes, DM, I'm on the platform. Good afternoon. and good afternoon to the chair, to the members of the committee, and to the board chairs and colleagues. Thank you very much for the opportunity to present on behalf of NEMISA. The matter that was raised in general about NEMISA was around what AGSA has raised around the annual financial statements that had discrepancies, as well as the performance information. So in these two areas, what we are doing, especially on the annual financial statements preparation, is to ensure that the finance team is taken through advanced GRAB training. So that is underway at the moment. And we are actually also in the process of appointing a CFO. We had an acting CFO who came at the tail end of the financial year after NEMISA CFO had resigned. So we believe that that may have contributed to the challenges in the finance team, but we are working very hard to close that gap. And as for performance information, we have worked on strengthening the processes. Given the large numbers or the volumes that we are training at the moment, if you compare that with the previous years where we would train only about 5,000 people, that has now jumped to more than 60,000 people that we train. So that has challenged our processes in terms of verification and ensuring that there's quality information going through, accuracy as well. So we have worked on our processes to improve that. And we are monitoring this on a quarterly basis to ensure that we don't have these problems recurring, Chair. Thank you very much.
Thank you very much, Trevor. USAASA, USAF.
Thank you, Chairperson. Good day, DM and the Chair, all the members and all the SOEs represented here. I do not think that my Chairperson is available at this point. She was in the meeting earlier on, but I do not see her anymore. Chair, I thought I would just come into the general comments and statements that were made about the regress, especially in USAASA and USAF respectively. Chair, just to as a sort of a start, there has been an improvement in USAF. The previous year we reported a 0% achievement, and this year we reported a 50%, which is not good enough. But I think the ability for us to change and amend our APP to during the third quarter allowed us to reflect exactly the work that we've been doing, the work and the monetary value that we see and the movement we see on our financials to match the achievement of the entity, or at least the activities that the entity has been busy with. And in that case, Chair, that achievement has been demonstrated. It was a bit late when we were supported to or requested by the minister to change our APP, because the work that we were doing was really not in line around BDM and the broadband targets. And this is reflective of our performance. And with regards to the USAASA regression, Chair, we exchanged hands in terms of CFO positions 3 weeks before AG came. Actually in the beginning of January, which then meant that the new CFO was then, acting CFO was only appointed first week of March. And he had 3 weeks to conclude the books and be able to hand over financials to AG. This was a difficult task. The incumbent comes from the department and has not had the exposure, unfortunately, as SCFO in a SOE. And these had detrimental, not that the person in charge is not compatible, but the timing to land into a new space and be able to achieve what he was able to achieve really, Chair, was, it's still surprising, despite all of the lack of systems that we have in place in the entity. So these led to some of the things that AG has picked up and has pronounced in our management letter. And Chair, I would say some of the things that have really led to what is perceived as lack of consequence management. We do have cases of 6 that are directly linked to BDM that we have suspended. We are now at the tail end of the DC proceeding. We will report accordingly when the time is right on the outcomes of that. But this is just us somehow demonstrating that though it is because of the amount that the entity suffers when it comes to irregularities and fruitless and wasteful expenditure, it does not seem like we are doing anything, but there is some consequence. We've then refined, in the process of finalizing our refined guidelines in terms of consequence management, which then will cascade into the organization as soon as it is finalized. So we are right at the tail end again of that, and we are working rigorously as this new management to close out these things. And all of these, Chair, including our irregular, our inflated irregular and wasteful expenditure, sits historically, these are legacy issues that have been in the entity dated back to 2014 and as in the inception of the BDM program. And we are really dealing with it. We have achieved some milestones last year or towards the end, just the beginning of Q1, is that we were able to fully categorize our irregular expenditure, wasteful and fruitless expenditure. We went to board for condemnation, obviously, because these are big amounts in the hundreds of millions. Board had questions, and we're now refining the process of refining that to then submit to board for condemnation and also to approach National Treasury for that. These are matters that were presented to, and even this SIU reports, but the entity just never moved on those in reports that were dated back to 2019, 2017. So we've now categorized, and I think we are confident in terms of what we are presenting to the board, we'll be able to get the necessary condemnations, and then we are moving with that, Chair. And I must highlight, Chair, the filling of key position remains a big issue in USAASA, and especially with the dissolution looming, it then becomes very hard to attract requisite skills. It's difficult to attract anyone to come into the organization, because even with our contracts, we are having really, it's unprescribed sort of timelines, because it's 6 months, it's 3 months, and it's very difficult. And as a result, there's a huge vacuum in terms of all the positions. We currently have only one executive who's permanent, and all the executives in the entity right now are acting in their capacity. And also just to talk about the BDM, because it has been one of the biggest highlights of AG. And these, unfortunately, has been a highlight for us as the entity. And all of the matters that were raised with AG were not new, unfortunately. The issues of inventory control is big. However, the entity is unable to commit into procuring a system that is able to track inventory, because we are closing. So investment in any system, and previously USAASA did procure a subsystem that was supposed to do inventory control, of which it never did. That issue is sitting currently with the SIU concluding now, and actions will then be taken as soon as as we have the final report from National Treasury and KPMG. So these are the issues that contributed, lack of inventory management contributed to our disclaimer. And just to also give the committee some assurance, ourselves, the department and Sentech have been working very closely in trying to define the right systems for this program, because this is a program like no other. And unfortunately, how it's being audited, I mean, I think the CEO of Sentech and I share the same, that it would make sense that we would only audit this process after the program is done. Yet we respect what AGSA, and this is why we've tried to come up with some systems to put in place to manage the numbers we are recording, the numbers we are reporting, the numbers we are paying. And this is all to do with us putting stringent measures behind paying and using public funds for some of the things that we are doing. So, Chair, though it is a dire picture, I think we are heading towards the right direction. The systems that we've put in place, the condonation that we are putting in place. And also, I mean, that key filling of key positions will remain an issue up until dissolution. And it is a point that we really are sitting EXCO with one permanent member. So, Chair, these are the things, and we will report in our next sitting the final report on the suspended officials linked to BDM. So that is a bit of consequence management that we are doing. Chair, I thought I'd just give comfort to the committee and the chair in terms of what we have put in place, owning to the action plan that we've come up with. Thank you.
Thank you. I think next will be FPB, followed by ZADNA. ZADNA will be the last, and then DG will come.
Thank you.
I see the acting chair of ICASA.
Oh, the acting chair, you'll be last. You'll be the last. You can come in, FPP.
Oh, we may continue. Thank you.
Yeah.
Thank you. I think for us, it was just only one point that was raised, was the issue of giving context to the payments that were made to former executives of the organization. And just to explain that those were settlement payments that were made. It was, if I'm not mistaken, even the 2016-2017 financial year, but they were only written off in the last financial year. But these were payments that were made as a result of legal action that was ensuing between the entity and those outgoing executives. And a decision was made by the council at that time that, in fact, it was more prudent looking at the legal status as well as the costs for the organization to actually settle the matter with regards to those executives. So I hope that explains that question. Thank you.
Thank you very much, Chair. ZADNA, and then followed by ICASA. My apologies, ICASA.
Thank you very much, Chairperson. Let me firstly greet the DM and also yourself, Chair, and all honorable members. And of course, without leaving the colleagues from the department and my colleagues from our sister SOEs. From ZADNA in the main, Chair, I believe the question that came through is we would set targets, and also now we are reporting that we have not met those targets. But before I get to that, Chair, through yourself again, I have to firstly acknowledge that my chairperson was online, including the audit committee chairperson. Unfortunately, they had to excuse themselves. They do pass their sincere apologies. With that said, Chairperson, Indeed, ZADNA had great ambitions. However, due to circumstances that have already been cited, we could not meet those targets. But just to provide reassurance to members, one of the targets that related to promulgation of the regulations, where they are now, they are sitting with the state law advisors, having been taken through, of course, public participation. We are just awaiting the feedback from the Department of Justice and Constitutional Development. And I have to really acknowledge the support that one has received from the department in achieving that. One other target, Chair, relates to the first one, where we have put in place certain action plans which will ensure that we put the brand of .za out there. And thus far we have met, and to a certain extent, one can safely say we have exceeded the target we have set for the current financial year. Taking into consideration in the prior year, we could not even meet the target. And lastly, Chair, relating to the integration between CIPC, the three parties involved, which is ourselves as the regulator, the newly appointed registry operator, which is ZAC, and the CIPC are working on finding a solution and stabilizing the system. But we are receiving registrations at the current moment. We are monitoring it quite closely to ensure that at least we do manage to capture some, while of course it's still below what we are intending on targeting. And we intend on addressing that by approaching, of course, mass media platforms, including our sister SOE, which is SABC, to see if we can run campaigns to attract more people to register domain names through the CIPC platform. With that said, thank you very much, Chair. And that is our submission from ZADNA.
Thank you very much, ICASA.
Thank you, Deputy Minister. Good day, Honourable Chair, Honourable Members, and members of the public and everyone who's present on the call. I'll try and deal with the issues relatively quickly and relatively straightforwardly. I think they were relatively minor. I noted 4 questions directed at us from the Honourable Kola Barnard. Just to indicate from the outset that as ICASA, we take our role in relation to the public and the people of South Africa very, very seriously. We take our targets that we set for ourselves and delivery in terms of those targets very seriously. We take financial compliance very seriously, and we really are striving. It gets reported and discussed regularly at Council towards ensuring that we too have a clean audit coming forward. The 4 questions that I noted from the Honourable Kola Barnard, one of them related to the question of misstatements, and just to indicate that our financial statements are generally in excellent shape. The misstatements were relatively minor, relatively technical, and were engaged with the AG in relation to those. The CFO can provide further detail and clarification on that if required. The second issue was raised was in relation to the bid reference letters, and what that essentially meant was really ensuring proper compliance, and what happened was it delayed the awarding of the bids concerned, and hence that particular target was not met. The third and fourth questions came together relating to the provision in the financial statements for impairments. The amount totals almost 88 million. Just to indicate that that is largely comprised of 2 amounts owing, one by the SANDF and the other one by SAPO. Together they make up almost 2/3 of that particular amount of 88 million. The rest is made up of much smaller amounts. The irregular expenditure of 33 million is largely 96% of that relates to a single item. It was a lease agreement that was entered into sometime back 2018, 2019. the Loss Control Committee is engaged with that, and we are engaged with Treasury to regularize that particular expenditure. The final issue, and again, it's one that we discuss regularly at Council, is the question of the 30-day payment of suppliers. A lot of that relates to invoices that are under dispute and have historically been logged as normal invoices. We have, together with the new CFO, put in place a number of measures to streamline and to ensure proper accountability in the processing of those invoices. We have seen some improvement, but we're not yet satisfied with the results. So we are currently putting further measures in place to ensure that we meet the target of paying all of our invoices and all of our suppliers within 30 days. Chairperson, I think that covers all the issues. If anyone wants further information, the CFO and the acting CEO are on the call and they can provide that information. Thank you, colleagues, and thank you, Deputy Minister.
Thank you very much, Dr. Lewis. I think you have covered almost all the questions, and my apologies once more. I think the last response will be from the Acting Director General of the department. Are you still on the platform?
Yes, I am. I've just got some problems with the network. I hope you can hear me.
Yeah, yes, we can hear you, DJ. You have now muted yourself. ADG, you have muted yourself. You need to unmute so that we can hear you. Okay, Chair.
The ADG is also indicating DM.
Chair. Okay, the ADG
Experience in connectivity challenges. I think you can proceed.
Okay, I think let's proceed, Chair. I probably may have to cover some of the issues that the ADG was going to cover. Maybe first, let me just thank the leadership of the entities for their responses. I know that we were a bit rushing ourselves to finalize the responses, but it's all in the interest of time. We wish we could have a couple of days so that we can go through each entity and to be detailed in respect of its performance and how we account. But we are in a bit of a pressure now. Let's appreciate the remarks by Honorable Gumbi when he's thanking the department and appreciating the performance of the department, which is sitting at 91%. It is an improvement from the last performance, which we presented to yourself. There are only 3 areas where the department has not met the targets, which we did explain. But 91% nevertheless, sorry, 91% nevertheless, it's a good performance. So we'd like to thank that word of appreciation by Honorable Gumbu. We do accept, Chair, the robust engagement that has ensued. And we, as I said earlier on, we are always willing and ready to be held accountable, both as public representatives, but also as a department. Let me just respond to some few issues. And let me start with SAPO. There was a question around filling of vacancies for the executive. It is an issue that the board is seized with. Some of these positions, they've tried in the past to fill the position, but because of the situation that is obtaining there, most of the people express an interest and later on decides not to proceed. An example is the situation of the CFO who was recruited. A very competent person was recruited, only worked in the organization for 3 months, and then resigned, citing some personal reasons. But we know that the reason why the person resigned is because of the difficulties that the SAPO is finding itself in. And so there has been recruitment that has been taking place. The CEO, I think, did say that they are now joined by 2 executives who were recently recruited. And they are busy recruiting the rest of the executives so that they can be a full complement. But I think, Chair, maybe a bit of context. Context because, not because we want to be prisoners of context, not because we want to emphasize what happened in the past, but I think context because it gives us a proper perspective of the challenges that we are facing in the organization, in SAPO. Now, these challenges, like the acting chairperson was saying, are not unique to South Africa. These are issues that the postal sector globally is contending with. These are the challenges that the rest of the post office are dealing with. And why is the case? Is because of the market share. The South African post office has lost significant market share over a period of time. There was a slide that the CEO presented here which showed that. And I think at some point we took the members through that. It lost significant market share because of the introduction of technology and the manner in which technology has been rapidly evolving, and the lack of the post office to be able to turn itself around, to adjust so that it can be relevant. I mean, if we were to ask a question, how many of us are still sending letters by post? Very few of us. We are sending correspondence by email and so forth. And we know that the establishment of the post office, the primary role of that was letter post, to serve communication through the sending of letters. And that has changed over a period of time. And those changes, there's not been a response to the market changes by the post office over a bit of time. There was a situation where the post office attempted, I think immediately just after it was placed under administration, there was a recapitalization by Treasury, an appointment of the CEO who he was said to be very energetic. In fact, he requested to be appointed, to be given space to turn around the post office. And unfortunately, he did not. He failed to seize the moment when the post office was supposed to be turned around, when the focus was supposed to be on the other opportunities that exist in the sector. So that did not happen. There was a bailout. That bailout was never used. And so over time, there has been that decline in revenue of the post office. And so what did we do when we entered the space? We said that this has to be arrested. And for us to arrest this thing, we need to do an analysis, segment the market. What is it that the market now requires of the post office? And so that resulted in the strategy that we have, the South African Post Office of Tomorrow, which was adopted, which speaks to a number of things. That we want to turn the post office into a logistics hub, that we want to turn the postal networks into digital hubs, that we want to be the authentic trust center, and many other things that the post office should be. And so we are implementing that strategy, but unfortunately there are historical issues. There is historical debt, that debt keeps on increasing, which debt has to be attended to, because without attending that debt, there is no way that we can turn around the post office. That we have said from the beginning. We have said here in this platform, we've said it everywhere else, that without addressing the legacy issues, without addressing the debt, there is no way that we can turn the post office around. But if we are able to make interventions in that, we all are very positive that we can turn the post office around. And in fact, we are working on the implementation of that strategy. There are three key drivers that drive the expenditure in the post office. You have got the personnel expenditure, which is sitting at approximately 60% of the, it's just untenable. You can't turn it around without attending to that. You've got a situation where you've got the next biggest expenditure cost item is properties and securities, and all of these issues were attended to it. And going forward, there are some exciting discussions that are taking place, and I think very soon we will be announcing as to what exactly, what are these exact plans that we think that will be coming to fruition. But what we need to do is to get support from Treasury, and we are really looking to the presentation of the medium-term expenditure framework to assist us in making the necessary interventions. We believe that post office can be turned around. We believe that if we implement a strategy, we can definitely turn around the post office. But we do not want to come here and paper over the cracks and present a scenario that everything is all and well, because it is not. Currently, the post office is going through serious difficulties. We had an AGM with them last week, not last week, 2 weeks back, and we were very frank with them that we are not happy about the performance. The performance keeps on declining year on year. Last year, it was just over 20%. I think it was 28%. Now it has dropped to about 18%. Only 3 targets were achieved. We were very frank with the post office and the leadership to say we are not very happy about that performance. Irrespective of the financial challenges that you are experiencing, but you are declining in performance, and it is not a good, it doesn't give confidence to those that will be approaching to request assistance. So we're very frank with them. We've scheduled a meeting before the end of October where we are going to deal with all the issues raised by the Auditor-General, including how do we look at consequence management. Because ever since our engagement with SCOPA, there was a bit of a restructuring of the committees there. We put in place a committee that will look at the issues raised around irregular expenditure. And over time, because of the many challenges that are there, things begin to drop a little bit. So we want to discuss those issues. We want to come up with the concrete interventions that will that we'll present to the leadership in the executive, including even in cabinet, so that we can attend to all these three issues that I've identified as the cost drivers of the post office. Now, let me just move to another issue. I think the colleagues have attempted to have really addressed most of the issues that I wanted to deal with. But the one is BDM. And here also context is quite important. And what is the context? The context is that when a decision was taken by the ITU to migrate from analog to digital, and our region was then given the timeframes to migrate. At some point, South Africa was leading that process of migration. But over time, we dropped the ball. We dropped the ball because of a number of issues. Litigation being one of those issues. I think members will remember that at some point there was a discussion whether these set-top boxes must be encrypted or must not be encrypted, which was a technology discussions that took forever to be resolved. So as a result of all of those, we dropped the ball, and at the end of the day, we are the last, despite the fact that we are the most developed economy in Africa, complex economy than other African countries that migrated before us, who are still grappling with these challenges of migrating. So when the minister came in, sort of, what do they say, grab the bull by its horns. She led all of us, she led the department to say, let's migrate. We cannot keep on coming with the excuses for not migrating. We were told that there are vouchers. This is been piloted in only 3 provinces, which were the smallest provinces, Northern Cape, Northwest, I think, can't remember, Free State as well. So the minister said, no, we're not going to do any of those things. We are not going to pilot, we are going national, we are going nationwide. We're going nationwide. We must determine what set-top boxes do we have. We must determine what is the need out there, the households, indigent households. Let's go out on an aggressive campaign to talk to our people, to go to the post office, to apply to get this set-top boxes. Because at some point, there was a situation where these set-top boxes were just lying in the in different warehouses, and it was attracting a lot of money. So that's where we're coming from. And so since August up to now, there's been a significant progress. 5 provinces have been switched off. We're left with only 4 provinces. Of course, we do accept the critique by the Auditor-General, which is something that has been there even when this issue around the Concord was being dealt with, around the reliability of the information that we're presenting. That we do accept. And I think we've already urged all the entities working together to share the information. I mean, USAF has got a target of 810, Sentech has got that, the department has got 840. I think it's something that has to be looked at to standardize. And even how we are reporting how many households have been installed with the set-top boxes. I think it's a critique that we do accept, and I think it's something that we'll work on. But then that should not overshadow the fact that progress has been made. And now the Concord has given a direction that this is urgent. There was a call for all indigents to come forth, given until the 30th of September. That deadline has come and gone. As I said in the beginning, the team is consolidating all the submissions with a view to advising the minister as to how can we ramp up performance, how can we, through Sentech, ensure that the installer capacity is increased, and we target the 4 provinces. We do the installation. Now the minister will be engaging with all the stakeholders as determined by the court, so that we can finally determine the analog switch off date. So that's where we are, and we are confident that this project is going to be finally concluded. There is no reason for pessimism. This project will finally be concluded. Of course, it is making an impact. As we have seen, there is some information that is coming up around the loss of audiences as it relates to the SABC. But we think that this is temporary. This should be temporary. At a later stage, as and when we embark on other programs, the audiences will come back to the SABC. And we'll conclude this program. We can release the spectrum that is much needed by all of us, by the economy. So I think I shouldn't go on and on, Chair. Those are some of the issues that I thought I should lift up and respond to them. I know that you have been putting us under a lot of pressure to conclude. I'm sure you'll be happy that we are done. Thank you very much.
No, thank you, DM and your team. I'm sure you do know, though, that that's out of order. I'd put enough pressure on the presentation because I wanted this process to have time. And so far, the responses given would have clarified even some of the things which there may have been inputs, not knowing what the facts are, and we leave the meeting understanding what the facts are, and therefore design better interventions even from our side of oversight. So I've left you with the Honorable Bodlani to pull each other on this matter of whether you are in a rush or not. So as we are going to get to GCIS, I just wanted to say that we do have the time that has been extended. But it's important to make a proper summary now that we have dealt with both the AG and yourselves from DCDT and the entities responding. I think what is quite clear is that as the committee would be indeed interested in seeing those action plans responding to the recommendations that have been made by the Auditor-General. But of course, we must also remember at all times that as we deal with this report, this is as the end of March 2022. So there's been work happening between that time and now, and you've been reporting, we make that assumption correctly based on the report given by the AG, that in year quarterly there's been those interactions. Surely when we call these other entities as led by the department, when you speak to those action plans, you'll also give us a sense of whether you're turning around the situation or not, because in no time we'll be getting to the end of March, which will be another financial year. And surely some of the repeat findings do come because it takes time to attend to them, and then you find the year has come to an end. So one thing it's important to leave the meeting with that understanding. I think having listened to SAPO and USAASA, I think Sentech raised a similar matter with regard to exodus of talent and skills as a result of uncertainty in that space. But with SAPO, that uncertainty, it's about in the main the going concern in SAPO. And the AGSA recommends that we should work on filling of the vacancies. And I think I want to thank the CEOs who spoke to these matters, that we do not make accusations or demands that may go beyond what is reasonably expected, so that we do not say, well, for example, there's mismanagement, actually when there's no management, and that we address that and appreciate at the same time those who get to overwork themselves in the spirit of patriotism, as Honorable Bodlana would have said, so that interventions are quite directed. But we are also observing from what is raised by the AG that I think our reports for the quarter would also have to be quite honest reports in terms of what's being done and whether that meets the requirements of what the AG would regard as improvement from where we were to where we are. We would indeed group and categorize these entities. I think the part about the BDM, because it's a project that's ongoing and we now have a repeat finding on that, I think there's general acceptance that we may need to put all those together as one group, address the matter. But also those that are trapped in a situation where the auditors cannot really put an opinion, except to disclaim the situation. We need to spend time and look at those details and see how matters raised by the AG in detail are responded to, and how the department would give the necessary support in that regard. I think the part about USAASA is just one of those examples, because for those of us who've been in the committee, I'll understand we do have new members of the committee, but for those of us who have been in the committee, when we're presented with this winding up, the so-called winding up of USAASA, and of course changing the way USAF needs to be into a digital development fund that you'd have. We've always asked about transitional measures in a way that they would not avoid liabilities that may be there. But again, because this entity has a role to play in the BDM, which has got timelines, how you are going to ensure that it is able to do that, because appropriations are made to USAASA as an entity. And I think from the report we have, it's an area that needs attention, like SAPO, when we talked to vacancies in SAPO, because it will still be there. But on this one, where you have one permanent person, and we do see even whistleblower messages that circulate about just the running of the institution with one person doing more work. That transitional plan by the department ensuring that all these things that need to be addressed are addressed, including, as I said, in USAF, that they are not taken to a new entity that is supposed to be transformative. So we need to come back to that. But I think in our programming, content advisors surely are taking notes. We'll have to review the program just to get back from a point of implementation. It does not erase the fact that there was this meeting as part of the BRRR. But our work goes beyond that compliance. It's about following up and changing the way the entities are. So I think that's important to look at. And we do accept that the SABC would indeed do a handover report to a new board. We have clarified this point that we are not the board. Indeed, it would have been an error to ask for handover report to the new board. That's not us. But we needed to get the progress. And I want to make the ruling that in the course of questions and responses, that matter would have also been spoken to. You've covered the HR issues that are in there that talks to also what could have been the retrenchments, why the increases in other spaces and so on. So you'd have spoken to that. But of course, we do know that in a handover report, there may also be commercially sensitive matters which the board will have to be taken into confidence on as they take over. So I think we should accept that as the way forward in that regard. But I thought something very important that comes out of that report and the response of the, I think it was the GCO, that the legislative constraints need to be looked at as a matter of urgency. So irrespective of what happens in the transitional period, but the operations of the SABC will still continue whether there is a new board or this current one ends on Saturday, but there still needs to be business continuity there in terms of operations. So the constraints, I think as explained, something we must take back. DM as a political leader of the department present here, and ourselves as a committee, is that that task is not that of the SABC, but ours. Those who must make policies and as well as legislation. And that we ourselves could also come together and be able to check how far we are on those specific legislative changes that are being proposed. So with an understanding though that from the reports it's clear, it doesn't matter which board you put, it doesn't matter which executive you put, for as long those constraints are there, they'll be subjected to the same process. And that's a reality we have to deal with. And therefore, if it is in our space, we also have to take the responsibility as part of the support we give to the public broadcaster, the SABC, so that it is the SABC would want to have. And I think there are lessons that could be drawn that at a particular time, there were exemptions given. How has the SABC performed in terms of acquiring content? At the time that was taken, what would have happened now that there is a temporary measure in place, whether that has brought improvement or not, and therefore say what then needs to be the intervention going forward whilst you are still looking at passing other pieces of legislation, including looking at the PFMA, whether it really allows them to be agile as they are expected in that regard. So I'm just saying it's a point that may have not been seen, but I think the responses are beginning to tell us that if it's not addressed, it doesn't matter who is there, they will still be faced with such constraints. So we would need to have clear timelines in that regard. And I take it that when we call you back in the different groupings, we would communicate that with members first, just to indicate this is how we need to probably to revise our program, and then take a few at a go, especially where there are similar issues, and be able to engage as such, as I say, more beyond just complying with the BRRR matter. I take it that you would at least leave having that in mind. Otherwise, there is generally appreciation that there are difficulties, there are strides that are being made amid all those difficulties, but it also means that those who need to make necessary interventions must do that. And I'm sure when you come back, again, you'll also be honest like it has been the case. If we say there are audit committees, let's be realistic about that. Are they functional? If they are, why are we in the problems we're in? I think we need such an honest report so that we apply our minds properly. So that will be the summary really of inputs made by members and the responses that have been received, and looking at what other matters we can take for way forward as it relates to AG and what the department and its entities would have been able to produce. So that will be that, honorable members. I just want to be sure if the DM from GCIS has been able to join the meeting, because the GCIS one will be quite a short one, taking that the ruling I've made on the SABC one, that presentation that has been infused in the answer of questions, and in any way we can still get them to come back to the committee. Is the DM here? DM Swear? Yeah.
Yes, Chair, I'm here.
Okay. So we welcome you. DM of the DCDT and your team, you know, will not keep you because you need to respond to the Auditor-General.
Very much, Chair.
Thank you. We appreciate it. Deputy Minister Sawaya, we've been waiting for political leadership. So we thought we should start with the DCDT, amend the agenda to allow you to come in, because we think that the discussions do also need the political leader to own up, take responsibility in working with the entities to turn the situation around. As we usually do, would give you space to introduce, which is more your political oversight. Of course, would because GCIS and MDDA are not like what we've been dealing with, DCDT and its entities. It's quite a short report, and I'm sure you should be able to do that in 25 minutes for both the GCIS and MDDA, on the basis that members have the presentation. They've also listened to a presentation by the Auditor-General. And that's for those who present would then speak to just the silent points, and members would ask the questions. There was temptation even earlier because the matters are quite cross-cutting, that there were questions posed even to MDDA before we get to it. So that's where we are, Deputy Minister. The platform is yours. You can then do a brief introduction like you would do, take us into confidence that it matters, and get the presentation. That's 25 minutes. So it's 4:05.
Yeah.
Okay. Over to you.
Yeah. No, thank you, Chair. I think, let me greet you and greet members of the committee, and also greet my colleagues from our sister department as they exit, the DM Mapulana and the team, all of them, and also great colleagues from GCIS and MDDA and my team from my private office. I'm laughing to myself because I had a connectivity issue in the morning as I was moving up and down. So I am learning that if we don't comply, the punishment is that you will sit throughout the presentation of your sister department and they are big and wait for your turn. So it's a lesson learned. But I want to thank you for affording us the opportunity, especially ourselves as the political head, to lead the discussions and debates and amending the program. Your 25 minutes is heard and loud. I am happy that the Auditor-General did touch in the morning issues and so on. Others are for us to learn and to improve moving forward so that we continue to enjoy the good relationship we have with you. I will give the team GCIS, the DG, and also give, I see the board chair is here. When I eventually logged in, I saw he was here. I'm hoping he's still here. Otherwise, the actor is still here. Yes, I see he's still here. He will then lead him with the team from MDDA to be able to take us through. Just one thing, Chair, which we want to bring to the committee, and of course, it's an issue which cuts across both GCIS and MDDA. Which will forever be that 1%, 2% problem in relation to us being able to bring a comprehensive annual report to yourself. And that is the issue of resources. One is resources to fill vacant posts. We have been able to manage, especially in the previous financial year, in the level of MDDA, of GCIS, to fill vacancies of DDGs. But of course, you still have got some form of middle management vacancies which are there. Ideally, we should also be able to fill them. So we're just flagging it that as much as we are happy about the annual report, we're also confident that we can be able to move. We know that the institution throughout, like you were indicating in the meeting, that this report ends in the 31st of March, but from the 1st of April to date, I think we're in the second quarter, if I'm correct, April, May, June, July, we're in the second quarter of the 2022-2023 financial year. Already when we're discussing in our own corners, I'm just telling you as a committee, they are always reminding us that please go and look for more resources for us so that we can be able to live up to our expectation, especially in relation to vacancies. The other issue, especially for communicators, which is something that we're continuing to take up with the minister, even in other platforms that we see, is the issue of budgeting as when it goes to programming. That communication, there seem to be some form of afterthought in relation to funding of the institution, and every time it becomes a daily battle in relation to we've had, like in the past, especially because we come from the pandemic, and unfortunately we're going to talk about it for some time, that when after we said no, the first pandemic would be a COVID-19, then there was the issue of gender-based violence, and communicators had to run to be at the forefront, and our communication had to cut across, and you find that we don't have resources, and then we have to scramble and look for it there while we're expected to review and adjust our MTSF. For example, you'd all know that along the pandemic, we had to re-look into the MTSF. Post the MTSF, we also had to ensure that our own plans, our own annual plans, are revised to be able to live to the new normal which we're faced with. In that very instance, one of the key issues which must continue to reflect in our programming as communicators is the issue of gender-based violence. And there has not necessarily been a direct resource allocation to the effect of ensuring that we do the work that is expected as communicators thoroughly to the end. Just those two, those are the ones that I want to bring, that as they will be talking along, I'm going to request, I know my teams are very fast. This committee has been reporting, I always say, even when I'm with Brenda, say that there is no need for us to talk about the mission and the vision. We're given 25 minutes. Let's go to the crux of the matters. Luckily, the report we had forwarded to the committee, they've gone through it. Let's touch up on issues which are more eminent and prominent, like he's indicating, so that we can have more time for debates and discussion. I'm going to leave it there. I was trying to look at DG Pumla Williams. I had initially so, but now I don't see. But I see that the DDG Reho is here. If Ms. Pumla is not here, then she can, but I had seen it. They will guide us. I think then she can lead with the team, and then we go straight to the point. And then after that, I will then request Dr. Matebula to also, with the team of MDDA, lead us through. And then from there, we can be able to take questions and answers. And most importantly, beyond question and answers, I also liked how in the deliberations which were taking place with our sister entities, there were also suggestions and so on, so that we are able to move and improve in that way. Thank you, Chair. Over to you, Team GCIS.
Thank you, DM. Good morning, good afternoon, Chair and honorable members. My name is Nomonde Mnukwa, as the DM has already welcomed us. The DG is attending the cabinet committees today, together with DDG Michael, so myself, DDG Reho, the CFO, Ms. Zobisa Soti, and the head of planning, performance monitoring and reporting, Ms. Nomkosi Peter. Together with Ms. Mubeng Tswane, we are the team from GCIS, and I'm just going to be taking the members through the presentation quickly. I just want to move what's happening now. Okay. The major areas of focus in terms of our presentation, we'll just focus on the summary in terms of non-financial performance, and also a summary in terms of financial performance. Basically, our core communication areas during the period under review was more on the COVID-19, both the awareness, the vaccination, the economic reconstruction and recovery plan, the Operation Vulindlela, which were both designed to ensure that we rebuild the economy after the pandemic. And the last one was more on the issue of ending gender-based violence and femicide. So in terms of GCIS performance for the financial year 2021-2022, we had 38 non-financial planned targets, of which we achieved 34, and that resulted to the 89% achievement in terms of our non-financial performance. Also, in terms of non-financial performance as reported by the AG, we received an unqualified audit opinion. I will talk more in terms of the areas whereby we didn't achieve and the reasons based on that. However, the 89% non-financial performance achievement was an increase compared to the previous financial year, where we performed at 81%. In terms of financial performance, we achieved an unqualified audit opinion with material findings for the period under review. I must stress, Chairperson, because I've heard loud and clear, we are committing as GCIS to ensure that we improve and go back to the clean audits that we used to attain in the previous financial years. However, I think it is prudent for me to just share the reasons that led us to receive material findings. And that area of material findings is one is on expansion of contracts. The other areas which were more concerning to the AG, but were not material in nature, it was the area of supply chain management and the area of records management. I will speak to that one later. In terms of the material finding, which was on expansion of contracts, I think it is okay for me to just share the reasons behind that, so that when we talk to the action plan, the members can have an understanding of what led to that regression. First of all, from our side, it was the interpretation of the National Treasury Supply Chain Instruction Notes, which we use a certain clause and AGSA use a certain clause. Be it may be, we then had to, at a later stage from the finding, put some systems in place to improve and ensure that we institutionalize the changes in our environment, like our practices and our standard operating procedures, but also the monitoring of our contracts, so that at the towards the lapse of the contract, but when it still has 6 months to the lapse time, we are able to raise flags and ensure that our procurement processes are fast-tracked. The second part that led to some of the areas of the material finding, but not applicable to all the contracts that were expanded during the period, was the fact that at the time we were ready to award some of the contracts, there was that Constitutional Court judgment on the preferential procurement by National Treasury. And that made us to be unable to award the contracts that we were ready to award at the particular point in time. And because of time constraints, we then had to expand the contracts. The last part or the last variable to that is our HR capacity in terms of both the finance unit and the records management unit, together with the supply chain management unit. This is a result of the fact that during 2020-2021, we saw a budget cut of 17.8 million from National Treasury on our compensation of employees budget allocation, only that 17.8 million. And for us, it is a huge amount because our total budget is just above 700 million. And therefore, it meant the positions that we had to fill during that period had to be put on hold because there were budgetary constraints. And then we also faced a situation whereby our increments for senior managers, they were not budgeted for as directed by National Treasury. And at the end, they had to be effected. So we were left with no budget at all to fill the particular posts that were going to enable us to have sufficient capacity in these areas. However, given that we are putting systems in place, particularly around our processes, to ensure that we improve going forward. And the next part is just to talk to the performance in terms of program 1, where we believe that we manage at least to make some strides. For an example, we managed to keep our vacancy rate at 6.74%, which is below the 10% vacancy rate. And I just need to qualify it a little bit on the fact that the vacancy rate then becomes determined by the number of positions that are funded and vacant. Not all your vacant posts in the establishment, but those that are funded and need to be filled. The second achievement was that we managed to fill in the positions of the top management, executive management, and therefore we reduced the top management vacancy rate of 75% to 0. The last one, but not least, we managed to decrease our turnover rate we managed to decrease our turnover rate from 6.09% to 5.9% by the end of the financial year, whilst we managed to ensure that our women representation at SMS level is at 56%. I will run through the other ones because much as we have managed to achieve and keep intact our IT-related performance target, we're still very constrained because the infrastructure itself is not in an enabling environment for us, and therefore I will run through this part. Then going to program 2, whereby we managed to ensure that we communicate within the languages that are approved to all South Africans, which is something that we are striving to do given our financial constraints as well, because it takes a lot for us to be able to translate and also make sure that whenever we communicate in relevant languages. The second part also was the Vukuzenzele magazine, whereby we managed to communicate extensively to our readership, particularly those people who are in rural areas. And we were printing about 15.3 million. We printed about 15.3 copies. And then the public sector magazine as well, whereby we managed to put some more educational information around building a capable state and ethical leadership. And the last part was more on the COVID-19 pandemic. I think I will talk more on the COVID-19 pandemic because that's where we learned a number of lessons as well. But part of the success key success factors in terms of us being able to communicate properly on the COVID-19 was the fact that we were given a special 50 million allocation. And therefore, we were able to get into various platforms and be able also to target a number of people within the population of South Africa with different messages. But we are also able to get into partnerships with the mainstream media, and we have at least a financial muscle whereby we were able to utilize it when we were bargaining, and we were able then to get more partnerships and stretch the rand that was already limited. We also, through the minister, during the period under review, managed to appoint the MEC sector council, which was appointed in March 2022. And its objective is to ensure that there's transformation within the community print and media sector. We also won a Silver Prism 2022 award for the vaccine communication campaign that we led as the department. I would then move to the areas whereby we couldn't perform according to the targets that we had set. The first one is on the online editions of Public Sector Manager magazine, where we targeted to do 11 online editions. But unfortunately, we managed to only do 5 of the 11. However, the delays were more on procurement processes whereby we had to be prudent, and we then ended up appointing later. The next one is on the video services that we provided as a department. We had targeted to provide 550 video services, and we fell short in terms of achievement by providing 432 video services. The main reason was the fact that there were periods whereby there were total lockdown regulations and there was no travel at all allowed. And therefore, because some of the video services that we provide are more of capturing both the president and the deputy president's engagements. And it's one of the reasons why we couldn't then meet the targeted number. Then the next one is on entity oversight, whereby we had to produce about 8 performance review and compliance monitoring reports of the entities that had reported to GCIS to the minister. During the period under review, we developed all 8 performance reports. However, the 2 which were for Q4 were only submitted after the 31st of March, and therefore could not be counted for in terms of performance because they were only submitted after the reporting period. Then the last one is the annual transformation report published, which was supposed to have been developed or facilitated and published by the MEC sector council members, which because they were only appointed on the 25th of March, we then could not achieve the particular target. Then in terms of our program 3, which is more on intergovernmental coordination and stakeholder management, that's where we really managed to have solid relationships with the mainstream media. And we were also able to ensure that we maximize on their platforms to communicate more so about the COVID-19, but also in terms of the ending of the gender-based violence, the economic recovery and reconstruction program, and the Operation Vulindlela. And we saw particularly on the COVID-19 communication, whereby also the mainstream media was relying on us as GCIS in terms of the content. And our partnership also went further, whereby we had engagements with SANEF and the National Press Club, whereby they were assisting us in terms of ensuring that there is really awareness in terms of safety concerning COVID-19, but also the awareness around the vaccination. And we were able then to achieve that because they also put their resources in place, and it was a solid partnership that we achieved. We also saw ourselves hosting a very unique SONA for 2022, which was not in the parliament, but was in the Cape Town City Hall, following the fires that affected the parliament. We were also able to daily, as GCIS, lead and chair the various meetings, particularly around the COVID-19. One of the meetings that we were able to facilitate and ensure that they took place daily was that of the National Communications Command Council on COVID-19. But also there was an interministerial committee on vaccination that was led by the Deputy President. We also ensured that as the department, we were able to run campaigns around the COVID-19, particularly on key issues, the development and implementation of the vaccination demand creation strategy, and the communication around the VOMA vaccination campaigns, as well as the Irregularity campaign. I'm not gonna go more in terms of the performance, in terms of the targets in the particular program, because all of them have been achieved. However, in going to governance matters, as a department in the period under review, we had a total budget of 757 million. We managed to spend 755 million of our budget, which resulted to 99.7% expenditure. We then had that just above 2 million money that we did not spend, which was more based on the fact that we had ordered some capital assets, particularly computers, which could not be delivered due to the fact that they are exported, and therefore the international countries, they suffered a situation whereby during their lockdown periods, they couldn't produce or they couldn't meet the demand of the certain chip that is used for computers and also the cars. And therefore there were delays in terms of the delivery of the computers that we had ordered, which was just about 50% of the money that we couldn't spend. And therefore we then couldn't pay because the services were not rendered or the goods were not delivered. Part of the monies that were not spent as well, the other balance of the million was the fact that because of the lockdown, there was less traveling, and therefore monies that were budgeted for that traveling and etc. could not be spent, same as the officials that left the department during the month of February. Then in terms of the monies that we spent on COVID-19, just to ensure that our employees were protected, were about 1.1 million of the monies that we have spent. I think in closing, Chairperson, I would like to report that as a department, we achieved 89% of non-financial performance. However, the things that I would like to flag in terms of the financial performance, I think I've said much in terms of the issues that led to the challenges of our findings, and particularly the material finding, is the fact that we would want to ensure that we enhance our communication as a department and reach all 60 million people of the country. However, we are constrained with the fact that our digital platforms, we cannot capitalize or maximize or leverage on them due to the fact that our IT infrastructure has reached its age. And therefore, it affects a number of things that we would want to do as a department. The second issue also is around the funding, generally for compensation of employees, but more so for communication itself. Just last year only, as a department, we saw ourselves losing about 19.8 million in terms of the compensation of employees, which the 17.8 is what we said was cut by National Treasury, and above 2 million was for SMS increments. The second part is the fact that for us to be able to communicate effectively, yes, we need financial resources, but We also take into account the fact that we have a diverse a population in the country and extreme inequalities. And based on that, there are people that still need us to communicate with them face to face, while some we can get into digital platforms and communicate effectively with them. But also to add to that is we need to have different messages for different segmentations of our country, because our needs are totally different and they are extreme from each segment. And therefore, from this above 700 million that we have as a department, 31% of that, which is just above 200 million, goes to Brand SA, and 5% goes to MDDA, and combined 36 million of our 755 million or so goes to our entities. And we just get to be left with really crumbs to be able to make strides and make an impact in terms of communication. And therefore, that really limits us to be able to communicate effectively and make an impact. However, we have submitted the request for funding to National Treasury. Even though we have not received a response, but we are sort of hoping that they will be able to understand our situation and take the fact that communication is a very strategic function. And if you are a country that doesn't communicate, and therefore you'll have a number of challenges that generally wouldn't be there if you were a country that is communicating. Thank you very much, Chairperson. Thanks.
Thank you. Today.
Good afternoon, Chairperson. Good afternoon, honorable members, and good afternoon to the Deputy Minister, Swaya. I'm not going to take long. I'm accompanied by the Acting CEO, Mr. Mzukashe, and the Acting CFO. But I just thought, let me just, from the start, just answer Honorable Barnett on the issues that she had raised. I think that she had referred to MDDA with an eye to another entity. We certainly don't have an under expenditure of 20 million, nor do we have a under collection of 24 million, let alone an irregular expenditure of 49 million. With that said, Chairperson, let me deal with the first two slides, which is slide number 11 and number 10 and 11. Those two slides complement each other. It is around the organizational performance. You will realize that for 2019-20, we had an 84% achievement, which contributed to the clean audit. In 2020-2021, we had an 89 achievement in terms of the performance, and that contributed to a clean audit. For 2021-2022, we have a 95% a performance with an unqualified audit with a compliance finding. I just need to contextualize this unqualified audit. It is really out of the fact that our team had gone to the Auditor-General and said, please help us understand how we treat the EDF money, which is the money that comes from the Competition Commission, which we have been allocated as a implementing agency. It is not monies that ordinarily are MDDA monies. And Auditor-General then differed with us on the treatment of that. So it's a technical treatment of that money. The Auditor-General believes we should have used the money as it came in. We believe we should have used the money once we have earned it. But they then said, look, go get a legal opinion. We got a legal opinion which confirmed our view. Prior to getting into this meeting, I had a conversation with the senior manager responsible for our audit, who confirmed that whilst this audit is finalized, going forward, the technical committee in the Auditor-General will take that matter, that legal opinion into account. And for 2022-23, we may be back to where we were, which is a space where we'll have a clean audit. With that, Chair, let me ask the acting CEO to be brief with the next slides. We're not going to touch every slide. We'll just take an overview because we believe that honorable members have already received these slides. Acting CEO.
Thank you very much, Chair. Can I please be given the rights to project?
Committee support, Hajira and the team. Make it quick.
You can proceed.
Okay. No, thank you very much. I'm not sure if Chair, Honorable Chair, you can see my screen.
Yes.
Okay. Right. Okay, thank you very much. Let me start by greeting the Honorable Minister, Deputy Minister, MDDA Board Chairperson, Honorable Members, and yourself, Honorable Chairs, as well as my colleagues that are here in the platform. I think after having had Post Office and SABC presenting earlier on, Chair 1 is intimidated because of the billions. You feel like an ant amongst elephants. And I think we must also get those billions so that we can also showcase. So I think I won't be long. I think I'll be succinct, swift, and precise. I think the Chair has sort of given the some preamble. I'll just shoot straight to just this illustrative slide, which really shows the positive trajectory in the organization, that in terms of our achievement, we have been improving year to year. 2019, we were 84, 80, and then the following year we're 89%, and the last financial year we're 95%. Whilst we have regressed as far as the financial perspective, but we have equally improved as far as the performance is concerned, because we have shot from 89% and now we are at 95%. I think the Chair touched on the issue of the contestation as far as the audited financial statements are. I won't dwell on that. But coming to the issue of performance, we had 22 targets. 21 of those targets were achieved, and that's the resulting in the 95%. And one target that was not achieved was the most important target for us, was the target of the sustainability model, where we had one service provider that was going to develop the model on behalf of the agency, and there was delay in procurement, which obviously delayed the whole project. So, but I can assure honorable members that we are in the conclusion of that project now. Come early next year, we would have that model ready, and therefore this obviously would not be an issue again. So it's only one target that we have not achieved. And then coming to the vacancy rate, in vacancy rate, we had 11% as the entity. We had 38 employees out of the 43. This is just to demonstrate that in terms of some risk identified and what mitigation plans we have in place for fraud. We've got an active whistleblowing hotline, and also for the audit as well, we've got an improvement plan to make sure that we do not get any issues relating to the audit. And then this is just a slide that obviously reflects some of the organizations that we've supported for the year. And then in terms of opening balance, this is a balance in terms of what we had in projects. We had 91 million, and then the approval of the projects was 69,382,000. We have made payments of 61 million. And we have write-backs in this context, meaning that the money where we have given to organizations, but funds were not utilized, we got our money back. And then at the end, we had a closing balance of 95,996 million. And this slide then also demonstrates the organizations that we've supported. You'll see that it's both community print and community radio station cutting across the country. This is the amounts on the right. that we have supported this organization. And then this then gives a slide that shows, and in terms of where we access our funding, it will show that, for example, 58% of our funding comes through USAF levies. Government grant is 38%. The interest on investment is 4%. And what we want to aggressively embark on is a campaign of making sure that we also get money from foreign donors, so that in the next year we don't have zero but have some percentage. So we have started, we've got a resource mobilization strategy to start interacting with international donors and local donors to make sure at least that we get some external funding to assist our budget. And then in terms of then the budget, the total budget in figures now from GCIS is 36,175,000. Broadcast equals about 64 million. So our total budget for a year is about 108.16. And then just to take you through then the actual the audited financial statements, our revenue was 104,690,000. We have expended 118,827,000. So it will reflect here as a deficit. However, we have claimed the entire National Treasury has given us the entire rollover. We have rolled over the 14 million, which has come back to our organization, and therefore we are breaking even. I would think, and then in terms of the budget split, this is just to demonstrate the budget split in terms of what we had budgeted and what we have allocated. For community media, we are supposed to have budgeted 60%. We have allocated 54%. Small commercial, we have it was supposed to be 25%. We had allocated 7%. Research project was supposed to be 5% and allocated 9%, as well as administrative cost. We have we're supposed to budget 25% and we allocated 28%. Operational cost were 11%. And that this then will just be the general challenges, sectoral challenges, from high signal distribution cost to high printing and distribution cost to maintenance cost. We know very well that there are challenges in this institution, which is poor governance and compliance. So hence we've got programs of intervention in terms of assisting them in dealing with those issues. The issues of skills in the sector are still quite low. The issue of content that has been discussed is also an issue that is a general sectoral challenge. And then lastly, this then becomes our roadmap in terms of what we want to achieve going forward. MDDA is turning 20 next year. We want to have to review what is it that we've been doing for the past 20 years. How do we improve? We want to look at the issue of sustainability model. How do we ensure that we've got a reliable model that will ensure that these institutions are sustainable? They do not come and knock to MDDA offices year in, year out. We are looking at the issue of the MDDA bill. It's been a bill that has been in place for a very long time. We're trying to make sure that we refine that, as well as make sure that we also expand the community television footprint. Currently, I think we have about 5 community television. We want to expand that at least to make sure that there's a representation national. In those few, I think I want to thank you, Chair.
DM, Deputy Minister, if you want to still come in, or I should get straight to members?
You can get straight to the point, Chair. Thank you.
Thank you, Deputy Minister, GCIS team, and the board and executives of MDDA. We will now allow members who would want to further engage with the presentation from GCIS and the MDDA. Honorable Bolani, you are noted. May I just check if there's any other member? I know Honorable Kolabanat's question has already been cleared by the chair of the board. Honorable Bolani, in the meantime, can then proceed. You are recognized.
Thank you so much, Chairperson. Chairperson, thank you to the GCIS and to the MDDA for their presentations. I think for me, maybe let me start with MDDA while it is fresh on my mind. Chairperson, as I listened to the presentation, one thought that really crossed my mind was that as MDDA gears itself to celebrate 20 years next year, they should be deliberate about making sure that they do not become absolute, because the reality of the matter is I'm a big fan of community radio station. That's literally where my career started, and community newspapers as well. But times evolve, and I want to just oppose this with the post office, that the entity must then be able to move with the times so that it is responsive to the market, so that it becomes relevant to the market. Because I think community communications is a very important thing. But I think providing the latest technologies, making sure that they are really responsive and and Chairperson, on the MDDA, this morning we got a report from Sentech, and I say this, you can rule me out of order, it could be an operational issue, where Sentech was saying community broadcasters owe them money, and I'm guessing that some of the money that they get from Sentech would be ring-fenced for those sort of things. How far does MDDA and Sentech engage in making sure that the one does not owe the other, that the money is sent to the community broadcasters but does not filter through to the other? So and this is just me speaking from an ignorance point of view, so I would love to be educated on that. I am really worried about the overhead costs of the MDDA. If I'm correct, there is a 33 million bill for 42 employees. I think for me, it is rather high if you are going to look at least 4 million in the office of the CEO. And just to, as a passing remark, Chairperson, I think we congratulate the MDDA for being able to produce a report of this caliber, even with what as outsiders we see as an instability. So the ability to produce this report is really welcomed. Chairperson, the GCIS, the presenter spoke about having no budget but approving an increase for officials. Was that not unavoidable? And I'm not too sure if I understand that concept. Can I please be clarified? And indeed, we do congratulate the GCIS on an 89% achievement. I think the GCIS played a very key role during especially at the beginning of the COVID. The GCIS, as the presenter rightfully says, was literally a feed to the mainstream media. You could see that the mainstream media was not ready to provide accurate information, accurate graphics, but the graphics that came from the GCIS were as soon as the president made an announcement, for example, the graphics were already there, which really helped the media and communicate the message. So in that regard, I think I really do congratulate the GCIS. I think the irony for me, Chairperson, is the AG's response to say that the communications, the heart of the country's communication is not good at record keeping. I laughed a bit at that, to say quite an irony. I mean, they're the custodians of government communications. So with checking just on the side, Chairperson. And I think lastly, Chairperson, on a serious note, is just to say maybe to tighten the belt, GCIS, so that you do not have comments from the AG who says that there is poor adherence to supply chain management processes. But all in all, we welcome the presentations, Chair. Thank you.
Thank you, Honorable Bolane. Am I leaving any member? Honorable Kubeka, I see your mic is open, but I can't see.
Can I also come in if the Honorable Kubeka forgot one point?
Okay, you can come in, Honorable Bolane, then Honorable Kubeka would follow.
Oh, Chairperson, while we have the GCIS, can I please make a follow-up on the studios that they have in Parliament. What is the status of that? And I know we have spoken about technology being absolute, and I asked questions to Parliament once, and I was told that the technology in that studio is absolute. Are they able to provide any latest information? It might not be readily available, but whatever is available, just for interest's sake, I would appreciate it. Thank you, Chair.
Thank you, Honorable Bolan. Honorable Kubega, I recognize.
Thank you, Chair. Thank you very much. Let me also greet the side of the GCIS, because now the DM was struggling to come in. And every time I would say it's us who are communication, who will keep on going, struggling DM when coming to the side of the network. So we need to do something on that side. But let me first appreciate to say on both sides, on MDDA and GCIS, they know where they are supposed to correct, because on their targets, it's just few targets that they never managed to achieve. And it seems as if also the action plans also is there. They are ready to correct, because as we wanted to shine as usually, as we were saying, we know at all times, it was very easy on the side of the GCIS to sustain the issue of clean audit, but with those reasons that they are tabling, can they please rectify in order that they must just go back there? They were saying it's difficult to go there when you are working for clean audit, but it's not so much difficult, just like when you are supposed to sustain it. So I'm just asking them, let them just correct those minor things that they are raising. And indeed, DM, the side of the budget you are raising, and also on our side, we are continue trying to sensitize to say, I know, so indeed, we have yet again, I think, Chair, we need to take note in order to see how best can we assist. That is why I was asking with the issue of the brand SA, because which means also it's benefiting on the side of the budget. But now when coming to the side now of the GCIS, you will be left by a smaller amount in order to continue with what you are supposed, and we are expecting a lot because it's communication. So we appreciate very much. Take note that next year we want our clean audit, not unqualified with no findings. We wanted that clean audit. You must just go back there. But I would appreciate, we will keep on looking at GCIS and MDDA. And MDDA, as the chair has tried to explain, because I thought that maybe on the side of AG side, when he was tabling also, maybe that thing will be changing, but we can hear now the feedback that you have engaged with your CEO. We will keep on waiting, we will keep on checking in order that let it be corrected. We are expecting that clean audit because we are proud with GCIS and MDDA. Thanks, Chair.
I take it that these are the comments, and if you would want to clarify any matter at the GCIS team and the MDDA, but will be guided by you, DM, on how you want to conclude on this point before one gets in to summarize then on what we think should probably be a recommendation. Thank you.
No, thank you, Chair, and thank you to the colleagues for the presentations and the comments and interaction from committee members. Maybe let me give the two colleagues. I did not necessarily pick up a question, but more of comments. I'm going to ask that the acting CEO maybe speak to the question in relation to payment of our Sentech fee in towards assisting of community radio stations so that one does not owe the other. You can try and break it a little bit to be more technical so that our colleagues can understand that in some instances, part of our funding also includes that Sentech fee, but of course it's not enough. We've got other platforms of engagement to look into how can Sentech bring about cheaper fees and so on. Of course, they will tell you that they're not funded by government and their sustainability and so on. Just on a lighter note, yes, you are reminding me of an African proverb. It's in my native language, Xitsonga. I might not say it verbatim, but it's true. We are happy, I'm speaking on behalf of MDDA, that at least you can see that there is some work that is done besides the wrong, and I keep saying the wrong perception that it's as if the institution is not working. So we're embracing the congratulatory remark from yourself, Honorable, when you were saying you're impressed about the work that we are doing. And I can assure you that given a longer time for us to come and present, we can tell you the many beautiful things that the MDDA is doing amidst the little sideshow which is there, which might want to destroy all the good that is done. CEO, acting CEO, maybe if you can speak on that one of Sentech fees. The other ones truly there for comment. I also appreciate Ms. Kubeka when you're saying you will assist us, especially at the level of myself and the minister, in relation to advocating for more money for the institution so that it can be able to work. Thank you, Mzo.
Okay, thank you very much, dear. Just to answer a question, perhaps let me start by, there's one that was raised in terms of relevance, that indeed relevance is utmost key, utmost important. Hence, I had said in the presentation that in the 20-year anniversary, we want to take stock, look back, and see what is it that we've done, assess the market, see what is the latest technology, and how then do we move forward. I think so. This 20 years is just something for us just to remind us that this is how far we've gone, and also forward looking and see how we can do things better. Now, coming to the issue of Sentech, Sentech, we have actually, I would say we've got a good relationship with Sentech. We have our own engagement. In the latest provincial table rounds, we were attended one or two of them together with Sentech, and together as the two institutions, we are trying to find each other. Now, in terms of how we then, because there is this misunderstanding, both from communities as well as people that obviously outside the sector. So when we fund organization, community radio station, we provide for them the transmission fees, which is the fees that they pay to Sentech. As the DM had said, sometimes it's not enough. So they would have a Sentech debt of about 1.2 million, and our funding will approve, and perhaps will only give them 800,000. So meaning that there will still be a gap. And that gap then becomes a problem, because then that becomes a liability for Sentech. And when Sentech is not paid that difference, then this issue is raised as if, obviously we have not honored our side of the deal. And also equally, there are also other community radio stations that are not necessarily grantees of MDDA, and they are also not paying towards Sentech. And again, that becomes a liability to Sentech, and that is obviously perceived as if it's an MDDA liability. But in terms of our own structure, when we do fund this organization, we don't even give them the transmission fee. So if that 1.2 million, I mean the 800,000 that I made as an example, would not even go to the organizations that the grantees, it will go directly to Sentech. We've got an MOU with them to make sure that all the money for transmission fee that we have approved for grantees goes directly to them. And then obviously we'll try and deal with the liability that is in their books. But I think the challenge that we find ourselves, honorable members, is that as DM had said, Sentech will always tell you that this is the lowest discount that they could go to. And we have a situation where the actual community broadcasters cannot afford that, because some will tell you that it's about 20 or 25,000, and they are still struggling now to even pay their presenters stipends as just a normal living wage. So we still have that challenge, that impasse. And hence we are coming with other measures like a sustainability model to ensure that these organizations first and foremost become sustainable, so that they can have enough money for them to be able to pay their transmission fees on their own without our own intervention. So this is still going to be a challenge. It's been a challenge for the past 3 years. It comes up all the time that, you know, community broadcasts are still owing Sentech and they're about to be switched off. And we get constantly calls to ask us to make some intervention. And in most instances, we are unable to do so because we don't have enough money. But where we are able to, and the ones that we are granting, we always try and make sure that at least we meet Sentech halfway. Thank you very much, DM and Honorable Chairperson.
Maybe I missed a question for GCI. Oh, okay, no, it's fine, Chair. Okay.
No, I thought let me just round up on the comments that Honorable Botlane had raised around the issue of ensuring that we are not obsolete. There is an MDDA bill that is currently being processed that is intended precisely to ensure that the inception of MDDA 20 years ago catered for a specific environment, and now we need to cater for a different environment. So that bill is intended to make sure that we remain relevant. Number one, Honorable Botlane. Number two, you made comment around the overheads that they do look a little bit out of kilter with the size of the organization. I think it should be sufficient for me to say we note the comment, but make a rider to say that sometimes good skills are quite expensive, but we will ensure going forward that we do attract the necessary skills without necessarily breaking the bank. That's the second aspect. The third aspect is in relation to the funding that we get. In addition to the USAFs that we get and the money that we get from government, we do our best to ensure that the various broadcasters do give more than what is expected of them because they believe in the mandate of MDDA and the work that is being done there. Honorable Kubeka, the issue of clean audits, as I said, a little mishap that happened because we're a little bit over exuberant in approaching the Auditor-General who would have been in a clean audit space. But I can promise you, and we can hold me to this, that when we come back next year around this particular matter, we should have our clean audit back in place, and you can continue to be proud about MDDA. Thanks so much, Chair.
DM, would you want to come in? Close? Or should I?
No, I don't have anything to say. You're saying the DM, ne? Am I correct?
Yes. Or I should come in.
Maybe let's keep the CIS. Okay.
Thanks, Chair. Thanks, DM. I think from Honorable Botlane, we have two questions. The first one is around the salary increments whilst there is no budget. I think I needed to report that when we were during the budget process, National Treasury guided us that we should not effect any salary increments for all staff members. However, at the bargaining process, the increments for the lower levels of staff were approved, and National Treasury gave us the money to implement those increments. But when the increments for the SMS members were approved, National Treasury didn't give us the refunds for such, which is why we were where we were. But we didn't spend money that we didn't have. So we had to make some adjustments within our own budget to accommodate that, because it was an instruction that we should implement. However, we have discussed with National Treasury, gave them the understanding in terms of how does this affect us as GCIS, and how GCIS is different from the other government departments, because our budget is very, very small compared to the other government departments. And we then requested from National Treasury that we be reallocated such increments going forward. We still await the allocation letter that might come around November, December. I think we will see whether they've really accepted our motivation and therefore motivated accordingly. Then the second issue is around the studios in Cape Town, both the studios and the Imbizo Media Center. Yes, Honorable Member, you are right. They are absolute. They are not in use because they require refurbishment, which is the physical refurbishment, but they also require technological infrastructure refresh. And the amount that is required for technological infrastructure refresh, we have also negotiated and motivated to National Treasury in request for that. The estimated amount at the time was close to 14 million. They didn't say no, but they said they will take the process through the budgetary process. So we hope that we'll be fortunate and they will allocate us those funds, because we had to extraordinarily motivate and advise them the implications of having those studios and the Imbizo Media Center non-operational. What does it mean to the reputation of the country, the reputation of government, but in general, the investment that has already been put in place. The refurbishment itself, which is the physical refurbishment, is still required as well, but within our own budgets, we were able to allocate small amounts of money and to refurbish it over the next 3 financial years. However, if National Treasury allocates us budget, we'll be able to reduce the 3 financial years to 1 financial year and be able to implement accordingly. Then to Honorable Kubeka, we will strive as GCIS to really improve all our performance holistically, both financial and non-financial. It's not something that we take light as well to regress, and it doesn't sit well with us as well. So it's something that we are committing that we will do all that we can as management and employees to ensure that we restore the dignity of GCIS. Thank you.
Thank you, GCIS and MDDA. Yes, as the Deputy Minister said, she doesn't have further issues to raise. I think it would be fair to at least close on this presentation by doing the same thing we said to DCDT, that the first point is really to observe points that have been made by AGSA. So with MDDA and GCIS, I think it's 1 page, probably half of the page, consolidated report, which means that there are a few issues that you'll have to deal with to get back to where you were. And the reasons are understood, but the Auditor-General makes important observations and feedback that in most of the matters, including financial, it's not really that it's material issues. So these are matters you can deal with, the assurance levels improving, moving from yellow to green again. But I think what is the key really is to address a few things, and if these would also border on the committee and the department and the ministry. Now this talks to legislative. I hear the chair of the board in trying to elaborate on becoming relevant that there's a revision of the legislative framework. I think it's important to link that with what is also taking place on the side of the DCDT with regard to pieces of legislation that they are looking at, which will come before the committee. Now, I'm raising this because if you talk Sentech, it's also undergoing a measure. So you'd need to look at that issue of transmission costs from that point. But at the same time, in the most recent past, we had about 25 radio stations that were off air, not because of the MDDA, but there's always a reasonable expectation that the MDDA will come into the picture and be able to clarify. But there were indeed, as DM would have explained at one point, ICASA related, which therefore talks to the issue of the regulator, that as you look at such amendments, look at whether the other side may not have restrictions on that side that makes it difficult for you to get to the direction you want to get to. So I think it's important to look at all those revisions. But the other thing, it's a reality that as you move forward, there may be problems in terms of funding every community radio station and so on, which would mean categorization, that you help at this level, but others may need to branch in the true sense to self-sustainability whilst you meet the basic minimum requirements of a radio station, as an example, in each district, which links well with the district development model. So maybe those are things to consider. I know it's very late, Chair of the Board of the MDDA, Dr. Matthew, but there's energy to listen to you. You've made a commitment, and we'll keep you to that, that you'll have a clean audit, but you would not compromise delivery because you are now on an upward side in terms of performance each year. And from 95, we want to get closer to 100%, whilst we keep the clean audit, because sometimes it gets to be a disjuncture. You find clean audit, but there's less of delivery that impacts positively on the ground. And where there's acceleration of delivery, then that's where irregular and other things get to be picked up. And I think we can change that narrative and able to indicate to society that it's possible to have 100% delivery, but still have clean audits because everyone else put it for the sake of the people, nothing else. So I'm just saying we'll keep yourselves on that. With GCIS, I think, honorable members, it's time we really have to face this. They've done well, yes, for yes, but what is raised in that slide about, on conclusions, remind ourselves that the committee has been presented with this a number of times, that we will get to that stage of collapse if we don't act. And if we regard this as government communications, I think besides the formal processes of them applying to Treasury and so on, but as public representatives, we are also drawn from political parties that have political party caucuses, and parliamentarians make these appropriations, and they have an opportunity to even make recommendations during appropriations. That we take this also to our own caucuses, because we may not be seeing the importance of government communications in the way others would see it. And I think it will take us to make them understand that the gap that still exists in society in terms of information It's not something that you do overnight, but people do want to also rely on factual information that they can rely on at all times, and GCIS, unfortunately, closes that gap as many people do not have access to private media. I think it's important that we leave the meeting with that understanding that yes, on the formal processes would have to do work, but because we come from different political parties, it would have been good that when we present these reports before the House, there's a follow through, even in those committees that finally make recommendations on how resources get to be moved around, including how they engage with different ministers. I think it will be sad that everything gets closed, which has been working very well, like the studios referred to, only because our plant maintenance is not taking place because of resources that are not made available. So I'm sure Deputy Minister, you will then understand why we waited when there was no political head present, is that we would want political responsibility on these matters that we are raising, so that they are not just a matter between departments, but I think even at the level of the cabinet, the noise must be enough to be heard. In fact, there's a good start that we can look at. Just implementing a resolution that communications get centralized, start looking at budgets that are in the other departments, coordinated by national treasury. It gets to be easier than you knocking in the doors of different departments and saying, please release. But national treasury can better coordinate when cabinet is in unison on the importance of government communications, especially at a time when fake news, it's everything that gets peddled. You also need to have something that you can cross-reference with, but also an agile government communication that's able to rebut the fake news, as it was the case during the COVID-19 lockdown period. So I want us to at least leave the meeting with that understanding. So we'll be looking at those action plans. But like we said to the others, we are almost towards the end of the financial year. Surely you should be seeing if your systems are back in order, and that before the AG confirms, you yourselves should be confident that you've turned that corner and you are back to where you are supposed to be. So that will be the summary, honorable members, and GCIS team as led by the Deputy Minister, so that we know where we are as it relates to the presentation. Okay, so that's where we would end it. Hajira, if I may just check what could be the next item, which is more, I think, the committee.
Chairperson, the last item is the adoption of the committee program. Thank you, Chair.
Okay. As I said, we really thank you. In case DM, you stopped in one village somewhere to get connectivity, we would not keep you as you run to the next office to lobby for more resources to revive the studios and so at GCIS, and more money to MDDA. So we'll release to go and do work as we look at the program as the committee. We really
thank you. Thank you. Bye, Chair, committee members. Bye.
Committee members, you would have received the program. I think what I wanted to raise would be that maybe we'll get, yes, a mover and seconder, but we cannot ignore that we've just had an important discussion, which would mean that there are those that may still need to come back and we group them in a particular way, because we want to address the matters that arise from the discussions we've had, and that we would want to have more time with them. So that proposal may still need to be, as I said earlier, circulated to yourselves and check if you are fine with that. And in that proposal, it will also be about whether we are getting feedback as it relates to the application we had agreed that we still need to send through where we do physical oversight. So I'm sure by that time you'll also be getting to the studios that are getting obsolete under our watch. So I want to make that proposal that because we've already started in line with the approved draft program, that even though we would approve it, but still make the amendments to cover the matters that we discussed today, where we isolate a few that must still come back and speak to us. Will that be a proper guide, honorable members?
Chair, I supported the program with those amendments. If it can be, as you are saying, we will be leading by the urgent matters that maybe will be need to be discussed. So I'll support the program. Before I can step down, and Chair, I was crying last week because I was ready for the oversight. So Chair also will maybe just come there. Thank you, Chair. On a lighter note.
Okay. No, thank you, Honorable Kubeka. I did see on the chat that Honorable Kolabanat was also indicating the same, that she's in agreement and that we circulate probably quicker so that we are able to get back. On the second point, I'll just deal with it quickly. Then I take it that there's no dissenting view or objection in us adopting the program with that understanding, that will make that circulation and amend accordingly so that we inform the entities that we need to still get back on. So agreed? No objection.
Agreed, Chair.
All right. Now, with regards to the subcommittee work, just to give again an update to honorable members, that's the appointment process for the SABC board. One is that, as you are aware, there's been challenges with getting information from the vetting process. The feedback I had, I think that as the latest will be this morning, unless there would have been something that changed this afternoon. Out of 34 that we submitted, there was a receival of about 7 that have been completed. Others are still pending, but there's a push to try and follow up daily so as to get that info out. As soon as we get that, we then are able to proceed. In the meantime, we've consulted with legal. We have looked at the Broadcasting Act. We've also looked at the Companies Act. That in the period that remains, we would not be able to make the appointment. We have then since advised the House Chair to also advise the appointing authority, the shareholder, on what we are experiencing, so that those that need to push for things to happen, including the leader of government business, as the matters are now with another department, to try and push that we get the info and that we are able to proceed with the appointments. The legal advice we have is such that in any way, even if there was to be something that happens, you would not be able to address it in the next few days. And therefore, what would be expected will be two options. One being that of the board making delegations, but the other, it's really that the non-executive, the executive ones who are remaining, in any way the operations are run on a day-to-day basis by the executive. The matters that may be delayed for the few days that we are dealing with the matters would be those that the board needs to decide on, like audit committees and other committees of the board. But the day-to-day running of the SABC may not be compromised. But we also did not want to compromise honorable members ourselves by starting to make appointments, and then history repeats itself later on, where then there's a question about a member of the board or a chair of a board or deputy chair of a board, after you've appointed, they've been appointed on our recommendation, simply because we didn't want to be patient with that. And I think it goes at the core of trying to get the institutions right, so that fit for purpose people are there, but we can also assure society that it's people that have also been cared, especially because there's also been an introduction this time in our advert of a mid-point, which is mid-term vetting, again, as part of responding to the state capture report on the role Parliament needs to play also in ensuring that people in the entities do what they are expected to do. So I thought it's important to do that brief right at the end. Of course, in my earlier summary, I had indicated that in the question and answer situation of the DCDT, the questions that were relating to the turnaround were raised, and there would have been responses. And if there are further questions to take up when they come to appear again on the group of people or entities with regard to BDM as suggested, if those questions would need to be still pursued, we'll do that. The only thing that we may have to do officially will be indeed to, as part of issuing our official statement that we issue after a committee sitting, to really acknowledge the work of the board. There may have been instances where there would have been unavoidable tensions in the nature of work, but we're never in doubt as the committee that the work of the board is seen, taking into account where the SABC was previously. So the work of stabilizing, the work of trying to deal with governance challenges that some of them still persist as historical, but also looking at the future of the SABC. And in that score, you can only come to a conclusion that there will be reasons to have a handover report to a new board, which will start probably in a far better base compared to where things were a few years ago. And this would have been the first board, from what we have been told in the recent past, that could complete its term of office without being dissolved or put an interim board. And that also goes with its honorable members, with the work of the committees to ensure that these entities get stabilized. And that should give us even more confidence that those that are unable to get out of the situation, like SAPO and so on, if we are determined and put our heads together, we should work together with them to get them out of the situation they find themselves in and be able to say one day services were returned to the people because we did our oversight work, but we also supported the institutions to deliver on the services. So that's where we are. So I thought those would be my closing remarks, honorable members. Further communication will come to you. I hope that's clear. With that having been cleared, let's officially then adjourn the meeting. We will circulate the info as agreed so that you make your infos. Thank you. Meeting adjourned.